Yeah. No, I think Q1 was a tough quarter, relatively tough quarter. I think we went through some major disruptions, including significant corrections in our raw material itself. I think two major raw material that account for 70% of our purchase went down by almost 15-20%, which meant we had to take a significant amount of inventory valuation loss of roughly 30 odd crores. And the second, the global geopolitics continued to impact sort of shipments, especially export shipments, where Iran-Israel war led to a lot of choking of vessels coming to Kandla port, which led to deferment of some of the shipments from June to July. So I think with those two major reasons, I think Q1 was roughly 19% down quarter on quarter. I think the shipment delay, of course, will get recovered during the quarter two. But now sort of we're dealing with the US dynamic that has again triggered up in the last 3 to 4 days. So overall, a bit soft Q1. I think on the strategic initiative side, we continue to make the progress. So I think the three major levers that we had given in our midterm guidance around cost optimization, operating leverage, and capex-led growth, I think all three are on track. Cost optimization continues to go as per plan. We are expecting to implement most of the initiatives by the end of this financial year. Operating leverage in terms of ramping up volumes from already announced capacities is also happening well.
Before we get to that, I have a couple of specific questions on points that you've just mentioned. So as I understand it, benzene and aniline prices changed dramatically, and you have inventories. And so therefore, those inventory issues were a bit of a concern in the first quarter. I'm just wondering, to what point will that be a drag, and where do you see that settling? Point number one. Point number two, are you on track to achieving that guidance of 1,800 crore to 2,200 crore on top line in the next 3 years, as you've stated?
Yeah, so I think on the first one, near term, I think the issue is kind of settled. We've seen kind of bottoming out of pricing for both benzene and aniline over the course of last 30, 45 odd days. So we expect the inventory valuation related issues are sort of behind us. On the second one, I think on our midterm guidance, and I was sort of talking about it, nothing has changed for us to revise that. I think we basically banking on three major areas for that bottom line growth. Cost initiatives are on track, both variable as well as fixed cost. Operating leverages, most of the capacity expansions on the existing product portfolio are already complete. Now it's a matter of ramping up the volumes and doing market development there. In near term, with the US tariffs, we have a bit of a speed bump. So we have to figure out how to diversify away from US market, which used to account for 15 to 20% of our revenue. But we will figure that out over the course of next few quarters. And the third one is a capex-led growth. That's also on track. The greenfield site in Jagadia will go through phase-wise commissioning throughout the next 3 to 4 quarters. Some assets will get commissioned in the second half of this year itself, and remaining part of the block will get commissioned in the next financial year. So I think all three buckets well on track. So we retain our medium-term guidance.
Retaining medium-term guidance, but in the interim, would you say, Suyog, that we're likely to see a couple of soft quarters while you realign? And you've pointed out that you want to reduce dependence on the United States. We all know what is happening there. So one, that do you anticipate FY26 to be a consolidation year where you are realigning things? And is pricing likely to be a little bit challenging in the near term from that perspective?
So second part of your question, pricing will remain challenging. I think we've been talking about it for a while now, that the global demand supply imbalance will take some time to recover, which will mean pricing and margin recovery will take a decent amount of time to come back to historical levels. The first part of your question in terms of US, we're still frankly watching out where it settles. I think we're not going to take any calls based on what we have seen in last 1-2 weeks time frame in an immediate sort of manner. As I said, we have 15 to 20% exposure to US. We have a variety of products that we sell to US, and different products have different implications. Some of them are exempt. Some of them we have a global competition where we have to watch out for a relative tariff disadvantage. And some of them are pure market development efforts where affordability of the customer itself becomes a bit of a question mark with 25% plus unspecified penalty kind of tariffs. So we will evaluate that over the course of next few weeks and sort of realign our market footprint accordingly.
So, Yog, I'm sorry to rush you, but we're running out of time. I just want to ask a small clarification on the margins front. Assuming that pricing pressure becomes a challenge, remains a challenge, we saw it drop quite dramatically to sub 12%. Is that likely to be the run rate in the rest of this financial year as well? I'm talking about operating margins.
Yeah, so I think the margin will remain what we saw, sort of average of last year, right? So we're talking about 12.5 to 13.5 kind of percentage is what we are tracking at this point in time. So we will try and hit similar sort of margin profile even during this financial year.
So, Yog, thanks so much for taking the time. Appreciate the time that you've spent, and I wish you all the best in what is likely to be a challenging FY26.
Thank you.
All right, let's continue to speak to managements. And in fact, you have the debutant on the stock exchanges today, Lakshmi India Finance. It listed at a discount. It is operating in a space that is facing its share of challenges. And Deepak Baid, who is the managing director of the company, is joining me now to talk about a little bit of that. Mr. Baid, thank you so much for taking the time. And first of all, congratulations on a successful IPO. I guess the street is taking into account everything that is happening in the MSME space and the challenges that you might be facing on the lending side. You want to talk about that first? How are you navigating this slightly challenging environment?
Yeah, namaste. Thank you all first, and I really thanks for investors for taking faith on us and investing in companies. So yes, MSME, we are into MSME business where we are into tier 2, tier 3 cities of the states where we are funding to deeper rural cash driven businesses and taking security as a collateral from them. So these collaterals are all appreciable collaterals like residential and commercial where they have a self-attachment with this property. So they are doing well, they are making, they are able to expand themselves, they are able to grow more, and I think so the quality of, that is why the quality is better, and we'll plan for much better quality in future.
So, Deepak, the question though is, and it's not a case with you because your return on asset remains strong at more than 3%. But certain other players in the space, in the lending space, are facing challenges on credit cost. Those credit costs have gone up. And so I think there's a little bit of caution on the part of the street to say, look, let's wait for a couple of quarters to see what the trajectory is for Lakshmi India Finance before we bet whole hog. And here I'm talking about the listing discount that we are seeing on the screen right now. So would you say that you're likely to be able to maintain credit costs at a comfortable level? ROA will remain above 3% for the foreseeable future?
Yeah, sure. Return will be, we will be maintaining the asset quality, and ROE will be better with this fundraise, and we will add more risk covering part. Our credit process, we will strengthen more credit process so that we can maintain the quality, and our rating, we are expecting our rating up also, so that will help us in further growth, and we can with that we can have a good quality of customers on board.
Okay. On the loan trajectories side, and here I'm talking about the disbursement of loans, what color can you give me on how that is panning out in the current financial year? Do you anticipate that the volume of loan or disbursement of loan will pick up heading into the festive season?
Yeah, of course. So coming months are really good for banks or NBFCs, all BFS sector, in fact, because it's a festival season, and we have seen the past also that these quarters performance are better than first quarter, and we have a plan to open more branches in same deeper rural areas, and to serve such customers, and to have on board them, and have a better AUM growth and better disbursement in future.
Kind of AUM growth that you're anticipating, you don't need to give me an exact number, but what have you witnessed in the past and what is likely in the future?
Yeah, so past we have grown with 30-35% CAGR, and same pattern or better we are expecting numbers from which we are able to grow, or recently the branches which we have opened last year. So now the results is going to come from those branches. So I believe that this numbers will be much better as compared to last year.
All right. Thanks so much, Deepak, for joining me today, and pleasure speaking with you. Look forward to the next chat as well. Lakshmi, India Finance, they're listing at a discount, not the best start to their journey on Dalal Street, but then it's a space that they're operating in. Now, let's circle back to one of the most important stories of the day. Anil Ambani is, even as we speak, appearing before the Enforcement Directorate in connection with a 17,000 crore rupee loan fraud. And the summons, of course, follows searches that were conducted last week across multiple companies and premises of companies that are promoted by him, and executives also listed or linked to the Ambani businesses have also been investigated. Remember, NDTV Profit has been at the forefront of this story. We were the first to report on the searches at Anil Ambani's premises and the Enforcement Directorate questioning of bankers in the case. We now have 3 of our reporters on the ground at various locations across the country, including the Enforcement Directorate office in New Delhi, including the residence of Anil Ambani in Mumbai, where we have had a reporter on the ground, as well as in other parts of the country as well. But what we're going to try and do for you over the course of the next 15 to 20 minutes is give you some perspective on what is happening today, why there is a questioning of Anil Ambani, and what the implications are from a legal perspective. So let's first go to Aishwarya to give you a sense of what the ED has done, what the Enforcement Directorate has done at this point, so that it gives us a little bit of context on what to expect. Aishwarya.
Right, I'm stationed here outside the headquarters of Enforcement Directorate's office in New Delhi. What we're learning and picking up right now is that Anil Ambani has left the Delhi airport, is on his way currently to the headquarters in New Delhi. The headquarters right behind us. A whole lot of police has also been stationed here for security purposes, and the ED is likely to speak to Anil Ambani as well as some top executives of this particular Anil Ambani group as well. And for context, of course, you have mentioned the case, of course, is one of the biggest corporate frauds recorded to the tune of 17,000 crore rupees. Apart from that, we will also be looking at bankers who have been summoned by the ED, both private as well as public lenders. So that's on the cards, and we'll see and keep you posted on the developments further that happen here at the Enforcement Directorate headquarters.
I will come back to you to give us some perspective on the timeline and the history of the probes. But before we do that, Anushka, I want to come to you. We've spoken over the weekend as well about the lookout circular that was issued and a few of the details on what has been done so far. So you mentioned at the time that there are several pieces of evidence that have already been collected by the Enforcement Directorate. What can you tell me about this body of evidence that they have so far collected?
That's right. The ED has, in fact, recovered, a voluminous incriminating documents. Not just that, they have also, in fact, taken a lot of computer peripherals regarding this whole money laundering case. Several of the bank, executives have also been written by the ED, to provide them the, whole report about how the money was, in fact, sanctioned to the Anil Ambani linked groups. There are three companies, in fact, who are right now under the radar, that is the Reliance House Finance Limited, Reliance Commercial Finance Limited, and Reliance Communication. ED has, in fact, right now issued a lookout circular for Anil Ambani, and one major arrest has been also, in fact, made in this case. Partha Sarthi Biswal, who's the MD of Biswal Trade Link Private Limited, was arrested. He had given a fake bank guarantee of worth rupees 68 crore to 3 companies linked to Anil Ambani. Not just that, there were several irregularities that was in fact registered at the Biswal Trade Link Limited when the ED went there to raid the Bhubaneswar and Kolkata branch of the office. They found that there were no regular updates about how the office was in fact operating. The ED had found that there were no shareholder register, there was no proper accounting that was done. The turnover of the transaction of the company far exceeded the declared turnover of the company. So that is why this whole arrest has been made. Today there is a possibility that Partha Sarthi Biswal will be in fact sitting in front of Anil Ambani while the ED will be questioning both of them regarding this whole case. Not just that, ED has in fact also written to 10 to 12 banks, asking for them and seeking a whole detail as to this whole case. Axis Bank, ICICI Bank, HDFC Bank, Punjab and Sindh Bank, Bank of India, all of these banks have been asked to submit a detailed report. Now, a whole money laundering to the tune of rupees 70,000 crore has been in fact made in this, is being alleged in this whole case. Anil Ambani is likely to appear in front of the ED. We are stationed here.
Got it, Anushka.
And we are in fact also showing you the visuals of what this current situation, at the ED office looks like. There is a
Got it, Anushka. So let me go across to Shrimi Chaudhary, who's also joining us from New Delhi. Shrimi, a couple of questions arise, and specifically, I'm sure our viewers want to know what are the kind of questions that are going to be posed to Anil Ambani. Of course, this is likely to be a questioning that takes place over the course of several hours, and is there likely to be cross-questioning also that takes place?
Yeah, so Alex, what typically happens is that, when a high profile like this and the top guy is summoned, they make the person sit for first few hours, and then the investigation lead, who is leading the entire investigation, they will send the team to that separate room where the person is seated, and then they start gradually, asking a few questions. Of course, they prepared a set of questions, the proper questionnaire based on the evidences, based on the documents, the audit finding, etc. But how they start is they start very gradually. And in this particular case, of course, the first up, the question will start with the quid pro quo allegations which Anil Ambani is facing with Yes Bank Rana Kapoor. And as we know, I've been reporting that how Yes Bank has, sanctioned loan to Reliance, and then it came back to the family office of Rana Kapoor. So that is one key allegation. The another one is that how those loans, the depositor money, has moved to several shell companies of ADAG group of companies, and the whole modus operandi with all, important documents and evidences. They are going to present that in front of Anil Ambani is what we are getting indication. And third, of course, the bank guarantee, the fake bank guarantee through this Odisha-based entity which who got arrested last week, and with all those statements which ED is recording in the sidelines with the Odisha entity, those questions and those evidences will also be presented in front of Anil Ambani is what sense we are getting at this point.
Got it. I will come back to you on a couple more questions, Shrimi, and we've got Agnidev Bhattacharya, who's outside the residence of Anil Ambani in Mumbai as well, just to give us a sense of what the response from the Ambani camp is. But before we do, we're joined by Jayanand Dehadri, who's a lawyer at the Supreme Court. Thanks so much for joining us this morning, Mr. Dehadri. I just want to get some perspective on the legal ramifications of this. At this point, of course, it is questioning of a high-profile individual in the form of Anil Ambani. How much of a bearing will this have on him personally? Because we're talking about irregularities that had to do with companies that he promotes.
Hi, morning, and thank you for having me on your show this, today. See, I think all of what ED has said so far, to be fair, is in the realm of only allegations. And this is a part of their process. They're conducting an investigation. They have every right to do so. And in the course of that investigation, they have summoned an individual whom they believe to be in some manner having knowledge of this entire issue. So I wouldn't jump the gun right now and say that Mr. Ambani, is guilty of something, or that, he's going to be indicted or charged in some manner. This is all rather preliminary. Let's also not forget that the Enforcement Directorate in our country, unfortunately, has a very, very checkered history of prosecution. Most of their cases end in either discharge or acquittal, so they don't really end up prosecuting very many people. I mean, successfully prosecuting very many people. So now, of course, I have read the news reports like all of us have. I wanted to make one very important technical legal point that merely, if a company gets a loan and passing on that, those funds that have come in as a loan to other group entities doesn't per se become an offense of any sort. So this is a complete misreading of the law. In fact, there are judgments of the Indian courts which clarify this aspect, that merely because some loans have come from a lending agency and those loans have been shared amongst other group entities doesn't by itself make it money laundering or some sort of criminal offense. So I think I would watch this very cautiously.
Yes.
I'm not convinced that this is going to have some very major impact either on Anil Ambani or his company. I would wait to watch what the developments are. And from my vantage point right now, I don't think this is a very big deal, frankly.
Okay. Mr. Dehadra, so that is one issue that you pointed out. The second issue, of course, is when arrest took place over the weekend or perhaps just before that in the bank guarantee case, where a fake bank guarantee was used. And seemingly, just on the face of it, and this is not a legal opinion, this is the opinion of somebody watching this from the sidelines, you can't not know that a fake guarantee is being used, especially when it is in the form of a State Bank of India guarantee. And so therefore, there is an element of a question that needs to be answered. Would you agree?
100%. I mean, if there is something that the agencies have found to be troubling, it's their duty, in fact, to go in and to ask all the right questions. Now, insofar as this Orissa issue is concerned with the bank guarantee, even with that, I would imagine, I'm not a judge and I'm nobody to really sit in judgment of any of these individuals. But I can tell you one thing, that the top person in any organization, it is impossible for that person to know what their sort of subordinates are doing down the chain. It's very difficult unless the agency is able to the investigators are able to bring some concrete material to say that no, Mr. Anil Ambani knew exactly what was happening. He's participated in this conspiracy. He has asked for it to happen in a particular way. Now, unless all of these aspects come into the picture, I don't think it's fair to point, for ED is of course doing its duty, but I don't think it would be right to jump to any conclusions. Fine, there are some questions being raised.
But Mr. Dehadra, having said that, and a counterpoint, please correct me if I'm wrong, if I remember correctly, in the Tata case where Cyrus Mistry was asked certain questions, ultimately this was a defense that he was making, was that at the vantage that he was at, and because he was at the helm, he didn't have absolute control of everything that was taking place down the line. And if I were to draw a journalistic parlance, ultimately the buck stops at the editor. If there is a mistake in a newspaper, the editor is hauled up by the authorities, and so therefore the buck has to stop at the person who's at the helm. Would you agree?
I compliment your memory for recalling that, the aspect, what you mentioned about Cyrus Mistry. But I will say this to you. The buck, of course, stops at the top when it comes to, say, a civil liability. But when it comes to criminal issues, there is no vicarious liability. Anil Ambani cannot be held vicariously liable for a criminal act that he has not committed or someone down the line has committed. So, which is why I'm saying that only a fair investigation, once there is a full-blown investigation, all the facts will come out. So I agree with you that this is troubling. On the face of it, prima facie, this is troubling. Okay. But unless and until there is a very detailed investigation that comes out, there's no way for us to say that Anil Ambani had personal knowledge of any of this.
Wait, Mr. Dehadra, please allow me to interrupt you, because we're just seeing live visuals on the screen of Mr. Anil Ambani making his way, I believe, into the Enforcement Directorate, if I'm not mistaken. We'll have to get clarification from the reporters on the ground, but seemingly a lot of reporters trying to get a soundbite from him at the moment. He seems to have entered the building. There we go. These are live visuals on your screen. This is, of course, the Enforcement Directorate headquarters in New Delhi. And this seemingly is going to be the start of the questioning by the Enforcement Directorate on the various issues that we have just spoken about. Of course, Mr. Dehadra was opining on what he thinks about the cases that are currently being investigated and questioned about, and we will be talking about some more of those details. He seems to have entered the building, Mr. Dehadrai. So you were making a point. Apologies for having cut you off. Would you like to complete it?
No, I to be balanced, to be perfectly balanced, I think, the ED also should be complimented in this case. Now, this is admittedly a very high-profile person. And there are some allegations that have come to the fore. And I think ED is also doing its duty. It's doing its statutory job. They're coming in and investigating, what these allegations are all about. So I think it's all right. It's very premature at this stage. Let them do their investigation. Let them find out what the facts are. I believe they're going to confront Mr. Ambani with that gentleman who's allegedly made that, the bank guarantee, who committed the bank guarantee fraud allegedly in Orissa. So when all of these things start in an investigation, in any honest investigation, there is a lot of field work that is needed. So let that field work happen. And then I think the truth will come out. But as I said earlier, merely, handing out loans from one entity to other entities, does that become an offense? Our courts have held that is not an offense, and certainly not money laundering. Yeah.
Understood. And thanks so much for that clarification.
Thank you.
Appreciate the time that you spent with us. We have to slip into a very short break. So this was our attempt at trying to bring you perspective on everything that is happening. And of course, this is a developing situation. We will bring you updates as and when we get them. For now, we'll slip into a very quick break. On the other side of the break, we'll go back to regular programming and take all of the questions that you've been sending us on WhatsApp. Do stay tuned.
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग। जब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
गोल्ड ग्लास, क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा
Welcome back. You're watching Ask Profit on NDTV Profit, and we can finally go to all the questions that you've sent us on social media and on WhatsApp. And by the way, if you're tuning in for the first time, then the way that you can get in touch with us is either on the number on the top of the screen or on the landline number that is at the bottom of the screen. You can always call us, and we'd love to hear your voices. We've got our first question on this side. Actually, let me introduce you to the guests. We haven't introduced them yet. Asta Jain of Hem Securities, as well as Swati Hodkar, AVP Technical Research at Nirmal Bang. Thank you so much, ladies, for taking the time, and apologies for keeping you waiting. I appreciate the patience that you have. So the first question that we will take is from Mr. S. Sankaranarayan, who is a retired AGM from SBI, he says. And he would like a view on Acuta's chemicals, which used to be called Ami Organics, or Indore Mines, and he's specifically looking to enter the specialty chemical space, and he wonders whether these are the two companies that he should be looking at very closely. Asta, what's the view?
Hi, good morning to all of you. See, I am not able to answer on this question because we are not covering any of these two counters. So I think it's better if Swati can answer.
Okay, fine, all right. So, okay, but then what if I were to push you to ask or to answer on specialty chemicals? If there is a company that you would invest in at this point, what would it be?
Navin Fluorine, with no doubts, because what we believe that this company is, looking very, very strong, not only from the fundamental perspective, but the kind of, the growth guidance, etc., which the company is giving. And we are finding the margin for this company is very attractive at the present point of time. So Navin Fluorine is looking very strong to us in this space, and we have our targets which are at around 5,400 to 5,500 in the short to medium term. So I would like to go with Navin Fluorine in this space.
Okay, I'm not going to Swati on this because the question was on the fundamentals. I will ask the next one to Swati though, and this is on Suzlon Energy. Abdahir from Madurai wants to know, he's bought 1,300 shares at a price of 69 rupees, which is above the current market price, and he wants to know what to do with it. Swati, on the charts, what's the view?
Yes, good morning all of you. The view is positive for a long period of time because the stock is under the formations of the symmetrical triangle pattern, and I believe that it has a strong potential to give the breakout of 68 levels. Currently 68 is acting as a strong resistance level. If it surpasses that level, Alex, then I believe that the trend will change on the high side and which will take a counter towards to 74 to 75 levels. So overall setup is really positive. Downside, it has a very good support at around 62 levels. So as long as it stays above those levels, the view will remain a positive. You can hold on your long positions for immediate target of 74 to 78 levels of the high side.
Got it. All right. So that's a comprehensive view on Suzlon. We've got a question on HDB Financial Services. We've got Aarti who got allotment during IPO and wants to know what the long-term view is. She doesn't really have a timeline and she wants to know whether she should add, hold or sell. It's pretty much at the issue price at this juncture. Asta, would you suggest that you can enter at these levels or would you wait for better price?
No, I would not like to suggest regarding any fresh entry for this counter. Why? Because what we have seen that the financial performance was not up to the mark in the quarter gone by. And if I look after the valuation in that case, the valuation seems to be definitely on the higher side. So that might be the reason that I'm not very much optimistic for the fresh entry in this counter. However, those who have, got the allotment during the IPO or those who have bought it, I think they can remain invested in this counter for the longer time horizon. But in the shorter term, we can expect some more pain in the counter. So our price target for the long term, I'm limiting myself to long term only, it's around 810 to 820. In the short term, the stock might, get some downside from here also.
Okay, so even in the long term, the return potential does not seem to be very significant, so bear that in mind. All right, Gopika from Chennai has got the next question. IFCI is the name of the counter. She's bought at levels of 69 rupees. She's looking for a fundamental view. Asa, do you have coverage? And if so, what would you do?
Yes. For IFCI, yes, we are liking this counter, and what we believe that the kind of potential this company is having, especially if I talk about their margin profile, that seems to be very, very strong. So we believe that this counter is well poised to show more upside from here, and maybe 2-3 quarters down the line, we can see some very strong financial performance on the back of the kind of management steps which the management is taking. So overall, positive on this counter. Remain invested in this counter with a price target of 65 to 70.
Got it. All right, we've got our first caller of the day. I believe it is Govind who's calling us. Govind, very good morning to you. I believe you're calling us from Hyderabad. How can we help you today?
Yes, sir. Good morning, Alex, sir. Good morning to all of you,
Good
sir.
morning. Please go ahead.
Yeah. Alex, sir, I can only one doubt, sir, regarding fundamentally strong company for tube investment. Can I buy this time, sir? I can at least 2 lakhs to 3 lakhs rupees investment this time, sir.
Okay. If I remember correctly, you asked me this question yesterday as well, right?
No, sir. No, sir.
No, you had not. Maybe it was somebody
Yes,
else.
I am not.
Okay.
Yeah.
Let me go to Asta. Since it's a long-term investment, he's looking to deploy as much as 2 lakh rupees into tube investments. He thinks that it's a fundamentally strong company. Do you agree, and would you say that he can do so?
Yes, it is a fundamentally strong company, but there was a problem, or I should say small degrowth, which we have witnessed in their quarterly numbers. In fact, if I talk about the valuations also, valuation seems to be on the higher side. So what I believe that this is a fundamentally strong counter, but due to the weak financial performance in the quarter gone by, this counter may witness some more downfall from here, and that will be the great levels to make a fresh entry into this counter. So rather than making fresh entry at this point of a time, let this counter settle till the levels of 28.50 or 28.60 and then make a fresh entry rather than going at this point of time.
Okay. Pakshal from Ballari is asking the next question, and PNB is the name of the counter that we're talking about. 126.8 is the buy price. The question that he's got is, what's wrong with the whole PSE and PSU banks? Why are PSU banks not moving? Can he consider a buy on dip strategy in Punjab National Bank for a period of 18 months? Of course, there's a lot that is happening in the space, not least of which is the monetary policy that has switched over the course of the last few months. And a lot of these banks are seeing a little bit of a contraction in their net interest margins. Of course, that could reverse as well once the cut in the cash reserve ratio comes into play towards the end of this year. But those are all in the fundamentals. I guess the question is on the shorter term, and so therefore, Swati, is a buy on dip strategy on PNB appropriate? If you bought at levels of 126.8, what should be the strategy?
See, at the current level, definitely he can hold on the long positions, but not to average it out in the CMP. I believe we might witness some sort of a more downfall towards to 98 to 97 levels. Up to that level, we can witness some selling pressure. So any dips towards to 98 to 97 rupees, you can add on the long positions. Upside, I'm looking for a target of 114 to 115. Those are the short-term targets I'm looking for the PNB. So wait for some more time, and buy on dip strategy should be implied at the
All right, our next caller is on a subsidiary of PNB, I believe. Venkat is calling us from Bengaluru. Venkat, very good morning to you. How can we help you today?
Yes, good evening, good morning. Yeah, I want to invest on PNB Housing. So is it the right time to enter the stock?
Why do you want to invest in PNB Housing? What is the...
Yeah, recently it has corrected, no?
Yeah. But you know why it's been correcting, right? You know why it's been falling?
Yeah, the CEO was resigned recently.
Yes. Okay.
So the same day it was fallen 18%.
Yeah.
So I want to know the basics, fundamentals for long term 2 years. Is it good or should I wait some more?
Okay, I understood. Asa, on the fundamentals, is this a key risk, the lack of a chief executive officer and the void that it brings, the fact that the chief CEO has left in an unexpected manner? Would you buy these levels and look for a substantial upside?
So what I believe that if I talk purely about the fundamentals remain intact because in fact the management has hosted a con call also, and in that they have assured that their margins and their asset quality will remain, on the pure set of lines. There will be no deviations in that. So I think pure on the fundamental purpose, this is looking a good stock. But right now, the kind of news flow is making it, detrimental, and that is why we are recommending not to buy at the current level. Although what we have seen that the stock has seen a rally, since last few years, we are seeing the stock has rise like anything. So let's wait for some more time, let it cool down more, let the news get settled, and then make a fresh entry. So right now, I'm not recommending a fresh entry into this counter, because on the valuation perspective also, it becomes somewhat on the higher side. Let the stock cool till the level of 720, 730. These are my ideal levels where I recommend entry to this counter. Right now, just wait and watch and don't make a fresh entry.
Got it. All right. By the way, we're toying with an idea here on this particular program, and anybody who's tuning in, and if you've messaged us, let us know what you think. We often have management speak to us because it is earnings season, of course, and we can't avoid it. But we would love to hear questions from you as well. So if you've got specific questions, and one of you, Sunny, in fact, has said that he's listened to the conversation that we had with Aarti Industries earlier on in the show, and he's invested and he hasn't been able to exit because he'd been holding from higher levels. So if you've got specific questions, you've been looking at the company, we would love to ask your questions as well. So if you think that's something you'd like, let us know in the comment section or on that number that you see on the screen. Snigdha is calling us from Hyderabad. Snigdha, very good morning to you. How can we help you today?
Hi, good morning. So my query is regarding Torrent Power. I hold one-time shares at 1,306 rupees.
Okay.
So I just want to, as they are posting results today, I just want to know if I would get a profit for next 1 month.
Okay, shorter term
and
perspective.
Also, can you please give, can you also, I need a suggestion from experts regarding some short term.
Apart from Torrent, you want more ideas?
Yes.
How do you define that short term, Snigdha? Is it 1 year? 1 month?
3 months.
3 months, all right. So, Swati, Torrent Power border levels of 1,306, and while you're at it, any ideas that you would suggest for a month? I know it, or for rather 3 months. I know it's a tough market right now because things can go any which way.
Yes, Alex. As of now, the counter looks positive. We have already seen a sharp correction from almost 1,500 to now 1,270 levels. And now the counter has entered into the oversold zone. We are witnessing a positive crossover from the momentum indicators such as the RSI, which shows that the downside is limited and we are likely to witness some sort of a bounce back rally, which might take a counter towards minimum target of 1,350 will be the initial targets we are looking for. And beyond that level, it will continue its rally towards to 1,370 to 1,380 levels. So my view is definitely positive. You can hold on your long position since the counter is sitting at your CMP as well. Hold for an immediate target will be 1,350. Beyond that level, 1,370 levels can be.
Got it. Okay. The next question is on Biocon, and Raj is asking a question. He says that the results are due on the 7th of August. I'm sure that this is already known by Asta. Asta, the question is, would you wait for those results to deploy, and is this the right time to invest in Biocon?
So yes, definitely I would like to wait for the result before deploying the funds, although we are expecting the results to be on the positive side regarding the growth in the bottom line as well as top line, but the kind of market volatility which we are witnessing right now, I think that can pose an opportunity to enter at the lower level. So it's a better choice to enter at the lower level rather than making fresh entry into this counter maybe after the result. Then it will be a safe bet. So my idea here is at least wait till the level of 350 to 355 before making entry into this counter.
Okay. Sunny, it's too late to suggest questions right now for Aarti Industries. I already spoke about them. Sunny is asking me to ask when will good times come back for the company. I did effectively ask him that, but let's go to the next one. Surjit is calling us from Chennai. Equitas Small Finance Bank is the name of the counter that we want to know about, right, Surjit?
Yes, sir.
Hi, morning. What can we help you with?
Sir. I have bought around 100 shares of Equitas Small Finance Bank at an average price of 70. I want to know about the long-term view.
Long-term view, okay. Let me go across to Asta on this one. Asta, do you have coverage on Equitas Small Finance Bank? If so, what is the view? He's bought at levels of 70.
Yes, we though it is a diversified small finance bank, they are basically into lending, and my view for the long term is remain invested for this counter, because what we are liking that their NIMs are really becoming very supportive in the last few quarters. In fact, we have seen a good asset quality management from the small finance bank, and hence we are positive on this counter. Idea here is to remain invested with the price target of 65 to 70.
Okay, Vishal Megamart is the name of the counter. Holding from IPO, 90% profit is being witnessed. Wow, that's a dream run. Seema from Jodhpur has got this question. It's a nice question that she's asking. Iski halat trend jaise to nahi hogi? Asta, do you have an answer to that question?
Regarding Vishal Megamart, it was quite positive from the moment the IPO arrived, and at that time also we have recommended a subscribe, although it has given a very, very strong returns. But I don't believe that there is anything to look like anything to look in case of a trend trend kind of situation is expected. Although Vishal Megamart, they have got a very, very strong fold, especially in the northern part of the country, and if you go there just in the northern region, they have got a very strong stores, and the footfall is also very, very high. So we are positive on this counter. The only problem with these retailers is that their valuations. So valuations are a little bit on the higher side, but my idea here is to stay invested in this counter. It will yield good results in the longer term, and our price target for this counter is 170 to 175.
Okay. All right. Do you remember the first question that I asked you, Asta? I just want to reiterate, specialty chemical space, you had said Naveen, right? No. Which?
Naveen Fluorine. We have 5,400 to 5,500 target.
Yeah, okay. So there you go. By the way, our first viewer missed the question, Mr. Sankara Narayan. If you're listening in, then the answer was not the two counters that you had identified. Naveen Fluorine is what Asta likes in the specialty chemical space. We've got our next caller, Tejpal, who's calling us from Hyderabad. Tejpal, hi, morning. How can we help you today?
Hi, very good morning to the panel. Nice to talk to you after a very long time.
It's my pleasure.
Yeah, we are holding 10,000 shares of Spark, Sun Pharma Advanced Research at an average price of 150 rupees.
Yes.
I have a long-term view for at least for next 2 to 5 years. So I'd like to know, should I be adding more or should I be holding it?
So when did you buy this? Did you buy it after that big price drop, Tejpal?
Yes. I bought it very recently, 1 week to 10 days back.
Because there was one formulation which they had which didn't really go into clinical trials or failed clinical trials.
It's for psoriasis. It's for psoriasis, but other formulations in the pipeline are very strong. And we have Sun Pharma, 4 trillion rupee company in the back end.
Yeah, that's true. That's a good point that you're making. So, and you're willing to hold for the long term, you said, Tejpal?
Yes. At least for 2 to 5 years.
Okay, so you're asking what the prospects are. Let me go to Asta. Asta, so he bought it after that big price drop, as I mentioned, when that formulation didn't really take off and the street was anticipating that it would. But there are so many other things that they're working on. Would you say that the prospects are good for Spark down the line?
I think prospects are good, but not at the present moment of the time, because right now the stock is purely driven by the kind of results which they have posted, in which they have not posted a profit. Here I am just excluding the other income and exceptional items, and then I'm telling you that the profits are not there. So it is into the losses, and we have a very good other counters for that matter to look upon. So yes, this counter is a good long-term story. It can be good long-term story provided they show it in their results. Right now, just on the basis of the financial performance, we are not liking this counter, or we are not liking for a fresh entry. So maybe after some time, when the stock fall till the level of 120, 130 or so, then I think we can think of a fresh entry, especially at the 130 point. I think a fresh entry can be made.
Point made. So bear in mind, you bought 10,000 shares. So that if that drop is likely, then be a little mindful and keep your stop losses in place. Anna is calling us from Bengaluru. Anna, hi, morning. How can we help you today?
Good morning. I have a query regarding NTPC Green.
Okay.
I got this on IPO for 108. I have 276 shares.
Okay.
So now the shares are not doing well right now.
Yeah.
So my query is, should I invest more? Should I hold it, or should I, sell?
what is the prospect
should
for?
you sell? And am I right in assuming that you're holding for the long term, more than a year, more than 2 years?
I'd like to, yeah, but yes, but I mean, because I have NTPC Green and the other normal NTPC, so
got it.
Which one to hold on to?
Got it. Okay. Asta, quick view here. We're running out of time. So between the two, would you hold NTPC Green and NTPC, or just NTPC Green, or one of the two?
I think NTPC Green is better because their whole projects are there in the NTPC Green related to the power project. So I think NTPC Green can be a better choice, but not at this point of the time. So maybe at the lower levels of around 100 to 90, it can be a good bet to enter into. Right now, I think NTPC Green can be looked upon as comparison.
Okay, Anna, hopefully that answers your question. We have to do a curtailed rapid fire today, but we'll try and fit as many as possible over the course of 1 minute. Ladies, you know what this is about. RBL Bank, Gaurav wants to know, bought at levels of 171.2, holding period is, should you book profits, I believe is the question, I think. What's the view, Swati?
Partial profits you can book at the current level. Second partial you can hold on by keeping a profit stop loss on 250 for a target of 280.
Okay. Aegis Vopak Terminals is the name of the counter. Bought levels of 252. Current market price 247. Should it be bought, Asa, on the long term?
No, not right now. Maybe at the lower level of 225 to 230.
Okay. Shipping Corporation of India, Prashant, has bought at levels of 309. Would you sell at a loss, Asta?
No, not at all. We believe that this counter can pose good upside from here. Remain invested in this counter. Initial price target can be set at around 225.
Dam Capital bought at levels of 300. Would you hold or exit? Rajan wants to know. Asta?
Dam Capital is a hold from my side.
Okay. All right. Well, that brings us to the end of this edition of Ask Profit. Asta, as well as Swati, thanks so much as always for taking the time. Viewers, it's been a bit of a curtailed session today for obvious reasons. If you tuned in from the start, you know why. But then we'll be back tomorrow to take more of your questions. And up next is Know Your Company. This is NDTV Profit.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बार खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
Hello and welcome. You're watching KYC, and today is going to be interesting if you like turnarounds, because this one could well be a very large turnaround if it were to play out. They are penciling in a top line which will likely double in 2 years. It's an established company. We're talking about Balaji Amines, and this could well be the play if all of this plays out in terms of what they are gunning for. Let me first start off with what I want to know. The first thing, what's been tepid and what's keeping a lid with regard to stock price action today is the fact that volume growth hasn't been seen even in Q1 FY26. So can volume start to pick up going forward is the first and foremost thing I'd want to know. And if not going forward, what is the visibility like with regard to volume uptick? Second piece, new capacity. They have put out 2 new plants over the last 3 months, and how and when does it start impacting the top line of the company is what I want to know. Third one, Chinese dumping and destocking. One is Chinese dumping, the other one is destocking from global peers. This is where the pressure on Balaji Amines is coming from. How are they dealing with this, and how far are we from a revival on both of these metrics or on each of these metrics? FY26, what are pricing trends and expectations that we are looking for? FY26, is there a scope for margin recovery? Are input prices looking better, likely, and therefore even if there is no top line tailwind, could there be a margin tailwind we could see? And how confident is the 3,000 crore top line and the 19% margin guidance for FY27 looking at the back of everything that's played out? I'm Harsh Saita. Joining me today is Varsha Chandnani. As always is the case when it relates to chemicals or pharmaceuticals, and therefore I'll hand it in her capable hands to drive us through what the company does. Balaji Amines, Varsha.
Thank you for that. So, before speaking about what Balaji Amines does, let's just focus on what are amines. So amines are chemicals used primarily as solvents in pharma and agrochemicals, and the applications include your solvents, which derives almost 44%. You have pesticides, your animal and feed additives. So these amines are used in solvents, pesticides, and feed additives. Now, if I were to talk, so nothing but they are basically solvents. That's it. Now let's talk about the market size. If you see the global.
But sorry, Varsha, I am interrupting. What are solvents?
Nothing. You just binding.
It's a liquid.
Yeah.
Which ensures that your formulation is derived correctly.
Correct.
If that is the correct explanation.
Yes.
But yes, for the viewer, that's what a solvent is.
Yes,
because
correct.
you say solvents in a very easy fashion. It's slightly difficult for some of us laymen to understand that. Anyway, please go ahead.
Okay. Now, talking about the market size. So, a global amines market size, if you see, stands at around $4.9 billion, and top 6 companies control 50% of the global capacity, and we'll see why. And China leads with 60% of global production and consumption. Now, what is the moat and why there are only few players when it comes to amines industry? Number one is it's the amines itself is very hazardous when it comes to transport. It's very corrosive and highly flammable, making transport very risky. And so this is one of the reasons why you have only 4 to 5 players in the world. And in India you have Alkyl Amines and Balaji Amines. Now, technological expertise, if I were to talk about, limited company possesses technology to manufacture amines. For example, Alkyl Amines partnered with Western players for technology, but Balaji Amines, developed its own technology when it comes to, amines technology. Now, the other point why there are only few players in this industry is this amines require very high capex, and significant investment is being required to set up these facilities. Also, when your amines or when your product is being used in pharma, in agro, all these MNCs, they require regulatory approval, or I would say customer validation, and this takes 2 to 3 years of customer validation. So if Balaji Amines were to supply amines to XYZ company, that XYZ company will require 2 to 3 years to check whether the amines produced by Balaji are good enough for them. So 2 to 3 years is the gestation period, I would say, when it comes to amines industries. Also now, so this is basically what amines are and why there are only few players in this industry, and what is the moat behind this company. Now, talking about Balaji Amines, so they manufacture aliphatic amines and derivatives. So you have amines, and then you go down, you derive products, you would say value added products or derivatives from those amines as well. So companies make amines and its derivatives. Now, for example, talking about amines and specialty chemicals, what they make methyl amines, ethyl amino, ethanol, etc. Don't go by names. These are used in pharma, agrochemical, rubber, pesticides, rocket fuel. Who are the clients for these companies? When you say pharma, you have Cipla, you have Piramal, you have Thermax, you have Lupin, who uses amines from Balaji Amines. Now, talking about the amine derivatives, let's go one step down. From amines, they manufacture derivatives, and these are used in pesticides, performance chemicals, animal feed, your specialty chemicals, and these are used by who are the clients? You have Sun Pharma, you have Wockhardt, you have Ipca, you have Aarti Drugs, using these amine derivatives. Now, a very useful piece of information, one of the challenges that this industry may have, or this industry is going through, is that customer is becoming a competitor. For example, Aarti Drugs is coming out with its own amines facility or amines capex. Your customer is itself going into your product. So this is one of the challenges or one of the risks that the company has. moving on, if I want to talk about the specialty and other chemicals, there are acetonitrile. You might have heard this number of times, anti-dumping duty on acetonitrile. So these are all the chemicals which are used in your water treatment, in your pesticides, in your pharma intermediates. And if I want to talk about who are the clients when it comes to specialty and other chemicals, you have Indian Oil, you have GAIL, you have Zydus Life Sciences. So overall, if you see, we have amines. What are amines, and what are the products when it comes to Balaji Amines? So pretty good company when it comes, because only 4 to 5 players, Harsh, in the globe. So, and this company has developed their own technology, the other good thing. Now the other thing is, because of the challenges that the industry is going through, Balaji Amines is no exception to this. But also one more thing, very small portion of revenue, comes from the hotel business that they cater to, and that's one of the reasons. We'll talk about this while valuations,
Okay.
Their hotel business.
But so they have a single hotel.
Yeah.
Right. And how much of a focus is that with regard to where the business is concerned? Do they focus too much?
No.
Not so much.
So the good thing is, not much capital has been employed towards hotel business, the good thing in the recent years. So that's the good thing. And also the specialty chemicals, we should, we might ask to management, they were expecting IPO for specialty chemicals. So let's see where they are when it comes to
that could be some value unlocking opportunity. But let's quickly look at the metrics that we will talk about when it comes to our Balaji Amines. We'll start off with the income statement, the balance sheet, the cash flow, return ratios, shareholding, street cred. There's no street coverage, or rather just 2 analysts cover this counter, and therefore we've excluded that. And then there is outlook and valuation. So we'll speak about all of that. But let me have Varsha start off with the income statement. Varsha, can I request you 2 things? So when you are talking about the income statement, give us perspective. The numbers are already on the viewer's screen. What's happened? And what are the key drags that the business, or the headwinds that the business is facing, that we're seeing the kind of numbers that we are seeing? 2,400 to 1,400, and doesn't look pretty, right?
Yeah, exactly. So what we'll do is, first I'll just go through, how the numbers have been. One thing, and we'll also focus on margins. Look at the margins from 26% to 19%. We'll talk about that also. But first thing is why the revenue numbers or the net profit numbers have gone down drastically. Now this is true across industry. You have global chemical downturn that you're seeing, which has been impacting every chemical company. Now this faced a significant slowdown post COVID-19. This impacted demand across various end user industries, like you have agrochemicals, you have pharma, which consumes amines and specialty chemicals. Now the agrochemical sector, which is now the key focus over here, is the agrochemical sector, which is a key user of amines, experienced volatile demand due to inventory destocking, due to China dumping, due to erratic monsoons in certain regions, and due to the pricing pressure because of the dumping and because of the destocking. You had the end product price went down, and this affected the revenue for these companies. So overall, because of the pricing pressure in the overall chemical industry, is one of the reasons why the numbers for the Balaji Amines and even for alkyl amines doesn't look good. But talking about the margin, so this is where the interesting point is, why the margins have gone down significantly. Look at there. In FY22, the margin were like 27%, which has gone down to 15%. Now, the one thing is, this was clearly evident that 26% won't last even for, alkyl amines. Alkyl amines showed margins of around 33-34%, which was not sustainable, as said by management of these companies. Now, why? Because the spike during FY21 and 22 that you're seeing is due to acetonitrile price surge. So the end product price, that is acetonitrile that we were speaking about, a chemical which is used in your pharma and agro, and in water chemical as well, the prices of that product surged. So it surged from 160 per kg to 280 per kg, and this is one of the reasons. And why it surged? Because of the high pharma demand, and this is one of the reasons your margins spiked up drastically, and when the end prices of acetonitrile gone down, the margins have also gone down, coupled with the pricing pressure across industry. So so overall, if you see, the company has not done good, and this is one of the reasons why we are giving thumbs down.
Very simply put, 3 factors: China dumping, some bit of stocking up which had already happened during COVID, the unwind of which hasn't yet happened, and higher raw material prices. Those are the 3 factors why you're seeing what you're seeing on your screen. The profit hit, as well as the top line being hit, as well as the expense line being hit. So all 3 have been hit adversely because of this.
Yes.
Okay, so broadly that's the take. Let's talk about the balance sheet, and now we'll move fairly quickly because we're now behind the most important part of this discussion. The balance sheet, around 1840 crore in terms of equity shareholders funds. We are sitting at around 5000 crore in terms of market cap. So that's the price to book. There's no borrowing on the balance sheet, fairly clean balance sheet per se on a standalone basis. There's no debt which is likely to be taken as well in the future. Maybe to fund some bit of capex, a subsidiary might take on 150 odd crore of debt, which is honestly very, very minimal. So really no concerns. You look at the cash and bank balance as well of 360 crore. There's enough room there as well. So broadly, that's how the balance sheet looks. But the cash flow, Varsha.
Yeah, so cash flow, Harsh, as you in starting you had pointed out that company is doing a lot of capex, and that's one of the reasons the net cash flow is negative, because they've done a lot of investments. So if I want to talk about in 2024 and 2025, the cash flow from investing activities in 24 was almost 274 crore. Then it came to 140 crore. So because companies doing a lot of investments, you're seeing the net cash flow either a negative or very minimal amount of net cash flow with the company. So overall on the cash flow statement, we would give a neutral stance because of the investments that the company has been doing.
And even when I'm talking return ratios, the headwinds you're seeing on the income statement is translating on the return ratio. So we had very, very good tailwind till FY23, numbers reflecting on your screen, 36% ROC. If I push it back to FY22, it was north of 45% ROC. So very, very strong, but it's fallen to 11%. The recovery completely depends on the 3 factors we spoke about on the income statement side. So you want to monitor that. Shareholding pattern, Varsha.
Overall, shareholding pattern, I mean, it's kind of thumbs up, nothing much dramatic there. Promoters' stake has been increased a little bit, that's a good thing. FIIs have maintained their stake at almost 5%, and even DIIs, if you see, has been maintaining that stake. So overall, it's a thumbs up when it comes to shareholding pattern.
Okay, let me take you through street cred. The last 1 month stock is down 20%, last 6 months 12% down, year to date 15% down, 1 year 33% down, but 5 years the stock is up 2.5x, and that's what's driving possible profitability, at least for the longer term investors who are likely to hold on better. So we've given this a neutral. Short term, of course, we've seen pressure. Varsha, both outlook and valuations.
Yeah, so starting about outlook, so they're targeting 3,000 crores of revenue in 2 years, and with the expected volume growth was 10 to 12%. Especially as the new capacities ramp up in FY26, I'm talking about. EBITDA margin expected are 19 to 20%, and the total capex that they're expecting standalone, not considering the specialty chemical, is 200 to 250 crore over the next 2 years, which is already in focus, in progress. Lastly, on the valuation side, if you see, so now comparing with alkyl amines, the valuation is at a discount now. There are many reasons for that, considering the management pedigree, and of course, because of the investors' concern about the hotel business, and also the when it comes to the net profit, or when it comes to all the financials, the weak financials that the company has seen. So all these parameters, have led to, I would say, a discount valuations compared to alkyl amines.
Okay.
Now, so company has to prove, for that premium valuations for Balaji Amines, yeah.
Yeah, but the likely silver lining in all of this is the fact that if they do a 3,000 crore in FY27 with a 20% EBITDA margin, that will mean 600 crore in the kitty. That is phenomenal, because that will in itself mean that the company is flushed with 1,000 crore of cash. Not just that, enough to do the very small capex that they are expected to do, and further leverage on the opportunities available. So that's how the rating parameters stack up. We've given valuations a thumbs up only for that reason, with the potential turnaround opportunity which could come about. We'll get a better perspective as we're joined by management. 4.5 on 8 is what this one gets. We're joined by D. Rama Reddy, who's the Managing Director, Balaji Amines, joining us. Sir, pleasure having you. So first, give us a perspective on how Q1 has gone for you and what set up the context for us for FY26, both in terms of volume, what price trends are you seeing, what should we expect in terms of top line because you've added capacity. Just give us a quick color on those factors.
Thank you, Ash. See, actually, in spite of many hurdles, you know that the chemical industry and the pharma industry is going in very different windfalls. So we have done par with the last quarter, as well as if you compare with the last year also, the same margins, 19 to 20% we maintained. And actually, there's a improvement has started. Last 1-2 months, we have seen that uptake has improved. But again, we have seen some of the volatility because of this tariff news. And second thing, because of the dumping from the China, we have applied for some of the products for the anti-dumping. And also, we have learned to live with whatever is available if we are not getting the benefit of anti-dumping. So there's a reason, in spite of all these things, we have made same. And we expect in coming quarters, there should be, because as you rightly said, there's some capacities will be coming into the stream. Actually, one capacity has just came about 2 weeks back, 2 to 3 weeks back. That is isopropyl amines. That is doing well. And this dimethyl ether, which is plant is ready, but we are fighting for the, I can say the fighting word only, because when we make any product first time in the country, there are a lot of hurdles are there in the approval point of view. We are waiting for the PESO approvals for the storage and transportation of this product, dimethyl ether, because it's an alternate to the LPG. Actually, BAS has already given the go ahead for the blending of 15 to 20% blending of dimethyl ether into the LPG. So we are expecting these should come in this quarter. Then this plant will start. And after this, there are the 2 more plants in the pipeline. One is the N-methyl morphine, again with the new technology we are coming up. And another product, which is the old product, the acetonitrile, we have taken up the dumping up. That is also coming up by end of the year. These 2 plants will come into the stream. So there will not be much up in this year, but definitely next year, as we said, in the 27, there will be definitely, we will reach to the 3,000 crores, what we said in the earlier call.
So Mr. Reddy, hi, this is Varsha this side, pleasure to have you. So you are expecting 3,000 crores by FY26 with 19 to 20% of EBITDA margins, got that point. Also, Mr. Reddy, you were expecting 10 to 12% of volume growth in FY26, and now in Q1, year on year, the volume has decreased. So just wanted to have your view on overall outlook when it comes to volume and of course the pricing trends that you are seeing.
I'll tell you, see, if you look at the consolidated basis, at subsidiary level, we are having 2 activities. One is the brownfield modification of the plant. Other way is the greenfield expansions are going on. These both activities are taking place. That's the reason nothing is happening in the top line point of view at subsidiary. That has impacted on the total top line, even volume growth also. We have seen marginal last quarter, this quarter, there was about 800 to 1,000 tons increase in the volume growth. But going forward, because one plant we have started and other plants which are gearing up, so we will see as per the our guiding, about 10 to 12% volume growth should be there. And what we have seen in the last 1.5 months, there's an improvement in the margins and pricing. See the in spite of all these hurdles, we have maintained the 20% of the EBITDAs. We should aim better than this, if not less than this, we should go better than this in the margin point of view. And as I said, in 2027, not 26, I'm telling you 2027 end, you will see this 3,000 crores turnover definitely because all these plants will be coming into the stream, including the acetonitride, and some part will come from the subsidiary also. The brownfield will finish by end of this year, and even greenfield also will start by the end of the year.
Trends are you seeing on the destocking side of things? Talk to us about that. We've been talking about this recovery in specialty chemicals for a while now, but that's not reflecting, sir. So give us that perspective.
Because of the volatility, you are well aware, you have seen what is happening every day. Yesterday, Trump said 25%, today is talking different. So this volatility is also giving some doubtful things for the buyers. See, I'm selling almost 10 to 15 containers of my material every month to USA. People who bought few weeks back, they are in a puzzle. What will be its duty when it arrives at their doorstep? So these type of volatility is giving some pinch to the customer end, but definitely there is a good days coming for the specialty chemical, because Make in India, what we are talking for the several years, we are all, Harsh, I will be very, very clear with, we are creating the capacities, just waiting for the opportunity.
So who bears the tariff? Give us that perspective. Who bears the tariff? What are your conversations with your clients suggesting? Are you expected to do a lower margin on your product, bear some bit of that tariff, or not at all?
No, it should not happen, because earlier there was 0 to it has already come to 10%. There also we have maintained these margins. In fact, the day before yesterday, we were talking to some of the customers, overseas customers in the USA. They were saying that in this 25%, we are not asking you to compensate everything. They are also ready to forego to some extent. And it should be win-win situation. We may go for some 2 to 3% reduction from our price, and they will also going to bear whatever the new tariffs have come.
Mr. Reddy, so talk to us about the Greenfield project when it comes to, Balaji Specialty Chemicals, number one. And number two, I mean, you were in talks when it comes to, IPO of Balaji Specialty Chemicals. So any update on that?
IPO I cannot say right now, because that will be with the hands of the board of directors of Balaji Specialty Chemicals. Larger board only can tell you, but we did not have any discussion on that. Once we finish, as we said earlier, these greenfield expansions, which will be finished by last quarter of this current year, then you will hear more good things about, because sodium cyanide, hydrogen cyanide, based on these two imported chemicals, there are many other products at the pipeline. So you will see, that's the reason I'm telling you, 2027 will be much better. This 26 will be only, these products will be adding at the end of the year. But next year, definitely you will see the good. You are well aware that we don't have any standalone basis, any debt, even working capital also we do not have. Even after finishing this also, we don't see that anything will go for the debt in the current financial year for the parent.
Right.
There may be little in the subsidiary, because it depends upon the plant's commissioning. If we take some break in the plant's commissioning, then there also we will not have much of the debt.
Right. Sir, thank you. Actually, that's all the time we have. Unfortunately, would have loved to continue this conversation, but out of time. But very interesting, again, in terms of both guidance and perspective. Thanks so much for coming in and speaking with us. Out of time, from Varsha, myself, everyone who puts the show together, thanks so much for watching.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में। फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग। जब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है। बुलाओ।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that is
Good afternoon, you're watching Markets at 12 with me, Shreyanshi Singh, and this is the show where we get you a snapshot of everything that is happening with the markets at this point in time. Let's take a look at some of the sectors. Before we do that, of course, let's take a look at the Nifty. In fact, that's holding on above those 24,600 levels, just above those levels. Some pressure is what you're seeing coming back to the markets at this point in time. So whether you take a look at the Nifty or the Sensex as well, it's a very similar picture, 0.4% downtick coming in for both of these benchmarks, so moving in tandem with each other as we speak. But let's take a look at some of the top sectoral losers, because there's a longer list of top sectoral losers, in fact, than there is a list of gainers, because there's only just two stocks, two sectors, in fact, holding on to a tinge of green, auto as well as PSU Bank. There's some amount of resilience there, but on the flip side, there's a pharma index, oil and gas, FMCG, IT, realty, finance, as well as Nifty Bank and Nifty Defense holding on to a tinge of red at this point in time. Nifty Pharma is the one that is leading losses as we speak. In fact, let's take a look at some of the top sectoral losers. So there's a Triveni Turbine, Reliance Power, Inox India, Wellspun India, as well as TBO Tech. Those are some of your top sectoral losers, down anywhere between 3.5% to 7% at this point in time. And from within the Nifty 50 pack as well, you're looking at an Asian Paints down about 1.5%. Infosys down about 1.5% as well. Reliance is also holding on to a loss of about 1.5% there, about BEL, ICICI Bank, also some of your other top losers from within the Nifty 50 pack. But let's also move on. Let's get you a very important story then. Anil Ambani has reached the Enforcement Directorate office in Delhi for questioning in the alleged 17,000 crore rupees loan fraud case. What is the procedure? What does it entail? And how will the investigation be proceeding from here on? Shrimi is joining in with all of those important details.
Yeah, that's right. Anil Ambani questioning is underway. And what we are picking out from the insiders that, he soon after he arrived, he been made to, sit for 15 minutes, and then he has been taken to the interrogation room. There is a separate room where all these money laundering questioning happens. So he's been taken there, but there is no lawyers or any associate is there with him. Right now the questioning is underway, and what we are also learning at this point that he could perhaps come out at the lunch break from the ED premises, and post-lunch the questioning will resume. The important fact here is that whatever statement he is recording, because everything is getting, both audio and visual is getting recorded, so it's permissible in court, unlike the usual police complaint where you can tweak and alter the statement. But in this case, it's clearly admissible in court. You cannot alter once your statement is recorded, and that is very crucial, and that is only allowed in the PMLA. The key question which ED official is asking at this point on, some of the major allegation, we have been reporting about it, and first up is, of course, the quid pro quo between the ADAG group of companies and, Yes Bank Rana Kapoor, the entire circular lending, the way Yes Bank, sanctioned and disbursed loan to Reliance, and then it came back to the, Rana Kapoor family offices is something ED is going to question. The second important aspect, that how the entire loan being sanctioned to multiple ADAG group of companies has gone to several shell funds, diverted to several shell funds, and that is why the ED also summoned, key executives of Anil Ambani to kind of get sense that how they planned this entire modus operandi and the complex web of transaction. And the third, of course, is the fake bank guarantee is what ED has highlighted. In fact, we have seen the Bismal Trade Link promoter getting arrested last week. He is the person who actually, facilitated the entire fake bank guarantee to secure the tender, the government tender, which is related to Reliance Power. So some key allegation, of course, Anil Ambani has to face and to answer and to reply and to give statement on those allegations is what indication we are getting. And once he will come out from the premises, we'll get more. We are, tracking closely this development. But one thing is very clear, that ED will be trying to establish the money trail, that where the money headed to, the proceed of crime and the amount, because right now we are talking about 17,000 crore of the illegal loan fraud.
All right, then thanks, Shrimi, for getting us all of those details. We'll trust you to get us updates as well. And the money trail is something that we have to keep in mind when it comes to this particular case. But Shrimi, while you're with us, talk to us about Paytm as well, because it's poised to edge closer to that full Indian ownership, and Financial, in fact, is planning a complete exit through a block deal. Tell us a little more about what you're gathering from your sources here as well.
Yeah, so that's very interesting, information coming in the Paytm block deal. What we are picking up from the sources is that the existing investors, have expressed strong interest in the block deal. But remember, the block deal is expected to be in the open market. So you can't really control that the Ant Financial Services, who is, expected to sell its entire stake, which is around over 5%, who will be the buyer there. But what sources tells us that some existing investors has already expressed the interest to, buy those, stake. Then the another important aspect here is emerging, that this entire move is going to help Paytm to clear all the future regulatory approval. Now, what we are picking up at this point, that Paytm is keen to enter some sensitive sectors like insurance, where the ownership norms are very stricter. So you have to go through a lot of these checks and balances. And the way, Paytm have been perceived like a China-backed entity, that become a kind of pain point and has been facing hurdle on that points. And that is why the move trigger, where you've been seeing that how Ant Financial Group, pairing its stake over last 2 years, and now there is a final exit. And in the meantime, Paytm is also kind of working on to settle and resolve all the pending matters. 10 to 12 application is what they are looking to settle with the different regulators. So the clear point is that, of course, the China entity will exit fully, and the Paytm will become the solely Indian entity.
All right, and thanks, Shrimi, for getting us that very important update as far as Paytm is also concerned. So that's another counter to keep in focus. But speaking of counters that you should be keeping in the spotlight, let's take a look at KPI Green Energy. In fact, KP Group is in focus. On the back of KPI Green Energy's earnings, let's look at the key takeaways when it comes to the first quarter of numbers. You have growth that was led by consistent execution strength, so that's something that you're looking at. And they're also increasing scale across both their solar as well as hybrid projects as well. So that's also very important to note. Other than that, there's also them signing 3 MOUs with Delta Electronics to be collaborating on a bunch of projects. So that's also something that you're looking at. So when you look at the revenue, EBITDA, as well as net profit, you've seen a rise coming in on a year-on-year basis. In fact, let's talk to the management. Dr. Farooq G. Patel, CMD of KP Group, is joining us at this point in time. Good afternoon, and thank you so much for taking time out and joining us today. First things first, I wanted to talk to you about your revenue as well as net profit growth. Of course, that was impressive, but you did have the EBITDA margin that is contracted by some 280 basis points. In fact, what do you see as the key triggers when it comes to this margin compression there?
Thank you very much, Shriyasi. That we have declared the result today for the first quarter of the KPI and KP Energy both. And you have seen that from the last quarter to this quarter is quite very nice. And quarter 24 to 25 is also quarter 1 to 1. If you see, 614 is a revenue, and 111 is the PAT for the KPI. And same with the, you can go to KP Energy also, that from the last year to this year, 40 to 45 or 60% growth in both companies. And the order book is quite a strong, and execution also quite strong. And EBITDA, as you said, as you mentioned, is 200 and something in KPI and 100 and something in the KP Energy also. So let's see the trajectory from the last, say, 24 quarters. If you can calculate, we are doing well for the renewable energy as a KP Group.
All right, then, Mr. Patel, I just wanted to double down on that, try and understand if there's a strategic decision that you're taking at this point in time to be prioritizing growth over immediate margin expansion. Is that something that you're looking at?
Yes, we are going, as you mentioned before also, that we are going through with the Delta and all this stuff because of the base and the green hydrogen and the offshore businesses. So, of course, we are going for the sustainable renewable energy growth of as a group.
All right, then, absolutely. So I also wanted to talk about your order book as well, because that is quite important to talk about. Could you provide a breakdown of this order book in terms of IPP versus CPP? What percentage is what you have for solar versus hybrid projects? Give us a sense, a little more color on this then.
We have the order book for the CPP and the IPP in KPI is about 1.8 gigawatt. Which is a work in progress, and in a KP Energy 2.22 gigawatt, as in a hybrid and the solar and the wind 3 segment. You have seen, you must have seen in the presentation also, where we have already uploaded to the NSE and BSE, and work in progress in KPI is 1.8 and 0.5 in CPP already we have done, 1.2 in IPP, and 0.5 is already we have completed. So you can see 1.7 plus 2.3 is a 4 gigawatt in the KPI and 2.22 gigawatt in KP Energy, altogether 3.26. But when you are going for the cumulative with the KPI and KP Energy is a 5.9 gigawatt, which are going to be completed as a IPP and CPP both. But in KPI, you can say that IPP growth is a very high level by the next year end.
Well, absolutely. So that's something that we're looking at when it comes to the order book, right? But I also wanted to get a sense about those MOUs that you've signed. We're talking about 3 MOUs, but looking at Delta Electronics for BESS as well as green hydrogen and EV charging infrastructure that are highly strategic. I want to get a sense of the immediate next steps when it comes to these collaborations. Talk to us about any pilot projects, target timelines that you have in mind when it comes to the commercialization as well as the expected revenue contribution that you're also outlining when it comes to these collaborations then.
Already, as you rightly mentioned, that we have already 1 megawatt plant we have done for the green hydrogen in our Ather factory where the KP Green Engineering is, and we are going to use that green hydrogen into the same factory of the Ather. We will be the first in India who are creating or who are manufacturing the green hydrogen and using in our factory. And our plan is for that perspective only. We have done this MOU with the GS2 and with the Delta also, and with Advait and the people also to make this all things in a big way. We are coming with a very big in this green hydrogen trajectory within 1 or 2 years, you can say. And for that already pilot project is ready and it will be energized by the October end.
All right then, sir, before we let you go, I just wanted to get a very quick word on KP Energy, a very quick outlook if you could, just closing comments, very quick comments then.
Thank you very much. KP Energy is having a 2.22 gigawatt orders in hand in the EPC of the wind, and we are going to get a very big orders in KP Energy also with the KPI, and both we have, as I told you before, that we have a 5.9 gigawatt orders in hand, and our target is 10 gigawatt as a group, and we are reaching closing these orders by the September end, about whatever we have today in hand in pipeline is about 2 to 3 gigawatt. Thank you very much.
Point taken, sir. Thank you so much for taking time and joining us this afternoon. Thank you so much for that update as far as the management is concerned. But moving on from one management to another, then it was an inline set of numbers. In the first quarter, when it comes to Marico, you did have resilience growth for a few segments that aided revenue largely. In fact, Mahima caught up with the company's MD and CEO, Saugata Gupta, to talk about the way ahead for the company, as well as its plans to beat the competition. Let's go across and listen into a slice of that conversation.
Hello and welcome. You're watching NDTV Profit. I'm Mahima Vajrajani. The earnings that we're focusing on today is Marico. Well, it's come out with its set of Q1 earnings and it's a good set of numbers. Good recovery in terms of where value-added hair oils stand. Overall also, it did beat the street expectation. Brokerages are also, pegging Marico as one of the top picks in the FMCG space. To discuss all of this and as to how the quarter has gone by, we're joined by Saugata Gupta, MD and CEO of Marico Limited, joining us now. Mr. Gupta, hi. A very, good afternoon to you, and always a pleasure speaking with you. Just want to get a sense of this quarter, because this quarter sets a tone quite different from where FY25 stood for FY26 overall, and just want to get a sense of what tone is it setting and what were the hits and misses that you saw this quarter.
I think if you really look at it, we have been, especially in the India business, sequential uptake of volume growth. That volume growth is the most important thing for an emerging market consumer goods company, because at the end of the day, just pricing-led value growth or cost-led, cost or A&P cut-led profitable growth is not sustainable. So therefore, I think the biggest news is that we have been sequentially having an uptake in volume growth. We have now hit 9. We have done 6, 7, 8, 9 in that sequence. We are now firmly believe that we can have a shot at doing double-digit volume growth some 1 or 2 quarters this year. Obviously, there is inflation, and that will lead to a good revenue growth, and we expect revenue growth in conjunction with the fact that the international business will continue to deliver double-digit mid-teens constant currency growth. We expect revenue growth in the zone of 25% plus minus. I think as far as yes, there has been an unprecedented inflation, in terms of the copra input cost, which has led to, I think, us taking 60% around price increase, which is a weighted average price increase between pricing and MLH drop in Parachute, which I think, in spite of that, the brand has been resilient at around. We have been flattish with a 1% transaction growth, minus 1% in terms of volume. And the diversification journey continues to do well, and the value-added hair oil. So I think it's been mostly hits. Obviously, we have to cope with a very short-term margin pressure. Having said that, if you see, invariably copra, and if you look at the two hyperinflationary cycles of copra, one between 14-15 and there's the other one which was in 2017 and 2019, it is followed by a deflationary cycle. So margins we pick up, and therefore we get back into the 2-year CAGR of double digits. So I don't think we are worried about it as long as we stay true to our the fact that we continue to execute well, continue to focus to invest. As you know, that in spite of different, cyclical issues, we have continued to invest behind A&P. And we are fairly certain that we should be able to tide through. It's a very short-term issue. And in fact, copra has come down from its peak in the last 2 weeks.
You mentioned that volume growth, you're expecting a double-digit growth 1 or 2 quarters down the line, which is at 9% this quarter. And probably that's the highest in the past 2 odd years. Just want to get a sense, when you say double-digit volume growth, give us a range, give us an idea of the range in which you're expecting volume growth to be in. And then secondly, now that, copra inflation is kind of easing out, do you think that the gap between that volume versus value growth will kind of narrow down?
First of all, let me just clarify. I said we will aspire to hit double digits. I think since we have been a sequential uptake every quarter to hit double digits, and which means moving up a little bit slightly from the 9%. See, in terms of the copra inflation, I think it's coming down. As you know, that obviously pricing lags the inflation. So I think I see the pricing-led factor continue to be playing out. Having said that, I think if you notice, we started taking price increase in the second half of the year. Some anniversarization will come. So if you look at it, if you add up a certain number of, if we continue to keep this volume with a slight improvement, as well as getting into mid-teens plus constant currency growth for international business, around mid-20s kind of a revenue growth is very much possible. And as we said, we'll wait and watch, and we hope to get in the second half the margins coming back. But as I said, these are very short-term, transient terms. I think what is most important is to continue to deliver good volume growth. And I think what is also encouraging this term is that this quarter that we had 99% of our portfolio gaining market share. That is also, I think, very, very critical.
Interesting. In terms of your Parachute segment as well, because that has shown resilience, as you correctly mentioned, that despite of the kind of, the 1% decline in volume and the kind of demand that is there, plus the price hikes being taken, overall, you've seen a good momentum when it comes to Parachute. Just want to get a sense now that copra prices are moderating, what is the outlook with regards to where Parachute stands? And with regards to where competition stands in this place, because there are a lot of these startup companies, small companies that are coming out with these hair oils. Just want to get a sense there. Is it kind of impacting or eating away the market share in any way?
So first of all, again, it is too premature to say that the entire commodity table is moderating. Yes, it has come out of its peak, but it's still significantly inflationary. What it gives us is a comfort in terms of the fact that we don't have to take any more pricing. And there will be no squeeze of margins. So I think this inflationary component YOY will continue significantly in the second half of the year, but I think it's stabilizing, I would rather say. As far as Parachute is concerned, I think we compete with some of the small brands as well as unbranded, and we have continued to gain market share. And historically, if we look at the hyperinflation years, we are far more resilient in terms of supply chain, and usually smaller brands, local brands, or some of the unbranded gets far more impacted. At the same time, we are also cognizant of the fact that with these pricing, there could be some impact on volumes, and therefore we are taking steps to ensure that we keep on gaining market share, so that even if there is some consumption stress in temporary or short term, we make it up, and we continue to deliver a volume growth or a decent moderate volume growth in the franchise in this year.
Alright, and there you have it. That was the management of Marico talking to us about their inline set of numbers in the first quarter. Stock not doing that much at this point in time at least. But let's talk about Oswal Pumps, because that particular counter is buzzing away in trade, 1.5% uptick as far as Oswal Pumps is concerned. In fact, we have Puneet joining in with the update on this one. Puneet, looks like it's a strong set of numbers.
Well, very strong set of numbers, and we have mentioned this particular quarter that for the company was expected to do well. First quarter since listing, so it has been a strong quarter of roughly 20 to 30% revenue growth. EBITDA as well as profitability has also moved in tandem with that as well. And while the stocks corrected a bit from the day's highs, we're now being joined by Mr. Vivek Gupta, who is the chairman and the managing director of the company. Mr. Gupta, very good afternoon to you, sir, and thank you so much for joining in. Sir, मेरे को फर्स्ट क्वेश्चन आपसे यही था कि हमने आपका ऑर्डर बुक जो है 29,000 पंप्स का है करंटली, आप कितने टाइम में ये ऑर्डर बुक एग्जीक्यूट कर सकते हैं, एंड जो नए ऑर्डर्स है इनका एग्जीक्यूशन टाइमलाइन क्या है?
देखिए, ऑर्डर बुक में दो चीजें रहती हैं. एक तो हम लोग जो हमें गवर्नमेंट के जो ऑर्डर्स कंप्लीट करने होते हैं वो करीबन हमें मिलते हैं 90 डेज. सो वी आर वेरी कॉशियस कि 90 और 30 दिन का हमें उसके बाद एक एक्स्ट्रा टाइम मिलता है जो बोनस पीरियड है. सो हम 100 ऐसे ही ऑर्डर्स रिसीव करते हैं जो 120 दिन तक हम लोग कंप्लीट कर पाए, ताकि डिपार्टमेंट के अंदर हमारे जो क्रेडेंशियल्स है, इमेज है, वो बहुत स्ट्रॉन्ग रहे और आगे के लिए गवर्नमेंट का फेथ हमारे कंपनी के ऊपर ज्यादा से ज्यादा बने. सो ऑर्डर, चूंकि गवर्नमेंट इज वेरी एग्रेसिव इस पूरी स्कीम में, तो वहां पर हमें और भी ज्यादा ऑर्डर्स लेने में कोई इशू नहीं है. और इस साल में जैसे हम लोग बहुत इजीली देख पा रहे हैं कि तकरीबन 75,000 से प्लस पंप हम लोग प्लान कर रहे हैं कि इस साल डायरेक्ट इंस्टॉलेशन करें. सो वो बहुत क्लियर हम विजन लेके चल रहे हैं, और वहां पर हमें कोई सरप्राइज नहीं दिख रहा है किसी तरह की अचीव करने के लिए.
तो गुप्ता जी, क्या आप एंटिसिपेट करें कि आप इस साल में 65,000 से 80,000 के अप्रॉक्सीमेटली यूनिट्स आप सेल कर पाएंगे? इस रेंज में भी हुआ तो भी चलेगा, बट ये रेंज में आप ये साल की वॉल्यूम एक्सपेक्ट कर रहे हैं?
देखिए, हम लोग इस साल का जो टारगेट लेके चल रहे हैं, जो गवर्नमेंट में डायरेक्ट इंस्टॉलेशन में करीब 65,000 to 80,000 के बीच में हम लोग अपना टारगेट लेके चल रहे हैं. और वी आर वेरी मच श्योर किसी तरह के ऑर्डर्स रिसीविंग में, एग्जीक्यूशन में और कहीं भी हमें कोई डिस्कनेक्ट नहीं दिख रहा है. बहुत स्मूथ वे में हर चीज जा रही है, और नेक्स्ट क्वार्टर इज ऑलरेडी ऑक्युपाइड, तो वो कोई दिक्कत नहीं है.
और सर, आपने कहा कि आप अपने लिए रफली अराउंड 80,000 ऑन दी अपर एंड आप बेचने की कोशिश करें इस साल में. स्पेसिफिकली गवर्नमेंट के साइड से वो कितने टेंडर्स और ऑर्डर्स दे सकते हैं आपके हिसाब से? इन टर्म्स ऑफ मार्केट साइज कितना है बेसिकली अभी?
देखिए, इस साल चूंकि पीएम कुसुम 1 की गवर्नमेंट का टारगेट है कि इस साल के फाइनेंशियल ईयर में ये पूरा प्रोजेक्ट कंप्लीट किया जाए. सो करीबन 6 से 7 लाख पंप द स्टार्टिंग ऑफ दिस फाइनेंशियल ईयर गवर्नमेंट के पास पेंडिंग थे अंडर कंपोनेंट बी. तो डेफिनेटली गवर्नमेंट ये एग्रेसिवली चाहती है कि इस साल पूरे पंप इंस्टॉल हो, ताकि हम नेक्स्ट पीएम कुसुम 2 को एग्रेसिवली लॉन्च कर पाए. सो इस साल का टारगेट बहुत अच्छा है, और 6 से 7 लाख पंप इस फाइनेंशियल एंड में, या ये मान लीजिए ज्यादा से ज्यादा कैलेंडर ईयर 26 में पहले दूसरे क्वार्टर तक ये फिनिश हो जाएगा, दूसरे क्वार्टर तक।
सो सर ये तो आपका करेक्ट हो गया, 6 to 7 lakhs आप गवर्नमेंट बेचेगी, उसमें 65 to 80,000 आपका है। Q1 में आपका रफली 513 करोड़ का रेवेन्यू था, तो इस क्वार्टर में आपने कितना वॉल्यूम ग्रोथ किया है?
अप्रोक्सीमेट करीब 15,000 पंप के करीब हमने 15 से 18,000 पंप के करीब हमने इंस्टॉल किए हैं क्वार्टर 1 में ओसवाल में। अगर हम टोटल सप्लाई की बात करें या टोटल मैन्युफैक्चरिंग की बात करें तो वहां पर हम लोगों ने बहुत ज्यादा अपने कैपेसिटी यूटिलाइज किया है। हम बात कर रहे हैं कि डायरेक्ट जो हमने गवर्नमेंट में इंस्टॉल किए हैं, मैं स्पेसिफिक वो नंबर की बात कर रहा हूँ आपसे।
और सर गवर्नमेंट के हिसाब से इस क्वार्टर में रफली आपने कितना वॉल्यूम देखा है? बिकॉज ये 6 से 7 लाख का वाइल इनका टारगेट है, तो इस साल में या ये क्वार्टर में हमने देखा है कि 60 से 70 हज़ार की गवर्नमेंट ने सिक्योर किया है पंप्स इस क्वार्टर में।
मैं ये मान के चल रहा हूँ कि इस क्वार्टर में गवर्नमेंट के करीब 50 से 60,000 पंप इंस्टॉल हुए होंगे तकरीबन।
Well, that was Oswal Pumps and the management as well, and very, very strong listing for the company in this particular quarter. But that's on Shreyanshi, that's on Oswal Pumps. We've seen really good, strong quarter for the company.
Well, absolutely, and you do see that reflected in the stock price as well. But that's all the time that we have on the show. Thank you so much for tuning in.
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
गोल्ड ग्लास, क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors, market regulator, securities and
Hello and welcome to NDTV Profit. A very good afternoon to all the viewers. I'm Hiral Datia and with me is Varsha. You're watching Profit Buzzers and it's an interesting day of trade because from the day's low as well, a mild recovery that's come in terms of the markets, but you're seeing that pressure which has continued and you're trading in the negative. Let's quickly pull up Nifty 50 on the screens. There you go. Cuts of around 0.4% coming in there and we're below the 24,700 mark. 24,630 is what you're tracking so far. Let's quickly pull up Bank Nifty on the screens and then we'll look at the sectoral heat map to understand which are the sectors which are aiding this kind of a downtick in trade today. Bank Nifty as well, similar kind of trends that you're tracking with regards to Nifty 50. Let's look at the sectoral heat map. You just have the PSU Bank Index, which is trading in the positive, followed by Auto, second consecutive session of gains in terms of where the Auto Index goes. And you have the Media Index as well, which is pretty much on the borderline. The one sector which is taking a beating today is Nifty Pharma, followed by oil and gas on the back of the commentary that we've heard from Trump when it comes to Russian oil. FMCG also trading under pressure, IT taking a beating today, real estate down to the tune of almost 0.6%. Defense continues to see profit booking. So that's the trend that you're picking up in terms of sectors. Let's quickly look at the heat map in terms of Nifty 50 and see what the stock chart is looking like in trade as we speak. Firstly, IndusInd Bank, the top gainer on the back of Rajiv Anand coming in on the leadership position. Titan seeing gains, Maruti trading in the positive. And Maruti is seeing profit, buying interest today after some bit of sell-off in yesterday's session. Trent is another one. Last couple of trading sessions have been really strong for this one and it's taking cues from the kind of surge that you're seeing in terms of sales as well. SBI Life trading in the positive. What's on the losing end? You have Adani Enterprises, Nestle, Cipla in fact on the back of the US FDA letter. Asian Paints trading under pressure, in ICICI Bank and Infosys with a Dr. Reddy's which are down in trade. Varsha, broader markets, a similar trend because last couple of days that's what you're seeing.
Yeah, exactly. Broader markets are actually mirroring benchmark. Let's see what Nifty Midcap 150 is doing. It's down almost 0.14%. You have, New India Assurance, you have Tata Investment, Fact, and Minda who are buzzing when it comes to, Nifty Midcap 150. While on the losers side though, you have BSE, you have Aurobindo Pharma, under pressure on the back of earnings. Did not meet the estimates. You have Timken, you have Biocon, you have Bharat Dynamics also losing when it comes to Nifty Midcap 150. Even Gland Pharma is under pressure, expected to post its Q1 results today. On the small cap 250 front, of course, down almost 0.21%. You have Godfrey Phillips, which is buzzing on the back of earnings. You have Tanla Platforms, Stumble Fertilizers. In fact, a lot of fertilizers companies are buzzing in trade today. You have Sterlite Tech also buzzing when it comes to small cap 250. On the losers side, though, you have Triveni Turbine on the back of Q1 numbers, MedPlus Health, Wellspun Living, Intellect Design and MGL, which are under pressure when it comes to small cap 250. So, when it comes to broader markets here, a lot of stocks are buzzing and under pressure on the back of Q1 earnings, right?
Yeah, it's an earnings heavy day as well for the broader markets. But the top story of the day, the leadership churn that's happened at IndusInd Bank, and that's entered a new era with seasoned banker Rajiv Anand set to take over as MD and CEO from the 25th of August for a 3-year term. Now, an asset management veteran and former deputy managing director at Axis Bank, we bring in my colleague Vishwanath Nair to give us more perspective about this. Vishi, clearly a new boss at IndusInd. Would this mean the tables would turn at IndusInd Bank?
Well, table turns or not, we'll have to sit and watch at this point in time. But what we do know is that Rajiv Anand will be taking over at IndusInd Bank, and specifically, he will be appointed for a period of 3 years. His first day at IndusInd Bank actually starts on the 25th of August. So 3 years from that point is when he will complete his first term as a CEO. He, of course, retired early from Axis Bank on the 3rd of August. And at that point in time, what sources are telling us is that he retired from Axis Bank thinking that he is actually going to retire from being a banker for his life. But then IndusInd Bank turned up, and then that's why they had to go ahead and he had to apply for that job. Now, coming to his professional journey, when he was actually the CEO and MD of Axis Asset Management between 2009 and 2013, after which he entered Axis Bank. So this is where the Axis sort of saga starts in his career. Axis Bank, he was a retail banking head, president of retail banking in between 2013 and 2016, after which, of course, he's also served as executive director, which is when he entered the board. And then in 2021, he became Deputy Managing Director of Axis Bank. Since then, that is a position that he has held till his retirement on the 3rd of August. In the past, he's worked with major banking names. He started his career at HSBC. He was a bond trader there. ANZ Greenliz, IDFC and Standard Chartered Bank as well, where he was appointed for senior leadership positions. Now, what are the challenges in front of Rajiv Anand as he takes on his new role? The primary one is going to be the fact that IndusInd Bank is currently facing challenges on multiple fronts. This includes the problems that are there in the derivatives accounting portfolio, and also in the microfinance portfolio, which is both of which he has faced trouble. The bank has faced troubles in both these situations. Governance concerns are a major issue, which are causing a significant reputational harm to IndusInd Bank. Apart from this, of course, the former CEO, Sumant Katpale, and Deputy CEO, Arun Khurana, both had quit IndusInd Bank in April. This was because SEBI found credible evidence of insider trading by both of them, because the derivatives issue was only disclosed to the market in March of 2025, but it seems that they knew of this much earlier, and that's why they were dumping their stock. The bank is suspecting fraud. Of course, bank is currently being managed by a committee of 2 senior executives who are currently executing the role of the CEO, but now with Rajiv Anand's entry, that helps. His first tasks, that is going to be something important to watch out for. What exactly is Rajiv Anand's first line of duty? The first of which is he needs to appoint a credible and trustworthy management team at the bank. If you were to look at the microfinance business, there again, he has to build some trust. The bank currently does not have a CFO, it doesn't have a treasury chief, it doesn't have an audit chief. So all of those appointments will have to happen. He also needs to reorient the growth strategies as far as IndusInd Bank is concerned, because right now, the 2 executives are running the bank. They are only doing business as usual. So growth strategies need to be reoriented. Separately, he also needs to leverage whatever strengths IndusInd Bank has in the commercial vehicle as well as gems and jewelry financing business, asset financing businesses. He needs to leverage that and grow that further. And lastly, for IndusInd Bank, for a lender like that, housing finance is a fairly new business that they've started, a book of only about 5,000 odd crore. His job will be to then grow that further and ensure that IndusInd Bank is able to capitalize on that.
Thank you so much, Vishy, for getting us all the details. So, a lot of challenges and execution is going to become key from here on. But let's also get in Avinash Gorakshakar, Director Research, Profit Mart Securities. Avinash, good afternoon and welcome to the show. Always a pleasure to speak to you at NDTV Profit. How are you looking at the new boss at IndusInd Bank, and what would you advise investors to do?
Yeah, I think, Hiral, good afternoon. I think this is definitely a good beginning. See, I think Rajiv Anand would definitely bring in new processes and some sort of vigor in the company's management board. But I think, as Vishy mentioned, I think it's too early to take a call as to what are the kind of immediate kind of changes he makes. But I think over the next, say, 1 to 2 quarters, I think you'll probably see the kind of direction, the bank takes. And I think the derivatives portfolio, the microfinance portfolio are 2 areas where I think a lot of painful decisions may have to be taken. So I think, these could be the near-term challenges. But I think net, whatever negativity had to happen now that has happened in the stock price, I would not be surprised that for some time the stock would stabilize and would now wait for some positive improvements on the numbers, positive improvements from the commentary, and how the bank is going to be completely rebranded and rehauled to ensure that there's a complete trust from investors as well as from the institutional side. So I think we'll have to wait and watch for at least the next 3 to 6 months, and obviously after that actions would speak louder than words.
Right. Thank you so much for that view, Avinash. Well, moving on, Tata Motors, let's see what that counter is doing. It names PB Balaji as a new JLR CEO after Andrin Martel stepped down from his role. Let's bring in Puneet with more on this one.
Well, thank you for that. The stock might not be reacting too much, but it is one of the most critical steps that Tata Motors has taken towards its JLR division. As you rightly mentioned, they've appointed the current CFO, Mr. PB Balaji, as the new CEO of Jaguar and Land Rover business starting in the second half of this fiscal year. Now, it's going to be important because he's been serving as the CFO of the company since November of 2017 and has been one of the integral parts to ensure that JLR division also has been very strong on its financials over the last 4 to 5 years, and we always used to see a translation loss impact pre-pandemic on JLR. Since Mr. Balaji has stepped in, all those have stopped, and hence the turning around of the financials the credit has to go to him as well. Apart from that, he's worked in the automotive and the consumer business for 32 years, and hence it's not new to him for making turnaround as well as growth strategies going forward as well. The two key aspects to watch out for will of course be the demerger of both the passenger vehicle and the commercial vehicle division, and Mr. Balaji will of course be leading JLR in that aspect, and what happens with the eventual rebranding of Jaguar as well, because it's expected to be an EV only brand. The brand did get into a lot of controversy because of his rebranding for the Jaguar brand, so he will need to do a lot of work, but definitely one of the key personnels appointed within Tata Motors for JLR, and it could be one of the key re-rating triggers going forward as well.
A re-rating trigger coming in with the JLR. Before we get into Avinash on this one, let's quickly address a Paytm. Let's pull up that one on the screens. Antfin has raised $454 million in the block deal. They've sold it at around 1,067, pretty much at what the current market price is. The stock is now down nearly 1% in trade. The details are just coming in right now with regards to the stake sale that was already reported on NDTV Profit yesterday. What is interesting with the Paytm is the way the DII stake has been increasing as well. From a 3% in March 2023, the DIIs have actually gone ahead and increased their stake to nearly 15.8%. So a lot of interest that is coming in on that front. The public shareholding has also gone up, though the number of shareholders has gone down. It's the FIs who have gone ahead and reduced stake. Apart from that, if you talk about the key, FDIs as well, it's Mirai, Motilal Oswal and Nippon. These are the ones who are present as per the current shareholding pattern. Overall, if you talk about the turnaround, the regulatory challenges that have been faced by Paytm, that is something which probably will go away with this. And the turnaround that we're expected to see from here on as well is the pivot in terms of the payment business, the focus that the company has with regards to profitability and growth. In fact, they did turn positive in the first quarter of FY26, beating the consensus numbers as well. And they're striving towards a 15 to 20% EBITDA margin, where currently they're sitting at around 3.7%, and they're expecting to exit FY26 with an EBITDA margin that will be considered better. The three triggers for our Paytm will be the RBI easing restrictions on the company and accelerated margin expansion and profit growth. And overall, from an analyst perspective also, if you see, 10 have a buy call, 5 hold, 4 sell, and the average target price is around 1100, which is below the current market price as well. So that's with regards to where Paytm goes. Avinash, a quick question with regards to Antfin exit and the turnaround of a Paytm, as well as JLR getting the first Indian CEO, and whether it will be a re-rating candidate as well from here on.
Yeah, I think as far as JLR getting a Indian CEO is definitely good news. I think all things apart, I think what the market would like is how the volume numbers stack up, and I think Mr. Balaji has got a very clear cutout kind of strategy and program going forward. My sense is that the CV numbers which have come up till now have shown some indication of green shoots. We could see a little more traction on the commercial vehicle side in the second quarter of this financial year. and hopefully the second half should be much better. And I think the markets are also waiting for the demerger of the JLR and the domestic business, Hiral. I think that would also be a near-term trigger, because clearly JLR would be an independently listed company. To that extent, I think we'll have to see how this pans out. But overall, I think the second half of this financial year is going to be much better than the first half for Tata Motors. Hopefully, the rate cuts, the rural demand, and the economy, I think we could see good amount of traction in the second half starting September onwards. As far as Paytm is concerned, I think this is definitely a good development, because a lot of market, people were not very comfortable with the Chinese connection in Paytm. Now with this sellout, the Chinese connection is completely out. I think domestic funds have increased their stake here. And I think, things are gradually improving. But I think to get a complete revival for Paytm, maybe you'll have to wait for the next 2-3 quarters. I think the markets would look at operating efficiency to kick in, cash flows to improve. And I think the market opportunity is large, but I think they need to also repair their balance sheet to a certain extent. And I think once earnings, at the operating level kick in, that is the time when I think you could see a significant amount of re-rating on the Paytm stock. So somebody who's got a 12 to 18 month time frame can definitely consider to look at buying a small quantity here. But I think keep the time frame medium to long term.
Right. Thank you for that view, Avinash. Well, two stocks which I'm going to focus on. One is Sanofi Consumer and Health, which has come out with its Q2 numbers. Now, if you see good set of numbers, revenue increased was led by export operation and successful product launches. Net profit uptick was led by lower base last year, and other income also aided net profit for the company. EBITDA margin impact was led by higher other expenses, and they've launched 2 products in the allergy segment. So one is Sanofi Consumers, good set of numbers. The other one which is in focus is Oro Pharma, which they missed estimates basically. So revenue miss was led by lower US and API business revenue. Lower contribution from Revlimid, that is cancer drug, impacted their EBITDA, and PAT miss was led by EBITDA miss and higher than expected tax expense. So Avinash, 2 pharma stocks, Sanofi Consumer and Aurobindo Pharma. How are you seeing their Q1 numbers, and also your view on both of these stocks? And in apart from this, if you have any other picks in the pharma sector?
Yeah, I think, Varsha, both these companies, I think numbers have been a kind of divergent. I mean, if you look at Aurobindo, they've missed this quarter numbers because of lower API sales. And I think the markets are looking at slightly better numbers. So it's a kind of a tad disappointment for this quarter. We'll like to see how the company performs in the second quarter. But I think looking at the price movement, I would not be surprised that beyond this level, maybe there could be some further panic sell-off. So I think, the stock could consolidate for the near term. We are suggesting our clients that whoever is holding Aurobindo Pharma should hold on. Fresh buying is advisable once we see a better clarity in the second quarter. And as far as Sanofi Consumer is concerned, I think it's not a bad set of numbers despite a large presence of other income. And I think the product category, I believe, is going to get further accelerated in the coming few quarters. So that could be a trigger point. But I think overall, if somebody wants to buy this stock, I think one needs to keep at least a 18 to 24 month view. This is not a stock which could possibly give you a very short kind of upside in the very near term. Valuations are fair to expensive. So I think, you'll have to keep a time frame of at least a couple of years before you could actually make some decent money here. So, this company was hyped up from the main Sanofi company. And I think shareholders have largely benefited. But I think clearly you could see some traction coming in over the medium to long term.
Okay, so that's with regards to the pharma pack. But moving on, Butterfly Gandhimati, that's another stock which is in focus in today's day of trade, and that is on the back of the numbers that have been reported. The stock has cooled off, but still seeing gains of nearly 7%. Clearly steady quarter amidst a weak industry trend. The earnings have been, though, lower versus estimates. The growth, the revenue and the margin growth has been slightly slower as well. Though their focus is in terms of the margins, that turnaround remains absolutely intact. So that's with regards to where Butterfly Gandhimati goes. The other one is a Global Spirits. The earnings have been lower than what the street was estimating. Bulk of the volumes have declined, and this is in contrary to the expectations as well. Regular as well as other segments have actually faced headwinds in Delhi as well as Haryana. And the policy shift that we've seen in terms of where Delhi goes, that has affected the final month of the quarter, back of which the margins have improved, though your profits have gone up by around 13%. If you pull up the stock as well, is under pressure. And if you talk about a Godfrey Phillip, that's another one which is buzzing. Cigarette and tobacco profits, they've seen a growth of around 28%. That stock is also at the day's highest levels with gains of 8.5% coming in there. A 2:1 bonus is what has been approved and the record date is the 16th. And lastly, the PAT is not comparable because of an exceptional loss. So these three companies, Avinash, Butterfly, Gandhimati, Global Spirits and Godfrey, what would you advise investors to do basis the earnings reaction that you're seeing today?
No, I think amongst all the three, Godfrey Phillips looks to be quite interesting because the bonus has come after a long time. That would improve the liquidity, and I think clearly this has been a stock which has been under the radar by many investors. So I think definitely with this bonus, you could see a little amount of liquidity, and I think it could possibly gain further traction. Numbers have been decent. I think at least in this quarter, numbers have been in line with what the street expected. But I think Global Spirits has been a disappointment. I think that's the reason the stock is down today. My sense is that, going forward, what is the policy change, the regulatory change? I think that will be very important. But overall, I think, we'll have to see the second and third quarter. Normally, the pickup quarter for Global Spirits is the second half of the financial year. So I think net, the second quarter may not also be great. It could be more of a flattish kind of quarter. So second half should be better. So I think those who are holding on to the stock should hold on. I think fresh buying at these levels, Hiral, is not advisable.
Thank you for that view, Avinash. Moving on, let's see what TBO Tech is doing because macro headwinds have certainly hurt top line for the company. Earnings were impacted by multiple macro headwinds and the better than expected take rates in hotels and packing what the company has seen. Consolidated gross transaction value were muted at 2.3% growth of year on year, while weak gross margin drives EBITDA miss in Q1. While on the next stock which is in focus is Triveni Turbine. Again, if you see, let's just talk what didn't work when it comes to Triveni Turbine. The deferment of dispatches and orders impacted growth for the company. Domestic sales declined 24%, export sales declined 15%, and the quarter's performance fell short of expectations and proved to be more challenging. Order booking was down 16% at 536 crore due to lower export demand, and outstanding order book stood at around 2,000 crores, which is up 20% year on year. Avinash, both of these stocks, TBO Tech and Triveni Turbine, what are your views when it comes to Q1 numbers and what will you advise to investors?
I think the bigger disappointment came from Triveni Turbine because both the domestic and the export volumes were down. I think clearly execution took a hit, demand was low, and I think immediate recovery looks to be little difficult. So maybe the July to September quarter is also going to be a challenging quarter for Triveni. Although the order book is quite attractive and they maintain margins at around 19% from 20% earlier. The revenue drop is definitely something which is concerning, and I think that is something the markets have not liked. So we would prefer to be a little cautious here. We'll try to see, how the second quarter pans out. If at all it turns out to be even bad than the first quarter, then I think the stock could get further derated. But as of now, no fresh buying advisable here. As far as TBO Tech is concerned, I think this could be a small blip, but I think the second half is definitely expected to be significantly better. So we prefer to hold on here. I think any dip in the price could be used as an opportunity to accumulate.
Right, so that's with regards to TBO Tech. The future looks promising is what Avinash is saying. But let's quickly look at Oswal Pumps as well on the back of earnings. How are you looking at Oswal Pumps? Because the stock is seeing gains of nearly 1.5%. Avinash, the FY26 order inflow was something that the street was eyeing.
So I think, I think numbers have been quite solid. And I think recently, just before I came on air, I was hearing the interview of the MD of Oswal Pumps. He seems to be very aggressive in putting his guidance that this year also numbers are going to be pretty strong. The second quarter order book is also more or less completely in hand. Execution will be strong. So I think, somebody who's taking a next 12 to 15 months kind of time frame, this is a space where I think you're going to see a lot of growth happening. And with a very strong order book, Hiral, I think I won't be surprised that if numbers come much better than what the street expects, you could expect further re-rating even from these levels. So I think despite the fact that it's up by about 10-11%, any dip should be used as an opportunity to accumulate here. It's a stock where I think recently it got listed, but I think if numbers are good, you could expect a decent revival and a decent re-rating on the counter.
Okay, so that's with regards to Oswal pumps as well. The stock is up nearly 24% since listing. In fact, we've just seen a block deal that's happened. 10.7 lakh shares have traded on Infosys. The stock is now under pressure with cuts of 1.5% coming in there. So that's with regards to our Infosys on the back of the large block deal that has happened right now. But as we slip into a short break, let's quickly also hear in what the management of Oswal pumps had to say. That is Vivek Gupta, Chairman and Managing Director.
देखिए, ऑर्डर बुक में दो चीजें रहती हैं। एक तो हम लोग जो हमें गवर्नमेंट के जो ऑर्डर्स कंप्लीट करने होते हैं वो करीबन हमें मिलते हैं 90 डेज। सो हम वी आर वेरी कॉशियस कि 90 और 30 दिन का हमें उसके बाद एक एक्स्ट्रा टाइम मिलता है जो बोनस पीरियड है। सो हम 100 ऐसे ही ऑर्डर्स रिसीव करते हैं जो 120 दिन तक हम लोग कंप्लीट कर पाए, ताकि डिपार्टमेंट के अंदर हमारे जो क्रेडेंशियल्स है, इमेज है, वो बहुत स्ट्रॉन्ग रहे और आगे के लिए गवर्नमेंट का फेथ हमारे कंपनी के ऊपर ज्यादा से ज्यादा बने। सो ऑर्डर, चूंकि गवर्नमेंट इज वेरी एग्रेसिव इस पूरी स्कीम में, तो वहां पर हमें और भी ज्यादा ऑर्डर्स लेने में कोई इशू नहीं है। और इस साल में जैसे हम लोग बहुत इजीली देख पा रहे हैं कि तकरीबन 75,000 से प्लस पंप हम लोग प्लान कर रहे हैं कि इस साल डायरेक्ट इंस्टॉलेशन करें। सो वो बहुत क्लियर हम विजन लेके चल रहे हैं और वहां पर हमें कोई सरप्राइज नहीं दिख रहा है किसी तरह की अचीव करने के लिए।
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में। फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग। जब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है। बुलाओ।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
हेलो, बोलिए मैडम। डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बार खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know
the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Welcome back. You're watching Profit Buzzers. Well, moving on, Anil Ambani reached the Enforcement Directorate office in Delhi for questioning in the alleged 17,000 crore rupees loan fraud case. What will be the procedure entail and how will the investigation proceed? We are here joined by Shrimi. Shrimi, tell us what your sources are indicating. Shrimi, can you hear us?
Yeah, I think there is some bit of an audio glitch with regards to where Shrimi goes, but this is going to be an interesting story which is developing pretty closely right now, where Anil Ambani has already reached the Enforcement Directorate office in Delhi for questioning, and this is in the alleged 17,000 crore rupees loan fraud case. Now, what the proceedings are going to entail is the crucial bit that we should be picking up from here on, and how will the investigation proceed. What will be the next steps that will be taken? Those are the key details that my colleague Shrimi will be getting us. Those are the visuals that we are picking up where Anil Ambani would be facing the ED heat. In fact, I do have my colleague Shrimi who's back with us. Shrimi, are you able to hear me well? If you could tell us from here on that now that Anil Ambani has been taken for questioning, what are the key details that you're picking up in terms of the next steps?
Yeah, so, we've been reporting that since 11 o'clock, after making him sit for 15 minutes, he has been taken to interrogation room where his both audio and video is getting recorded. And remember that in PMLA, whatever the statement he's going to give will be presented in the court, and you can't alter that. So that is something very crucial. So whatever statement he's giving on the slew of questions is going to be permissible in the PMLA court. Now, couple of questions and couple of highlights, since we know that ED is investigating 17,000 crore of illegal loan fraud, which flagged several complex web of transaction, right from how the loan sanction from the Yes Bank gone to Reliance and then routed back to Yes Bank Rana family offices. That quid pro quo angle is what one of the key question ED is asking. Another one is, of course, how the amount been given the loan sanction to both commercial finance as well as the housing finance, close to 12,000 crore, how that has got diverted to several shell companies, and of course the bank guarantee aspect, the fake guarantee where the Odisha-based entity is involved, and in fact we have seen the arrest being made there. So whatever the evidence is and whatever the statement that entity made, alleging that this was all done to kind of secure the SSI, the government tender by the Reliance company, is also one of the key question which ED is asking at this point of time. So clearly he has to face some tough question here to answer, to reply, because whatever statement he's going to give, that will straight go to court. And in fact, we are also hearing that there will be some lunch break also, where he will be given some time out from questioning, and then the questioning will resume after 1:30, 2 o'clock is what the indication so far we are getting. But the number of question and the complex, given the complex web of transaction, the questioning will be continue is to at least 10 to 12 hour is what we are picking up, what we are learning at this point. But we are closely watching these developments, and we will be trying to get as much as possible that what is happening inside.
Right. Thank you so much, Shrimi, for all the details, and we'll certainly wait for next steps. Well, on that, let me also invite our second guest for the show, is Vinay Rajani, a senior technical and derivative analyst at HDFC Securities. Welcome, Vinay. Pleasure to have you. Vinay, how are you seeing markets considering all the geopolitical reasons that we have as of today?
Yeah, so good afternoon. Positional trend of the Nifty has been down only, so it is finding it very difficult to sustain at higher level, and every rise is being taken as a sell on rallies kind of opportunity. But the one observation has been that the Nifty is currently taking support around its 100 days exponential moving average, which is placed around 24,590. So that is a crucial level. For last 3-4 sessions, it has been trying to give close above that level, but positional trend is definitely down. Lower top, lower bottoms are there, and positionally we can see we are underperforming. We are the underperformer in the year 2025 also, where we have seen a rise of more than 27-28% in the markets like Korea, while Nifty is one of the underperformer with almost flat returns in the year 2025. So yes, overall trend has been weak. Despite Asian markets and emerging markets are performing better than India, but looking at the support, 24,590 is a crucial level. If Nifty were to close below that, then it will be further negative, and the overall the positional support which we see below 24,590 is the 24,200, around which 200 days exponential moving average is placed. So yes, the positional trend has been down. The only thing that we need to see whether these supports are getting respect or not. So 24,590 followed by 24,200. These are the two supports one should watch out as a for bounce back.
Right, so that's an interesting one in terms of where markets go. Let's look at a LIC Housing and see what that stock is doing in trade. You have a Jefferies, which has maintained a hold. The stock is down nearly 2%. They've cut the target price to a 635 from a 650. And this is on the back of the first quarter numbers that have missed estimates as well. They're expecting net interest margin pressures ahead, but it's only the valuations they're saying that is offering some bit of a support for this one. Avinash, what would you do with the LIC Housing Finance, or anything else that you would have to add in terms of housing finance companies from here on, taking into consideration the kind of pressure that real estate as a sector has been facing right now? Avinash, you're on mute.
Yeah, sorry. See, we like to wait for some clarity on the LIC numbers, Hiral. But within the housing finance companies, I think with 2 rate cuts announced, I think there is some pressure on NIMs. We'd like to look at some PSU names like Canfin Homes, which is part of Canara Bank. Typically, housing finance companies definitely would have to lower their margins to ensure that they get a bigger slice of the business. But I think looking at what LIC Housing Finance has reported, I think it will be better to wait, because clearly I think there is some margin pressure for these companies, and business has not come in the way the business should have come. And with the overall lull in the real estate market, I think obviously the first quarter has not been very great. So I think we'll have to wait for the second and third quarter for business to get ramped up, because I think clearly that is one of the key issues. So I think we'll continue to have a cautious view here. We are not very aggressive on housing finance companies. We'll prefer to bet on the PSU banks clearly, because they have bigger balance sheets and a bigger diversified income kind of stream. So that would be the strategy, at least as of now.
Okay, so that's with regards to LIC Housing Finance. But moving on, Manappuram Finance, that stock has been actually facing pressure in trade, and this is after its subsidiary, which is Ashirvad MFI, posted a disappointing first quarter. The stock also under pressure. Harsh is with us to tell us more. Harsh, over to you.
Well, yes, let me give you perspective. So while the lines are coming on the screen and you'll get a perspective with regard to what the numbers actually look like, there's a very, very sharp shrink with regard to the net interest income. That number was around the 290 crore number Q4 FY25. That has shrunk to 230 crore in Q1 FY26. So that shrink is extremely sharp. That's what you want to be mindful about. The margin numbers still awaited. Where Ashirvad Microfinance is concerned, Manappuram's numbers will come out sometime later this week. So you want to watch out for that. The real impact will come from the impairment number, which is actually the credit cost or the provisioning number. That number stood at 850 crore in Q4 FY25 was a real serious knock. In Q1 FY26, it was expected to improve, and it has. But on a console level, that provisions number was expected at around 522 crore. Now at an Asirvad level itself, the number has come in at 483 crore. So leaving very little bandwidth on a console basis to actually hit that 522 crore expectation number. But we'll have to wait and watch for the full Manappuram picture to play out. But likely looks like a weaker set than expected already, given Asirvad's numbers. So you want to be careful, and that's probably what's keeping the stock in focus as well. And the 2+% lower is likely justified due to that.
Thank you so much for that one. Vinay, a quick one. Manappuram Finance, LIC Housing Finance. What would you advise?
Yeah, so positional trend of Manappuram Finance has been quite bullish. Relative strength was quite there. It was there, and till now it was performing well. No doubt we have seen our fall from the 285 to 250, 245 odd level. But overall on the positional chart, it looks better and it is likely to outperform. Today it has come down, but overall I see strong support at 245. So trader can look this level as a stop loss in their trading long positions. But otherwise, overall chart looks like that it should outperform. Considering the LIC Housing Finance, it is looking weak. It is now below its 50 and 200 days average. So definitely trend has changed. Previously it was bullish. Now it looks like that it has given a fresh breakdown. So looking weak relatively. Support is there around 560. Resistance there around 600. So bias is on the negative side as in the LIC Housing. But Manappuram Finance is looking relatively stronger on the charts.
Right. Thank you so much for that view, Vinay. Well, let's move on and let's talk about a pack that has been underperforming not only today, but also for the last 15 sessions. And I'm talking about oil marketing companies. You have IOCL, HPCL, BPCL. All are down between 8 to 11% in the last 15 days. What's wrong, and is it right time to buy? Somit is here with more on that.
Well, yes, the oil marketing companies, in fact, the state-owned oil marketing companies have been under pressure. IOCL, HPCL and BPCL are down anywhere between 8 to 11%. Now, obviously, the Russian crude ban is one of the reasons, but that is not the only reason why the stocks are down. Firstly, the reason is the fall in the Singapore gross refining margin, which is the Asian benchmark for refining margin. Now, in the first quarter, they averaged around $5 currently, and so far in the second quarter, they have averaged around the $3.2 per barrel mark. And this drop in the Singapore gross refining margin is largely owing to the uncertainty owing to the global demand and the rising inventory globally, which has led to this lower GRMs. When it comes to marketing margin, which is the other segment for the oil marketing companies, in the first quarter, the gross marketing margin that the oil marketing company earned by selling every liter of petrol and diesel stood at close to 8 to 10 rupees per liter, and this has dropped to around 5 rupees per liter so far in the second quarter. Now, this drop is owing to the adverse movement that we have seen in crude oil prices and because of the adverse movement that we have seen in exchange rates. Now, apart from that, there was a weak performance that we have seen by all the peer companies, that is Reliance Industries, MRPL and Chennai Petro in the first quarter of FY26. For Reliance Industries, the O2C segment, which is the oil to chemical segment, that EBITDA dropped nearly 5% on a sequential basis. For MRPL, the GRMs were down 19% on a YY basis, and for Chennai Petro, the GRMs were down around 49% on a YY basis. So this weak performance coming in from the peer companies has also put pressure on the oil marketing companies' share prices. Now, apart from that, the Russian ban, uncertainty around the Russian crude is also one of the reasons, and this is owing to the renewed sanction on Russian crude exports by US, and this could cost the oil marketing companies, their cost of sourcing crude could increase by around $1 per barrel, and that could also have an impact on the earnings going forward. So that is one of the reasons. These are basically the reasons why oil marketing companies have been under pressure. But what are the key triggers or key positives going forward? Firstly is the LPG compensation. Now, there are multiple reports that the government could pay a part of the LPG subsidy for the oil marketing companies anytime soon. In fact, we spoke to IOCL management and they're expecting this subsidy to come in anytime in the second quarter of FY26. So that could be one of the key positives. When it comes to marketing margin, yes, they are down on a sequential basis, but the marketing margin that the oil marketing companies are currently earning of around 5 rupees per liter is still way higher than what the historical average was of around 2 rupees per liter over FY18 to FY25, what we have seen. Apart from that,
ban on Russian crude is still ambiguous. There's no clarity on this because yesterday's government statement clearly hints that there has been no curb on sourcing or procuring the Russian crude. So even going forward, oil marketing companies could procure Russian crude if it is available at a discount, and that could also lead to lower crude prices for the oil marketing companies. Apart from that, if you look at the valuations, they continue to remain at par or at discount. For IOCL, it is largely at par with its historical average. For BPCL, it is at par, and for HPCL, it is trading at a discount compared to its historical average. And lastly, if you look at the return potential for Indian Oil for OMCs at this point of time post the correction, IOCL has a return potential of 13%, BPCL of 17%, and HPCL close to around 12% from the current levels.
Right. Thank you so much, Somit, for all the details. Well, Avinash, let me come to you on this. I'll ask you this question. All these OMCs, is it time to buy, to wait, or to watch? Avinash, I think you're on mute.
Yeah, sorry. Varsha, I think it's clearly from a medium to long-term horizon, oil marketing companies definitely look pretty attractive. But I think if you look at the near-term challenge of rising crude prices, there could be some supply-side pressure and some margin pressure, for their GRMs. Longer term, I think we continue to be positive because both the automobile and the aviation pockets are growing quite rapidly. And definitely, I think the opportunity to grow is quite significant. So maybe, in the second half, you could see a good bounce back from these companies, specifically IOC, BPCL, where we have been quite constructive. So I think, from a long-term, slightly, 6 to 12-month kind of time frame, it would be a good decision to buy them when, the stocks are under pressure. But in the short term, I think don't expect any immediate upside from them.
Right. Thank you so much, Avinash, for that view. Vinay, how are charts looking, when it comes to IOCL, HPCL and BPCL?
Yeah, so all three are in a correction phase, but if I were to compare with each other, then BPCL looks the strongest because it is above the 50 and 200 days average, while IOC and HPCL are going a bit weaker. So BPCL looking strong, and it looks like that they are into a correction phase in an overall bullish trend. So no doubt we have seen a fall from the 315, almost 10% correction in the stock like BPCL, but the medium to long term charts are suggesting bullishness. This is just a short-term correction which is going on. The strong supports are placed around 300 odd levels, below which there is a strong 200 days average support placed around 300. 300 is the 200 days EMA support, so that is a very strong support. So relatively, chart of BPCL is looking much better than the HPCL and IOC, and it looks like that it is overall correction phase in the bullish trend.
Regards to where OMCs go, let's look at Azad Engineering. A strong set of numbers that the company has reported. Margin expansion is what you've seen, and that's what actually aided the profitability number as well. The stock is seeing strong gains. Anushi is with us to tell us more. Anushi, what are you picking up from the conference call as well? Because good commentary coming in there.
Absolutely, Hiral. So, we have seen a decent set of numbers, as flashing on the screen. Now, we've seen about a revenue uptick of 39%, which was aided by the energy segment as well as the aerospace and defense segment. In fact, if you look at the growth, that was led by the export mix, which is up over 39% as compared to the domestic growth of 15%. And margin expansion also on account of changes in inventories which have taken place has aided that expansion number that we are looking at. If you talk about the order book, that also exceeded the levels of 6,000 crores. This is as of the June 25 data that we are looking at. Now, the company does maintain its overall guidance, which is there, which is a growth of 25 to 30% for FY26. In fact, they're also expecting the current wallet share across customers to increase from 1 to 2% to 5%. Energy segment, the growth was driven by GTD's plant, which got operational in fourth quarter. So more growth coming in from that side. And of course, the company also talks about such capacity addition plans, wherein it is seeing that capacity at peak levels can create revenues of up to 1,000 crores. So that is something that we should be watching out for. And this is the overall picture for Azad Engineering.
Thank you so much, Anushi, for that. Before we go to Vinay and Avinash for an Azad Engineering, let's quickly just address the flashes at the bottom of your screens where the ET has been grilling Anil Ambani. What the sources are indicating, the few questions that he has been asked is, one, he has been asked to provide the statement on whether he or senior executives were aware of or involved in any irregularities. That's the first question that was being asked. Secondly, did you personally authorize or influence any decisions that were related to the loan misuse? That was the second question. Apart from that, if there were any deliberate defaults that were made with regards to where payments or repayments were concerned, despite having the capacity to pay. That's the other question that the sources are indicating that Anil Ambani was asked. Apart from that, if there were any kickbacks that were given to any bank officials or government employees. And very lastly, if there were any payments that were made to influence the loan approvals or disbursal timelines. So these have been few of the questions that have been asked by the ED to Anil Ambani in the in all of that is going right now in the probe, where he was called for questioning in Delhi. So these are few of the questions that we have been picking up from our sources, and we will try getting you more details from these details as well. But moving on, staying with all of the scrutiny now, SEBI has been mulling ways to reduce volumes in options trading. In fact, the SEBI committee is going to meet on the 19th of August to discuss key details on reducing volumes in the options market. If you pull up a BSE, let's see what the BSE stock is doing in trade, because we already had the flashes that were bottom of your screens. The stock is nearly at the day's lowest levels with cuts of 4.5% coming in there. But let's get in Charu to tell us more. Charu, what are you picking up? Because clearly, reduction in terms of volumes for options trading, an impact comes in on the exchanges, and that's the reaction that you're seeing on the stock price as well.
So the market regulator, Securities and Exchange Board of India, is currently looking at ways to reduce volume in option trading segment. Now, one of the ways in which they are trying to do it is to encourage activity in the cash market instead. Now, again, coming on to how they are planning on doing it is recommending to the Finance Ministry about how to, they can go about reducing the STT on cash market transactions. Apart from that, they are also, suggesting that the fortnightly or monthly expiries instead of weekly expiries can be brought in, which is leading to some of the impact on stock exchanges as we are seeing right now. Apart from this, there has also been recommendations to reduce margin requirement in cash market segment. Now, these are some of the changes that are being explored right now. Nothing is set in stone, but we also know that the SEBI committee, the Secondary Market Advisory Committee, SMAC, is also going to be meeting on August 19 to deliberate further on this issue and come out with some concrete details. So we'll keep the developments flowing. That's all we know for now.
Charu, stay with us, and thanks for that. So, would this mean the end of weekly expiries or not is the key question here. Let me quickly first go to Vinay to take his view. Vinay, what do you make out of this, the source-based story that my colleague is picking up? And secondly, what would you advise investors to then do with a BSE?
Yeah, so capital market index has performed significantly in the year 2024, and after long outperformance, this defense and capital market theme is fizzling out, and they have fallen into a consolidation or correction phase, and still they are going weak only. Stock like BSE, which is no doubt is still holding its uptrend on the positional chart, but the way it is forming a lower top, lower bottom, it looks like that it should extend the fall. So as of now, one should not accumulate these stocks in this particular capital market space, because they are still into a downtrend, short-term downtrend, and this fall can extend. So I would suggest investors and traders to wait for some more correction to come, and if they come at comfortable level or oversold scenario comes, then only one should look at for the going long opportunities. But as of now, they are looking weak on the charts, and one should avoid going long at this point of time.
Right. In fact, let me get in Avinash as well. Avinash, what do you make of this announcement? Or maybe I can't call it an announcement. It's more of a source-based story that we're picking up.
I think, Hiral, this decision or maybe this proposal to cut back the option kind of volumes is, I think, right from the beginning, the regulator wants to cut down the retail interest in these, financial instruments which are more risky. So I think, we'll have to wait and watch how the regulator does it. But typically, I think you cannot stop speculation beyond a particular level. So I think, traders who want to take the risk will still take the risk on the option side. And I think it would be a negative development, for the broking community, because a large part of their business currently gets generated, from the derivative volumes from the F&O side. So, you'll have to see what is the business impact of all this. But I think to increase the cash volumes, I think clearly that would be a kind of a long-term measure, because volumes on the cash side cannot increase dramatically in the short term. They take a little bit of time. It is news-based flows, basically, what kind of news flow is going in the market, particularly regarding any company or stock. So I think we'll have to wait and watch how this entire thing will be implemented. I think it's good to hear it, but how it gets implemented is going to be very crucial.
That view, Avinash. Well, thank you, Avinash and Vinay, for joining this conversation. Pleasure to have you. Well, moving on, time for an NDTV Profit exclusive. In the wake of the Jane Street controversy, SEBI plans to create a specialized division to investigate potential manipulation by high-frequency trading firms. Charu, who is still with us, have more details on that.
Hi, so as NDTV Profit reported this morning as well, the Securities and Exchange Board of India is mulling to, sort of create a group or a division of one of their most, qualified employees or officials to look into the manipulations caused by high-frequency trading firms. Now, this is going to be a department or a division in itself, and it is going to look into Jane Street issue at first or any other related party issues at first, but it is going to be having a more permanent position where they will be looking at such manipulations by foreign entities or HFT firms later on. This is going to be a group of people who are highly qualified and are going to be from different other departments of the regulator. Currently, we also know that due to the enhanced scrutiny that is on Jane Street, it is sitting on major trades, holding back from doing any major trades for now, and has also sought more time from the regulator to give their reply or response to the proceedings that are going on.
Okay, so that's with regards to the Jane Street fallout. Thank you so much, Aru, for getting us the details. In fact, let's get in Shrimi back with us as well with what's the latest that she's picking up on the entire Anil Ambani case where the ED probe is ongoing. Shrimi, over to you.
Yeah, as you can see right behind me, the entire camera units are gathered because the Anil Ambani is expected to come out any moment for a lunch break, and perhaps after a short lunch break of 30 to 40 minutes, the ED will resume the questioning. And some of the questions actually, he's been, asked, and the statement has been recorded is what we are gathering from insiders. And those questions related to that, were Anil Ambani or any senior, executives aware or involved in any kind of financial irregularities. That is something which was flagged during the investigation, that prompted the entire search operation. The second one, of course, that whether he was personally authorized or influenced any decision related to loan misuse. Now, again, the agency wanted to perhaps know that whether he was aware, he was involved in the entire, the way the illegally the loan was diverted to several shell firms. Third question, what we are picking up is on the part that whether there were a deliberate attempt to default when the company and all those companies who defaulted has capacity to pay is something he has been asked. He has been asked to give a proper sort of answer and reply to that. And the fourth one is with respect to the kickbacks and the quid pro quo with the Yes Bank, the 3,000 crore of loan between 2017 and 2019 is something we've been reporting about. And the other one, and the important one, in fact, that were any payments made to kind of influence all those loan approval which his company, ADAG group of companies, has got. Now, remember, the bankers have been, questioned on the amount and the loan which was sanctioned and dispersed to Anil Ambani group of companies. In fact, the ED has written to at least 12 to 13 banks. Total 20 banks has given, loans to all Anil Ambani group of company, and they are questioning that whether all the due diligence were followed by banks or not. Try to sort of understand whether there is any kickback sort of indication coming there or not. So these questions so far has been asked, and I'm told that the statements is getting recorded. The questioning is underway, and perhaps the questioning round will resume, and it will go for some time. So we are tracking that story closely, and we will see. Maybe the Anil Ambani may soon come out in some moment.
Update, Shrimi, we will be awaiting from you as well as soon as Anil Ambani comes out from the grilling session with the ED as well. But completely out of time, a wrap on this edition of Profit Buzzers from Varsha, the team that put the show together, and myself. Lots more lined up on the other side. All the small cap buzzers that you want to watch out for with Samit Sarkar. Please stay tuned.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियाँ आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
The world has changed since the RBI governor delivered a massive 50 basis points rate cut on June 6th. Should Sanjay Malhotra cut rates further before the festival season, or should he hold rates? The most comprehensive, insightful 360-degree coverage of the monetary policy with the best experts from 8 a.m. on August 6th, only on NDTV Profit.
हेलो, बोलिए मैडम। डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बात, खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो, बोलिए मैडम। डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे
Hello and welcome to NDTV Profit. You're watching Smallcap Buzzers. Now, I'm your host, Anu and with me is Samit Sarkar. But before we talk about the specific stocks action, let's also see how the small cap index is doing. And as usual, we have Hiral standing by to break that down for us.
Thank you so much, Anushi, for that. Let's quickly take a look at what's happening because your broader markets are mirroring what's happening in terms of benchmarks as well. If you pull up the small cap index in terms of BSE small cap, and if you look at the Nifty small cap 250 as well, you'll see the kind of mild recovery that happened from the day's lowest levels, but the pressure has continued. There you go. 0.3% lower in terms of the small cap index. And if you talk about this Nifty small cap 250 as well, similar kind of trends where you're nearly at the day's lows. But let's quickly look at individual company impact as well. On the back of earnings, broader market stocks which are reacting in trade, you have the likes of a Godfrey Phillip, 9% up move, strong set of numbers. Sarda's second consecutive session of gains on the back of a strong set of numbers, and a Triveni Turbine on the weakness is trading under pressure. Apart from that, you have a TBO Tech that has cooled off slightly, but the expectation is that going ahead, the quarter, the coming quarters will be better, so there could be buying interest that could be emerging on this one. Butterfly Gandhimati, strong set of numbers, and a Sanofi Consumer, strong set of numbers, 7 to 12% is the kind of up move that you are seeing. Another pack that is buzzing in trade is the fertilizer pack. No major news coming in there, but gains in the range of almost 2 to 6% on a Chambalfert fact as well as a RCF. Whereas the textile companies that have been trading under pressure, and probably this is taking concerns from the tariff war, they are seeing cuts to the range of almost around 4 to 8% in terms of where textile companies are concerned. PSP Projects is another one. You have Adani Group, which has gone ahead and increased stake in one of the small cap, 2.5% up move on this one, though the gains have been cooling off. Other stocks that are buzzing in trade, Prakash Industries, strong moves there. Newgen Software, Radico Khaitan also some bit of cooling off there, but good move seen on this one. And Tanla and Sangam India are a few of the other names from the broader markets which are buzzing in trade. So that's the overall picture that you're looking at in terms of individual stocks in terms of the broader markets. But I think one company that you guys are focusing on is Ather. Puneet, I think that's going to be an interesting conversation.
Well, definitely. Thanks so much for that, Hiral. And we've seen a stellar performance for the company compared on a year-on-year basis. Costs have gone down. The gross margins have also increased for the company. And, let's also pull up, from the day's highs, we have seen some selling on Ather Energy in this particular quarter. But let's also get in Tarun Mehta, who's the executive director at the company and co-founder, of course, of Ather Energy. Tarun, a very good afternoon to you. Thanks so much for joining in and welcome to NDTV Profit. Largely, let me start off first with the key question. You have reduced costs in this particular quarter. EBITDAs also, the losses have reduced. Do you expect that by this time next year, Q1 FY27, you will be able to be at EBITDA break-even levels at Ather Energy?
Right. So last quarter was a great quarter for us. Our new product, Ather is the family scooter. Sorry. Yeah, new product, the family scooter, landed really well. And I think that's the primary reason why revenue was up almost 80-90% over last year. And sales was up almost 100% over same time last year. So this product is really allowing us to expand into the entire length and breadth of the country. We've expanded our distribution almost 30-35% just in one quarter, just in Q1. And this trend we expect will continue for a few more quarters. Ather's had one of the smaller distributions. And with that alone, we were doing 14-15% market share. We can catch up a lot on distribution over the next few quarters. So we are forecasting a fair bit of growth potential on our distribution footprint, powered by this new scooter. So our unit economics is already at a good place, and expanding distribution should give us a fair bit of operating leverage. And that's what we expect will drive reducing losses over the coming quarters.
Sir, Soumit Sarkar also joining into the conversation. So on a sequential basis, if you look at your gross margins, they have expanded by nearly 300 basis points. Is there more room for expansion going forward, or gross margins would stabilize around the current levels?
I think the entire industry is at a fairly early stage, and there's a lot of cost reduction that continues to happen every quarter as we speak. For us, three strong factors in the recent quarters have been first, favorable commodities, particularly with lithium-ion cells. Second, strong results from value engineering. Our engineering teams have had a stellar record over the last few years in cost reduction, and that's continued in recent months also. And third is very strong sales of our software accessories. So that continues to trend really favorably. We're very close to the vast majority of our customers, almost 80-90% of our customers continue to buy software, which is a very high gross margin product for us. And despite the launch of a more mass market product, that trend hasn't really flagged off at all. So these three factors have contributed to strong trends. In the coming quarters for us, we expect material margins could get better because we are moving to cheaper chemistry cells, LFP versus NMC in lithium ion. So those we expect will help with margins. Value engineering will continue, and by next year we'll have a new platform, the EL scooter platform, which is a cost effect, which is lower cost platform. So we expect that will also help with margins.
Actually joining in as well, you just spoke about the EL platform that is coming. In fact, August is the date that we should be watching out for. Just want to get your sense in terms of further market share gains, particularly to the new launches also, which are anticipated, if you can talk about that.
So if you see our market share performance in markets where we have had strong distribution and strong product fit, for example, in South India, it has been around the 20-22% market share mark for a while now. In places like Gujarat, in recent quarters, we have seen a phenomenal result. In fact, last month, if I'm not wrong, I think we were number 1 in the state of Gujarat. We believe there is an opportunity for us to recreate a performance very similar to what we have achieved in South India and Gujarat, in many other parts of the country. And distribution would be the key enabling factor to do that this year. And the lower cost platform would be the big factor next year. I think we closed July with just under 16% market share, which seems to be a defensible position. And given the expanding distribution, we believe there is a few more points of gain that could be within sight in the coming quarters.
Tarun, just one question in terms of South India, because you have been number 1 in that market for a very long time, and you mentioned about store expansions in Middle India, as you call it. Specifically, those stores in South India, is it that the sales coming from there will be, give you higher gross margins because of lower discounts in those areas, or is it that the actual sale number is something that we should watch out for going forward for you?
Ather has never been, we've been never big fans of discounts right from day one. Even in the peak of discounting in our industry about 4 or 5 quarters ago, Ather stayed away from any real discount outside of 1-2% discount typically during festive, and that's going to be the strategy going ahead also. Obviously, newer markets will buy more lower end variants in the early years. But we have seen a very healthy. I think the number one direction for me here, from which I'm taking direction, is the sale of software. Our software sales across all geographies, across states, have been very, very strong, which I think is symbolic of the fact that Ather can sustain strong ASPs irrespective of the market. South, given that it's a large market, so old market is obviously one of the more profitable markets for us. But I think I think every market for us is quite lucrative and is becoming quite lucrative with every passing quarter.
Well, Tarun, just one final question from my side. You have raised money in this IPO for some capex on R&D, but also putting up a new factory, which will likely come in Maharashtra. So your capacity utilization has been hovering somewhere around 40% before the IPO. Just wanted to understand, will you still keep the factory that you had in Hosur, because that was, of course, on lease? So will that all the production eventually in the medium term move to the new factory that you're setting up?
We've already acquired roughly under 100 acres in Chhatrapati Sambhajinagar in Maharashtra, which is where installation of a new factory will commence very shortly with the IP proceeds. Currently, we intend to continue our production out of the Hosur facility in Tamil Nadu and also the new facility in Aurangabad. Utilization of a current factory is rising up really fast. As you saw in last quarter's performance, sales grew almost 100% over previous quarter. And at that time, we were at about 30-35% utilization. So you can see the trajectory. In fact, my number one worry right now is that would we hit peak capacity even before Aurangabad goes live? So team is running full steam ahead to make sure Aurangabad, Chhatrapati Sambhajinagar comes live by next year, so that we manage the demand really well.
Right. Lastly, Tarun, I know that the situation is evolving and it would be difficult for you to comment, but on rare earth magnet, I believe that Ather has actually done a very good job, and you have looked at alternative supplies and alternative materials in fact also, and you're not expecting an impact of more than a 1 week production, right? So it's quite positive that has come actually, the statement, right?
I would read this as positive in the current climate. Our engineering and supply chain teams have spent an enormous amount of time over the last few months to find alternates. And I've been publicly saying in the recent comments that I do believe the near-term solution for our industry would be to move away from heavy rare earths into light rare earths, while continuing to look at non-magnet-free motors in the long term. So our teams are working furiously in that direction, and I remain optimistic that the impact of the crisis should be limited to this quarter.
Well, thank you, Tarun. Thank you for joining us and explaining everything very rightly about Ather Energy. With that, let's go across to our next guest for the show, Prashant Tapse, Senior Vice President, Research Analyst with Mehta Equities. Prashant, any views on Ather Energy? The quarter looked quite strong here.
Yes, when we compare two companies in the EV market, it is Ola and Ather. So Ather numbers were far better than what Ola has presented a few months back. So market is assuming to see which stock can do better. So in terms of managing their cost, managing their losses, I think Ather has done really well. And the new product of Rista, I think that has really done very well in a lot of South Indian market, as well as entering into the middle market of India. So I think with respect to their margin management, with respect to their expansion and the product quality, so again, not giving any discount, these are the strategies why I think the numbers were really good, and I think the valuations are again going premium to what Ola is. So overall, very positive on the stock with a target of at least 440 to 500 for next 12 months from the current levels.
Okay, so that's the view that we are having for Ather Energy. But before we go to the next small cap and stock in focus, let me talk about Adani Ports, which is flashing on the screen below. Now, if you look at the numbers, now they did beat estimates. In fact, revenue is up over 31%. In fact, margins also at around 60.2% as compared to an estimate of 59.3%. And net profits are about a 6.5% of a growth. If you look at the FY26 guidance given, the company expects about 16 to 22% of an increase in revenues to 36,000 to 38,000 crore. EBITDA is expected to see about a 10 to 16% of a growth to 21 to 22,000 crore. And net debt to EBITDA levels, they have maintained up to the levels of 2.5 times if we are seeing. In other key operational metrics also, if you look at the FY26 scenario, port cargo volume is expected to see about a 12 to 14% of an increase, while trucking revenue is expected to see about 3 to 4 times of a rise, and marine revenue is expected to see about a 2 times of a rise. So Adani Ports flashing on the screen below. But with that, let's go to our next stock in focus, which is Butterfly Gandhimathi. Now the stock is buzzing in trade today, and this is on the back of its first quarter results that we are looking at. Mahima joins in with more details.
Right, so overall it's been a good quarter for Butterfly Gandhimathi in terms of Q1 key highlights. There's been a steady quarter, and this is amidst weak industry growth trends that we are seeing. Earnings were lower than what the street was expecting. However, slower than expected revenue and margin growth is on account of the overall demand trends. While industry demand trends remain subdued, its focus is on margin turnaround, and that remains intact even in the commentary given by the management. In terms of the overall numbers, revenue is up 3%, EBITDA up around 50-odd%. Margins came in at 7% versus 4.8%. Net profit has seen a good growth of around 150-odd%. In terms of other highlights, the focus on premiumization of portfolio, pricing and cost optimization will lead to margin expansion is what the company believes, plus growth for mixers, grinders, pressure cookers with improved market share and traction across channels is being seen. And lastly, in terms of gross margins, they're healthy at 41% on pricing action and product mix. Lastly, in terms of the valuations, Crompton, which holds 75% in Butterfly Gandhimathi, is trading at a valuation of 28 times forward 27 estimates.
Right, Prashant, any views on Butterfly Gandhimathi? The number looked quite strong in this subdued environment.
Yes, despite having so high competitive industries, I think the numbers were really good. So that is why the stock is rewarding to the price action at 7% absolute. Again, margin improvement of almost like 100 to 150 basis point on YoY basis is really appreciable. That is a surprise for the stock today. But again, valuation I think still little bit of expensive when we compare with the Crompton, which is holding the stock. Despite having a expensive valuation, I think one should have a very positive outlook on a long-term basis, at least for a 10 to 50% growth from the current levels.
Okay, so that's the view that we are seeing for this counter. But also let's address AGI Infra now. This is another counter which is buzzing in trade today, and this is on the back of a recent couple of updates that we are looking at. The latest one being that the board has approved a 1:5 of a stock split, and the record date would be decided after a nod from the shareholders' approval on the same. But this is not the first time that the board has declared a stock split. In fact, if you look at December 24 also, they had announced a 1:2 of a stock split earlier as well. Nuvama also has a bullish note on this counter, wherein they've initiated a buy call in the month of July, and this is with the target price of 1,448 that we are looking at. It believes that it is one of the organized real estate players having an edge in Punjab's micro markets over there, which is currently underserved. Other than that, they're seeing about a pre-sales CAGR growth of 13% in the years between FY26 to 30, and they have a strong launch pipeline which adds up to about 5,120 crore, considering it has a land bank of 9.8 million square feet. Along with that, even if you look at the cash flow positioning, they expect the surplus to continue at around 1,506 crore. This would be aided by strong collection growth going forward. Just a little bit about the company. It is a real estate developer in Punjab, is what we are seeing. It has delivered over 10 projects and has covered total saleable area of so far of 8.9 million square. So far, if you look at the stock's performance, it has seen about a 9% of an uptick in terms of this last one or odd month. So, and if you look at the last 6 months, it has seen about a 22% of an uptick. In terms of the pre-sales also, while FY23 and FY24, we have seen this number going down from 667 to 500 crore of pre-sales to 366 crore at the end of FY25. But as stated by the Nuvama note, they're bullish in terms of how the FY26 is going to shape up for the business. Net debt to equity also remains on the healthier side. From FY23, there were almost zero net debt to equity is what we are seeing, which has now moved upwards to the 0.4 times of level is what we are seeing. So this is the overall picture that we are building for this stock. But Prashant, let me come to you on AGI Infra. What's your view on this counter?
Despite being a small cap company with a market cap of almost 2,600, but valuations are still very expensive, which is trading almost 40 times the PE and even price to book valuations of almost 9 times. So which says because of its unique business model which is spread in Punjab, and there are no other branded players present in the location, so it is giving this kind of company a premium valuation. But again, for a fresh new entry in the stock, there should be a wait and watch approach going forward. But again, the sector looks really good, and if there are no branded players in the same location, this company will really have a very premium valuations going forward. So overall, the target would be around 1,250 for next 6 months.
Okay, so that's the target that we are seeing for AGI Infra. Do keep that one on your radar. The next stock in focus is GPT Infra Projects. Now, what we are seeing over here is the first quarter numbers being in focus. Now, they've seen about a 29% of an uptick in terms of where the revenue is concerned, while margins have seen about a decline to 11.8% as compared to 13.3%, while net profits saw about a 40% of a growth. Now, if you look at the revenue growth, that was mainly led by the infrastructure segment, and net profit also, despite margin contraction, net profit growth was aided by higher other income as well as lower finance costs. But higher construction cost in the quarter impacted the margins that we are looking at for GPT Infra Projects. The stock still buzzing in trade today. In fact, let's also see the order book positioning. In the last 3 years or so, they have maintained their order book at the likes of 3,000 to 3,400 crore of a positioning. So that is what we are seeing. In terms of revenue mix also, it has about 97% of its revenue come from the infrastructure segment, while 3% of their revenue comes from concrete sleepers. So this is the overall picture that we are seeing for this counter. Prashant, your view on this?
Very positive. A small cap company which has almost 2.8x visibility in terms of order book when compared with the last year's sales. Even valuations are very much decent, which is trading almost like 15 times the forward earnings and even price to book value of almost 2.5 times. So infrastructure project, we are very much bullish, and I think a lot of growth can come into small cap and mid cap infrastructure projects, and GPT is doing really great in terms of, despite having a margin pressure, I think that can be a cyclical, but overall picture for next 1 year, I think GPT can deliver you at least 15-20% return on equity from the current levels.
Another stock that remains in focus is Deep Industries. The stock is up 20% in the last 5 trading sessions. Yesterday, the company reported its numbers. What are the key takeaways coming in? Let's get in Vansh with more details.
The stock is up on the back of the Q1 earnings that the stock has reported. Now the earnings have been strong, the EBITDA growth has been driven by the revenue, and the company has reported the highest ever revenue growth of 62%. How the margins have remained flat for the company and the net profit is up by 75%. If we talk about the numbers, the revenue is up 62% at 200 odd crores versus 123 odd crores. EBITDA is up 61% at 82 odd crores versus 51 odd crores. And the margins are flat at 41%. And the net profit is up 59% at 59 odd crores versus 37 crores. If we talk about some of the recent order wins for the company received orders worth rupees 97 odd crores from Oil India on 2nd of August and orders worth rupees 45 crores from Oil India on 26th of June. If we talk about the total order book for the company stands at 3,000 odd crores as of August 2025. And also if we talk about some operational details, company received a 15-year contract worth rupees 1,400 odd crores from ONGC back in September 2024, and the ground level operations for the same has been started in April 2025. The company expects substantial EBITDA margins from this contract. So clearly the strong numbers with robust order book is what the market is penciling in for this counter.
Well, that was the view coming in on Deep Industries. Well, thank you, Prashant, for joining us and giving us your perspective on the stocks that we discussed. With that, it's a wrap on this edition of Smallcap Buzzers. Stay tuned and keep watching NDTV Profit.
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज़ हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की ज़रूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशिता ही ऐसे बॉय मिलते मुंबई में, चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
The world has changed since the RBI governor delivered a massive 50 basis points rate cut on June 6th. Should Sanjay Malhotra cut rates further before the festival season, or should he hold rates? The most comprehensive, insightful 360-degree coverage of the monetary policy with the best experts from 8 a.m. on August 6th, only on NDTV Profit.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock.
Thanks for tuning in to India Market Close right here on NDTV Profit. And it's a day which is, you could argue, quiet and low. There's no other way to describe this. So it's been about 0.4% lower. Nifty Bank about 0.6, Nifty IT about 0.7. So there are those pockets which are correcting in trade. But if you look at the larger picture and if you pull out the heat map, you will see that there are some which are trying to counter this as well. So in some sense, consumption has come back today. And let's pull up individual stocks. So between Titan, Trent, Mahindra and Mahindra, Hero MotoCorp and Maruti, you have some of the auto and consumption names. Let's pull up the names individually. And all of these seem to be doing well for themselves in the session today. No, can we just have the individual names? So let's get Titan, up about 2.5%. Let's get Trent. Let's get Maruti. Let's get Mahindra and Mahindra. Those are the names that are doing really well in trade on the upside. On the downside, like I said, IT and banking are correcting, and Bank Nifty is down despite IndusInd Bank, which is a low weight, of course, being up about 1.8% or thereabouts. So Nifty Bank down about 0.65%. IndusInd doing okay, but off the highs of the day for sure. The broader end of the spectrum, a degree of losers really. So results impact being felt on Triveni Turbine, so that is down about 7% in trade. There is weakness in Bombay Stock Exchange or the BSE stock, and that's stemming from the fact that there is talk of how the weekly options expiry might change. There is one of the media outlets which has posted that story, as a result of which BSE is corrected quite strongly in the session today. Some weakness in stocks like Piramal Enterprises as well, which is down about 3.5%, as well as Swiggy, which is down about 3.5% in trade. On the gaining side, again, not too many gainers, and you know, this is despite the fact that the Nifty 100 is down just about 0.45%. So it's not that there are sharp losses at the broader end of the spectrum, but there are individual pockets of strength really. Azad Engineering on the results has done reasonably okay. The new kid on the block, which is Aditya Infotech, has actually done very well. Newgen Software is up about 11%. Godfrey Phillips is up about 10%. And fertilizers as a bucket is having a really good day in trade. Starting with Chambal, but not restricted to that, because fertilizers and chemicals, Travancore or Fact has done very well. Coromandel is up about 3%. So that bucket is doing rather well for itself. So that's the long and short of what's happening in the markets in the session today. What we will do is we'll try and get in the management of Escorts going in just moments from now. But before we get in the company, let's get in my colleague Puneet to talk about the numbers of Escorts and the trends thereof. Because Puneet, I think there is lots to be taken home from the results that Escorts has given. versus what the industry-wide picture has been like, right?
Well, definitely. And with Mahindra on one side steadily growing from last year, we've seen that expectations and build-up of Escorts to have some kind of growth in this year. While Q1 might not show that, it's visible in sales but not visible in the financials yet. So I think that's one of the couple of points. Management is expecting that for the industry, they are anticipating high single-digit growth. Will they be able to actually grow higher than the industry or maintain that share? I think that will be one of the first things that we'll be, quizzing the management on. Apart from that, we'll also see that the margin guidance. Management had said that 12 to 12.5% is something that they are banking on to maintain this year. That will be the other aspect apart from the larger industry as well. So we've seen, the share price largely flat. Let's also look at the one-year chart of Escorts and you will know the story, because for Mahindra, of course, the comparison is that the passenger vehicle space has been doing well, but for Escorts, the tractor segment has been weakening over the last year and there's been some market share loss there. That's going to be one of the key aspects, Neeraj, at least from this results as well. But, let's also welcome in Mr. Bharat Madan, who's the whole-time director and chief financial officer at Escorts Kubota. Mr. Madan, a very good afternoon to you and thanks so much for joining in. In terms of the market and the industry, I just wanted to first start off with that. Are you anticipating to see that it will be a year where we'll have some high single-digit growth, because the base here was largely soft last year for the industry as a whole? What is your expectations for the industry for FY26 as well as for Escorts?
Yeah, so I think if you look at our guidance for this year, we have given the guidance for the industry to grow from mid single digit. It will be anywhere between 5 to 7%. And the reason we said is that because if you look at the last few months, I think 8 to 10 months, the growth started coming in the rural side from September last year. So the second half of last year, obviously the base has already grown because they grew 15% last year too. So obviously if you come to this second half of this year, the base will already be high. So first half we've seen the growth now in the first 4 months, we've seen 8-9% growth happening in the industry. But for the second half to sustain the similar growth will be a bit difficult. Now, that's also one of the reasons. If you look at the growth skewness, it's been more towards the southern investment market, which has grown almost 19% year on year. Compared to that, the markets in north and central India, where Escorts has a stronger brand and market share, have grown only 0.5%. So given that geographical mixed issue, so we obviously had some problem in the past few months. But now going forward, I think as you enter the second half, and the growth momentum in the south investment market will slightly slow down. We expect it will get balanced out. So overall, the industry may still show a growth of 5 to 7%, but yes, it will not be that skewed to the south and west as it was in the last 8 to 10 months.
Mr. Madan, when I think of what people are talking about when it comes to the positives for the quarter, this is Neeraj here, of course. Good afternoon. The third consecutive quarter of sustained margin improvement in the agri segment, and that is being looked up as well. I believe some parts of your commentary for the quarters ahead is looked up as well. To your mind, what was the one key positive that came out of this quarter? It could be something that has happened for 2-3 quarters and has continued in this quarter. And what was that one thing that you felt was the sore spot for your company in the Q1?
If you look at the margin for the last quarter, the reasons for improvement are two. One, obviously, the price increase what we had taken in the first quarter from 1st of May, and the tractor space especially. And second was the softness which has been continuing in the commodity prices for last few quarters. So we're not seeing the aggression. I think it's only in one of the 4 quarters last year we saw some hardening had happened. Otherwise, in 3 quarters last year, we had actually seen the commodity prices continue to soften. Same thing we saw in the first quarter also, where we got a benefit of the soft commodity prices, which leads to some improvement in the reduction in the material cost. Obviously, going forward, as we mentioned in our commentary also, there's been some pressure now we're seeing, because normally we pass on the material cost increases with the lag of a quarter. The last quarter we've seen some metal prices have hardened up, which will have some minor impact in the second quarter margin, which obviously we try to offset with the other cost reduction initiative. But that can have some temporary impact. The pricing benefit will mostly sustain the balance of the year also. So I think from margin front, we had given a guidance it will be somewhere between 12 to 12.5%, and last quarter was 13.1%. So if I think the numbers continue to be the way they are, the way we expecting the industry to perform, we think we should be able to hold on to the margin level, and 12 to 12.5% will be improvement over last year still.
Okay, so you're saying that you could well nudge the whole time or annual number of 13% as well if things hold up well. I mean, or 12.5 seems to be a decent fighting chance.
It will depend on the commodity prices.
Of course.
In the balance 2 quarters, obviously, if they remain soft, then it's possible you can also hit 13%.
Got it.
I won't be surprised.
Just one other question is, and that is when it comes to revenues and whether pricing in exports is better, because I think you've reaffirmed on the con call that you would do what 25% export growth in line with the industry standards. Would that be a fair assessment?
Industry will not grow 25% on export. Our exports have been higher because our the base is very low. If you look at last quarter, we grown 80% on export because of the very low base for the last year. But now we come to a situation where our average export every month is happening in the range of 500 to 600 tractors a month. And that number will continue. So that will virtually translate into 30%, 25% growth over last year export numbers. On the margin front, export obviously is better because the rupee has depreciated. So that's a benefit which is obviously been echoing. So today the export margins are even better than domestic margins.
Mr. Madan, you mentioned, at the start of this conversation that West as well as South markets have done well last year. And is that the larger reason that the base effect could play in for this year, that we could see, low to mid single digit growth in those markets? And is that the subsequent reason that you're seeing growth in the northern markets where you are, of course, one of the major players? Is that one of the key reasons that you're looking at?
So there are 2-3 reasons. One, obviously, the reason what you mentioned is the base for the last year is already high in those markets. So we don't expect the similar double-digit growth will happen in those markets going forward, especially in the second half. Second is the gaps which we had in our product portfolio, which are not really catering to the paddy market. So we are going to introduce new product portfolio now in September, October, which will be essentially meant for the paddy market. The entire wetland series which is getting launched. So if you look at the portfolio of products in the last few months, so in all the brands we introduced a new product now, which was actually filling the gap. So with this introduction of this wetland series, we'll have almost 85% to 90% product application coverage on a pan-India basis across both PowerTrack as well as FarmTrack brand. In Kubota brand, we are still some bit short. We are present in a very limited segment right now, but there the launches will happen maybe in the years coming forward. So in the next 2 years, we'll see more launches coming in that brand too.
And just one question from my side, Mr. Madan, you mentioned about launches. So the Pro Max is something that you've launched that's doing well. You mentioned Kubota, you are looking to fill some gaps. You've launched one of the key products there in the 41 to 50 horsepower category. So that point is also well taken. Your point on South as well as West is also taken. But apart from that, what is leading and giving you confidence of growth in the northern markets? Because in terms of the environment, nothing materially has changed. What are you currently seeing in the ground? And please correct me if I'm wrong on that aspect.
No, one, obviously the monsoon has been above average, so we've seen a very good distribution in the northern and central Indian market. So that's one trigger which will happen. So we'll have a very good Kharif harvest this year. And I think the variables on the rural side are positive as of now. So including the higher MSPs and the good purchasing power in the hands of the farmer. So that we feel should actually drive the demand going forward. So the only, I think, the headwind which we see and which is still not really clear is in the emission norm, changes, which was supposed to happen from 1st April 2026. Now, if that really gets implemented, then you can also see a lot of rebuying demand coming up in the last quarter. Even though the industry has represented to the government and to the ministry to defer those norms. So let's see, we're expecting more clarity on this to emerge, in this month in August. That's what the ministry has promised us.
And Mr. Madan, you've spoken that about the demand and the industry. I think from a growth standpoint, what is the current capacity utilization you are at? Because you're also looking to put up a new plant. I think it's coming in Uttar Pradesh. What is the current capacity utilization and what is the timeline? Would it be that by somewhere around the next 2 to 3 years we'll see the new plant come in and be ready as well?
So our current capacity is about 170,000 tractors, and we are doing about 120 to 125,000 tractors a year. So it's still about 70% utilization levels are there, and there's also a scope to further increase the existing capacity to take it to a level of 200,000 easily with some balancing, which we'll intend to do. So from demand perspective, capacity perspective, we don't see there'll be any issue in terms of meeting demand at the next 2, 3 or 4 years. Obviously, unless the demand really goes very, very high, then we can obviously look at expediting the whole setting up of the greenfield facility. Otherwise, we think the existing facility can very well address the requirement for next 2-3 years easily. And by the time we expect the greenfield facility should come up in the first phase.
And Mr. Madan, what's giving you confidence in terms of the export market? While the base effect is also very favorable for you, and the numbers slightly smaller. In which kind of markets are you currently selling? Is it that the African markets, or is it that you're also selling in developed markets? Because the competition is one of the key aspects in both those areas. So how are you trying to counter that, and what is currently on the ground that you're seeing in these export markets?
Major exports are happening to the European market, and it's a developed market essentially, and we are selling there mostly through Kubota network. So if you look at our last quarter export, also almost 52% exports were through the Kubota network, and that's where I think Kubota is quite strong, especially the compact tractor which are being exported from India. So there's a larger market in the developed countries for those compact markets, but most of the developed market are for higher horsepower segment. So the lower horsepower is not really very their strength. So that really gets scattered from the Indian markets. But we are also exporting to neighboring countries like SAARC nations or Sri Lanka. We are also exporting to Mexico, to South Africa. So those are also the countries which are, we are catering to right now. We export to almost 80 countries from India. So I think the exports will continue to do well. Yes, the last market I think will enter probably with the North American, which is essentially the US market. So that's still we don't have the portfolio ready for that market. And that's where we are banking on the greenfield project, where we can also start exporting to US market in the long run.
Got it. Mr. Madan, we wish you all the best for all of this and more. Thank you so much for taking the time out and speaking to us today.
Thank you very much.
That's Escorts Kubota with their view. Exports will grow well. Margin expansion has happened, but difficult to predict whether this will sustain. It could depend a lot, or it will depend a lot on commodity prices. They are hopeful that they might do about 13%, but remains to be seen. Okay, thank Puneet as well for joining in on this conversation. Really appreciate. Well, so that's with regards to Escorts. Now let's move on to other pieces. First, Global Spirits is in focus on the back of the Q1 earnings, which missed street estimates, and it has impacted the stock. Let's get in Mahima with more details on this one. Mahima.
Yes, so Global Spirits is in focus, and this is on the back of its earnings, and the earnings did disappoint the street because it was lower than what the street was expecting, both in terms of the top line growth as well as volume growth. The bulk, that is ethanol and ENA volumes, declined contrary to what was expected, and regular and other segments faced headwinds in Delhi as well as Haryana due to policy changes. Now, policy shift in Delhi affected the final month of the quarter is something that has impacted the top line overall as well. The revenue was up 9%, net profit was up 13%. EBITDA saw growth of around 20% and margins are at 9% versus that of 8%. In terms of other highlights, capacity utilization is stood at around 81%, which is improved in fact this quarter. Bulk alcohol sales up 11%, and prestige and above category saw growth of around 36% quarter on quarter. In terms of state updates with regards to where Global Spirit stands, Delhi liquor policy extended till March 2026. Business will now be as usual there, and UP continues to progress well, and other states' performance is in line with what the expectations are. So this is everything with regards to where Global Spirit stands, and of course its Q1 earnings.
Okay, that's with regards to Global Spirits. The other thing, I mean, when we just think of what some of the consumer plays, and I don't know if I can call Godfrey Phillips a consumer play, but let's assume I can. In some sense, it's consumption. Godfrey Phillips has been the real big shining star today, up about 9.8%, and something that Mahima had told us about earlier. I think the other pocket to keep in mind is what's happening with the fertilizer stocks. Chambal fertilizers up 6%. There is Fact, which is up about 3.5%. Off the highs of the day, I believe, fertilizers and chemicals, Travancore. Yes, marginally off the highs of the day, but still doing okay. And Coromandel too had a fairly decent outing. So mind you, the catch out here is the kind of volumes that some of these stocks are trading with. Okay, more news and updates. The Indian IT industry is undergoing a fundamental transformation driven by AI integration, reversing the growth and hiring surge seen during the COVID period. Recently, several companies have announced job cuts, citing AI-driven automation and efficiency as the key factors reshaping how IT companies scale and operate. Before we get in, Sumit Pokharna from Kotak Securities to discuss AI's future impact has also maybe getting a word on telecom. Let's hear it from my colleague Hiral on how the AI wave is currently impacting this space. Hiral.
Thank you so much. Clearly, you know, it's AI which is hijacking the IT jobs market, and that's what is evident so far. So the key questions we're asking is AI actually killing employment and growth? That is one of the key things that you're looking at. Secondly, Indian IT industry is probably undergoing a structural shift post-AI, and because of which, if you talk about the hiring and growth surge that was seen during COVID, that has probably reversed as well. Now, the last thing is this AI-led efficiency and project efficiency that is changing how IT giants scale from here on or not. To look at all of this, let's quickly look at the hiring trends as well. The boom has been fizzling out in an AI era in India. If you talk about the pre-AI era, if you know, versus COVID to post-AI, TCS, which had added almost 70,000 plus employees, it boomed to almost 1.7 lakh employees between FY20 to 22, that's COVID area, and then from FY22 to 25, it's added only around 15,700 employees. Similar is the trend with Wipro as well, where you did see a boom to the tune of almost 60 to 61,000 employees in FY20 to 22 during COVID, and now in fact they've gone down and slipped by around 2,800 employees. And with regards to Infosys as well, which is known for its hiring trends, around 34,000 employees were added then. During COVID, around 85 to 86,000 employees were added in that phase. And now post-AI coming in, you just have a 9,500 kind of an addition that has come in. So this is clearly telling you that there has been a slow movement in terms of additions. And Infosys, which was one of the hirers, has been actually looking out. Now, similar trend has been seen even with global players like Accenture and Cognizant, which you can clearly see the kind of boom that came in during COVID, 2.3 lakh employees that were added during COVID for Accenture. Cognizant was around 62,800. The way it has come down, where in terms of Cognizant, it's actually reducing to the tune of almost 11,500 employees. So that's the trend that you're picking up in terms of where hiring goes. Now let's look at attrition. What has happened to attrition is that in pre-COVID period, attrition has inched higher. And that's the trend from 10.5 in FY17. If you look at the first period, it's gone up to 11.3 for a TCS. Similarly, from 15% for a Infosys, it's gone up to 20.4%. Whereas for a Wipro, from 16.3, it's gone up to 17.6%. And this is in pre-COVID period. If you look at the COVID era as well, let's quickly look at that attrition profile. It actually went up again from 12.1 to 17.4. For Infosys, it's actually jumped to around 27.7 in FY22, and for Wipro, it's jumped to around 23.3 from a 14.7. And lastly, if you see in terms of the next attribute as well, maximum employee churn has come in FY23, whereas 24 and 25 have shown some signs of stability as well, and that's what is indicated in terms of where the numbers go. Very lastly, if you see in terms of the growth profile, Infosys and Wipro has the highest churn, that is indicating volatile workforces from here on. Next, if you see, the attrition has dropped by around 600 to 800 basis points across firms by FY25, which has mainly been aided by hiring freezes and cautious outlook. And if you talk about the revenue growth, that is also mirroring, because if you talk about the constant currency revenue growth, that has been slowing down. From FY17 to 19, pretty much, I mean, that range has been increasing for companies. But if you see the COVID area, that's the time you've started to see some bit of softness. It was only FY22 where all the companies saw a good boom. But post that, the moment AI has come in, if you talk about the growth trajectory, you can see the charts clearly dwindling. So that's the kind of trend that you're picking up, where you're saying that with AI coming in, your workforce is going down, but growth is also being impacted.
Okay. Hiral, thanks. That's comprehensive. And let's get in Sumit Pokharna. He's VP of Fundamental Research at Kotak Securities, joins us on the show to talk about how he thinks about this as well. Sumit, good having you. Thanks for joining in. And you know, this becomes the key talking point simply because of the kind of corrective moves that we've seen in the IT index, right? Over the last 1 month, what's it, about over 10%, sulking in trade today as well. Somebody made a point recently, Sumit, that a shrinking workforce need not mean shrinking business for Indian IT. And they could recoup this even with a lower workforce because of automation. Could that be true?
Thanks for inviting me. What you said is right because every company or client is looking for productivity gains right now, and AI is helping them. All companies are open to try AI to improve their productivity. But still, we are at the exploration stage for the time being, so far AI is concerned. We have not yet, none of the Indian IT companies have got a big order purely based on AI. It's just supplementing the existing work. So a lot of efficiency, accuracy, hallucinations, all those things is yet to be clarified whether AI can take care of that. So as I mentioned earlier, we are at the exploration stage. Now coming to the attrition, hiring trends and all that, I will give a bigger weightage for this to be two factors. First, the macro environment is not that conducive. Why is it so? We all know because of tariff war. Plus, the discretionary demand is not picking up because of the multiple reasons. Now, when we are comparing it with COVID period, I believe it's not a right apple-to-apple comparison because during COVID period, the demand surged like anything. We should not expect that to continue for very long. Secondly, the hiring happened very high during that time period. So law of averages playing out at this point in time. So what we are seeing is that macro environment is not conducive, which is impacting the IT more, just not AI, because we have not seen any major order coming to any Indian IT service company purely based on AI.
That's true. That's true. But so therefore, would you believe? So here's my question again. I'm just trying to understand this. That let's assume over the next 12 months, we see a number of IT companies losing some of the legacy business, losing some of the workforce, but winning AI orders, becoming enablers to AI. Could that impact the multiples and thereby the prices for the better or for the worse as they move in this transition period?
Right. So at this point of view, look, valuations have already corrected a lot.
Okay.
So if you look at a free cash flow yield and other things, I think large caps are available. Most of the large caps are available at very attractive prices. But macros, we need to still wait and watch how the tariff war continues, because you just need to understand how the client is thinking at this point in time. He is delaying his decision making to spend on IT because of uncertainty. Nobody likes uncertainty. Today he commits a big project and start investing or doing capex on IT, but suddenly macro changes, government policy changes that may impact him. So he is also taking its own time or deferring his major capex. He is just focusing on core modernization rather than looking at discretionary spending and all that. So definitely there is demand for new technologies like cloud, AI, and ML. But your all engines of the system are not working at this point. So that is why we are seeing subdued growth in most of the IT companies. As you have been continuously highlighting about the lower employment and all that, I would like to highlight that Indian IT companies have hired in Q1 almost 12,000 employees, roughly around. I'm talking about top tier 1 companies. So if you compare it with the last quarter of this previous year, then we have seen a decline there. So there's some addition is happening. So what has happened at this point in time, there is a change. There is a in the revenue model. Earlier we used to project based on the number of employees and you can project the revenue. But that model is not working at this point in time because everybody needs to upskill. If you're not upskilling, you cannot meet the current demands. And then there is a pressure of layoffs. So it's a mismatch between the demand which is there and the supply. If employees are upgrading themselves or upskilling them, then there is a lot of demand for, if you know generative AI, you know the latest technologies.
Got it. Okay. Sumit, out of time completely because we have to hit a commercial break, but thank you for joining us with these insights. Really appreciate your time.
Thank you.
Well, it's time for a quick break, but as we leave you, as we take that break rather, an important word from Ashwini Agarwal, founder and partner at Demeter Advisors. Here's what he had to say about the prevalence of market uncertainty and how difficult it is to measure risk reward. Listen in, we'll be right back.
there are a lot of events which are shaping up the market. So on the downside, I mean, you have a very weak earnings season playing through. You have, all the noise on the tariffs that is roiling the market sentiment. And lastly, you have a huge amount of paper supply via the IPO and offers for sale that are going on a day-to-day basis. So, there's really all the three factors hitting the market. And on the upside, I mean, one hopes that, what RBI has done by way of improving the liquidity, and there is surplus liquidity of 4 lakh crores in the banking system, what they've done on interest rates, and apparently another 25 basis points might be on the annual. That might help demand with a lag as the year progresses, but that's just a hope. I mean, as of now, there are no signs that consumer demand is anything to write home about. So yes, it's a very, very challenging situation, both on the downside and on the upside. My sense is that, the correction that we have seen in the last 3 to 4 weeks probably limits downside to not more than 5% from here. But I'm just kind of sticking my neck out, and it could be a lot more. Who knows? Depends a lot on how the US does from here.
So Ashwini, okay, that's an interesting one. So are you saying that if the US, you're saying the US as a nation, what it does to tariffs, or what do US markets do per se?
How do the US economic data points read out, and how does the US market react to that? Because we are starting to see some weakness in the US economy. The markets have been very, very strong till now, but will this continue or not is the real question.
Ashwini, hi, Tamanna here.
Morning, Tamanna.
Do you think that there is a bit of a thick skin that Indian markets now have to all of the Trumpness coming out every morning? Sorry, I'm trying to find more words to describe what we're seeing. Or do you think that we're underplaying the impact of what he's saying? When we had a commentary this morning from one of our experts saying that his bark is worse than his bite. I mean, can we really safely say that?
I have no idea. I mean, I wouldn't want to hazard a guess as to what happens on the policy front, whether in the US or here. But what I would say is that, exports to the US at the end of the day are 2% of the GDP. Even if you take a big haircut there, I mean, does it really sink India or Indian GDP? The answer is probably not. Yes, from a headline perspective and from an export earnings perspective, it could be a little bit of a challenging period. But, we'll have to weather the storm. I mean, it's up to the Indian policymakers to decide, and for the US to decide what each country will do. We as market participants will have to just kind of muddle through. That's how I see it. At this point. So, the policy front, I'm not so bothered about, to be honest with you. I think the real question which I'm struggling with is that why is demand in India so weak? I mean, we've had now, 6 months of concerted push from the government on government capex. We've had better liquidity, we've had better rates. If you read through the commentaries from the banks and from the lenders, they seem to be positive about asset quality, especially in the microfinance space. In a quarter or two, they expect things to turn around quite smartly, but the market doesn't seem to buy that narrative. And all indications of demand are very soft. And to me, that is a real worry. The world has changed since the RBI governor delivered a massive 50 basis points rate cut on June 6th. Should Sanjay Malhotra cut rates further before the festival season, or should he hold rates? The most comprehensive, insightful 360-degree coverage of the monetary policy with the best experts from 8 a.m. on August 6th, only on NDTV Profit.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है.
मैडम एक बार को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims?
Back with India Market Close right here on NDTV Profit. It's slightly beyond the time of the show when we do this, but I'm sure a lot of you are waiting for that. So let's get that. Actually, just before I get in sorry, I know. Be quiet. Before we talk about what's being heard on the street, I just need to mark MTAR Tech simply because the numbers are looking very, very robust. So just look at those numbers. EBITDA up 71% at 28.3 crores. Margins at 18.1 versus 12.9. So something's gone right for MTAR Tech. In fact, a lot of things seem to have gone right for that stock because it's really doing well. It's really done well in the quarter as well. 10.8 versus 4.4. Maybe we'll try and get the management as well in a bit. But let's now get in Somit to talk about what is it that he is hearing in the dealing rooms. Somit, what's the chatter today?
Well, multiple stocks actually are in focus. Firstly, it's Pidilite and Godrej Consumer, where dealers are indicating that there are large sell flows on large HNI desk ahead of the Q1 numbers. For Oracle Finance and SRF, dealers are indicating that there are buy flows on FI desk at lower levels in trade today. For Cummins, dealers indicate that there are buy flows at lower levels. Now, do remember that Cummins, a parent company, the global company, will be reporting its numbers today post-market, and Cummins India will report its numbers on August 7th. So keep an eye out for Cummins as well. For Onum India, there are buy flows on DI desk in trade today, and dealers are also indicating that the Q1 numbers are expected to be strong for Onum India. That stock is up around 3.5% in trade. And lastly, multiple cash stocks that remain in focus: TVZ, Sheela Foam and EPAC Durables. All these three stocks in cash segment dealers are indicating that there are buy flows on HNI and PMS desk in trade today. So keep an eye out for these three counters as well.
Sorry, did you mention PI Industries or did you mention Pidilite?
PI Industries.
PI Industries.
Yes.
Okay, so that's the one name to keep an eye out for. Certainly. Okay, down about 0.74% and sell flows on large HNI desks ahead of the Q1 numbers on both PI as well as Godrej Consumer. Sumit, thanks so much for that. So those are some names to keep an eye out for. Actually, Kush Bora and Nirav Ashar are with us, and let me ask Kush about some of the stocks that Sumit pointed out before we talk about the market-wide performance. Kush, sell flows being seen on PI Industries for sure, a few other names as well, GCPL too maybe, but PI in particular, or any of the other stocks that you heard Somit speak about?
Hi, Neeraj. First, very good afternoon. Hi, Neeraj. No, very clearly, PI Industries, was actually showing an uptrend. There was a breakout that was attempted, but that's given way. Volumes aren't particularly high, so I'll take heart from that. Stock also taking support near the 4050-4000 zone, also the 50-day moving average. So I might not create fresh positions until 4050, that support zone is broken. But yes, I mean, if you had a position, you might want to book, take profits off, or at least, if you initiated at those levels, you might want to exit at a trailing stop loss. Godrej Industries fairly muted sideways, so nothing to write home about. What I'm excited about are two stocks, from what Somit mentioned. One of them is Cummins. We have a call on this. This is seeing a very positive consolidation, 20-day moving average being respected, although intraday a couple of times we dipped below that, but for the most part that's being respected. And the other one is TVZ. Good volumes, good price action for the last 3 sessions, relative strength apparent. So I think, this is a good stock, could see a higher level of 221 and 230 as well. Support zones near about 206 levels of risk reward ratio. Despite the kind of up move, still favorable.
Before we go to Nirav, Kush, your market view, and could you also give us your stock recommendations now that you want to point out?
Sure. So I think what's apparent in the very near term is that the ongoing pressure on the upside, that's apparent. We'll have rebounds along the way, like we did yesterday. But even then, if you see, that wasn't able to take out the previous day's high, which is the Friday's high in that case. So momentum really is missing. I think despite the kind of weak structure that the market is in right now, consolidating with a negative bias, I don't think short position makes risk reward ratio sense right now, because a strong support zone near the 24,400 to 24,500. But on the upside, you could have levels of 24,800 and 25,000 being tested. So yes, wait for rebounds rather than creating any fresh short positions. Or maybe if it's just far too volatile, not a bad idea to just sit out for some days and see what the market does. So that's the broad view on the Nifty. Bank Nifty is relatively weak. 55,000 support should be held. If not, then you could see another 400 to 500 points of downside on Bank Nifty. As far as stock specific action goes, 2 calls, both of them on the long side. One of them is Fortis Healthcare. We did discuss this a couple of sessions ago for the first target of 861. That's been hit. So someone can hold or maybe even enter a fresh, given the kind of price and volume action you're seeing, for targets of 886 and 905. Keep a stop loss or trailing stop loss, as the case may be, around the 855 mark. In the cash segment, a positional bet, more of a reiteration, is Shyam Metallics, something that we discussed, I think, about 4 sessions ago. The stock is doing very well. It's consolidating. But if you see, the volume action on the downside has been very limited. So yes, that consolidation continues. As and when the market stabilizes, this could see a big pop on the upside. So 1018 and 1069 are your targets on the upside. 920 is where you place that stop loss.
Okay, so Shyam Metallics, again, set of numbers which the street has not minded too much. Also on Kush's list. Neera, very good afternoon to you. How are you looking at some of the defense pack and MTAR specifically, since the numbers have just come in?
Yeah, good afternoon, and thank you for the invite. The defense stocks, I think the initial pack was some amount of disappointment as far as the PSU ship makers, etc. were concerned. But I think the focus has been more on companies like, say, Solar Industries, Bharat Forge, and today, of course, MTAR Technologies, which has declared a very strong set of numbers. We've seen stable numbers coming in from Bharat Electronics, but I think the stock has not reacted that much to the numbers because it's all there in the price at this point of time. So I think one will have to be very selective as far as the defense stocks are concerned. And I think we like in this particular space, we like Solar Industries, Bharat Forge, Data Patterns, MTAR Technologies, etc.
Okay, let me just go across to Somit for a pack that has seen some underperformance today. Somit, OMC is under pressure, and this was bound to happen after all the rhetoric coming in from the United States on India's crude purchases from Russia, etc.
Well, yes, oil marketing companies have been under pressure not only today but at least for the last 15 trading sessions. If you see Indian Oil Corporation, BPCL and HPCL have declined anywhere between 8 to 11%. Obviously, the potential ban on Russian crude is one of the reasons, but there are several other reasons as well. Firstly, if you look at the Singapore gross refining margin, they have come down from $5 average that we had seen in the first quarter to close to now $3.2 per barrel, and this is owing to uncertainty regarding the demand and rising global inventories, which have put pressure on the Singapore gross refining margin, which is the Asian benchmark for refining margin. Apart from that, if you look at the marketing segment, which is the other segment of oil marketing companies, there also the margins have been under pressure. For Q1, it averaged around 8 to 10 rupees per litre, and right now they're averaging around 5 rupees per litre, and this is owing to the adverse movement that we have seen in product prices and also because of the adverse movement that we have seen in the foreign exchange rate. Apart from that, the performance or the Q1 numbers from its peer companies have also been quite weak. Reliance Industries a 5% Q-on-Q drop in its O2C segment, that is the oil to chemical segment EBITDA. MRPL's GRMs declined by nearly 19%, while Chennai Petro's GRMs, that is gross refining margin, declined by around 49% on a YY basis, and this has also been putting pressure on the share prices of the oil marketing companies. And lastly is the uncertainty around the Russian crude. Now there are renewed sanctions or potential sanctions that could come in from US side on a Russian crude, and this could increase the cost of crude for the oil marketing companies by around $1 per barrel, and this could have an impact on the financials. So that is another reason why oil marketing companies have been under pressure. But what are the key triggers or key positives going forward for the oil marketing companies? Firstly is the LPG compensation. And there are multiple reports which suggest that government could pay at least a part of this LPG subsidy soon. In fact, we spoke to the IOCL management and is expecting this part of subsidy to come in the second quarter of FY26. So that could be one of the key positives or key triggers for the oil marketing companies. Apart from that, if you look at the marketing margins, although they are lower on a sequential basis, but the current margin that the oil marketing companies are earning of around 5 rupees per litre, it's way higher than what they used to earn earlier over FY18 to FY25. If you look at the average, it stood at close to 1.9 rupees per litre, and currently they are earning around 5 rupees per litre on the marketing side. And even if you look at the Russian ban, it's quite ambiguous. There's no clarity on this because the government statement yesterday clearly hinted that there is no curb on the oil marketing companies to procure any crude from Russia. So even if they go ahead and procure the crude, the discount could continue for the oil marketing companies. Now if you look at the valuations of them, they're largely at par or at discount. For Indian Oil Corporation, BPCL, they are trading at par with their 2-year average valuations, while HPCL is trading at a discount to this 2-year average valuation of around 7.2 times. And from the current levels, if you look at the return potential for these oil marketing companies, for Indian Oil Corporation it stands at around 13%, for BPCL at 17%, and for HPCL at around 12% from current levels.
Okay. Thank you for that, Somit. OMCs to watch out for. Meanwhile, so are earnings. And Berger Paints, interesting to see because crude prices does impact profitability for Berger Paints as well. Their numbers are out right now. Profits down 11% for the quarter at 315 crores. Meanwhile, revenues have gone up 3.6% in this quarter. EBITDA up 1.1%. Margins have come down slightly from 16.9 to 16.5%. You saw a bit of a drop in that stock, but then some recovery coming in there as well. You've seen numbers from Tega in the last few minutes, and Castrol has also reported, so keep an eye on all of those as well. Tega doesn't seem to be a very strong set of numbers at all from the initial kind of response that we've seen. Revenues up 4.7% for the quarter. For Tega Industries is what we can see. Profits down about 4%. Castrol as well, if I could just quickly address Castrol and look at what's happening there, because the stock seems to have responded quite positively to Castrol numbers. And we'll try and get that on the screen for you. There you have on your screen, actually, Tega's margins have dropped a fair bit from 18.9 to 15.6%. That's why the pain point there. But here you have Castrol with 4.5% up on the net profit figure. That's why you saw a spike on that stock at 244 crores. Revenues up 5.3% at 1497 for the quarter. So that stock about 1% up. But even as we're talking about numbers, in Keystone has just dropped 35.3% drop in revenues for Keystone. Profits down 43.8%. When reality is having a tough day, especially ahead of the monetary policy outcome tomorrow. It's not expected to be anything but a pause, but you're seeing some pressure there in all interest rate sensitives, and
Anyway, Keystone's numbers don't seem to have helped the cause. Stock about 3% down. Now, in a press statement, Adani Ports whole-time director Ashwini Gupta has talked about the company's first quarter earnings and what worked for the company. Listening to what he had to say.
APSEZ's stellar performance in Q1 FY26 underscores our commitment to reinforce our integrated transport utility proposition. APSEZ revenue grew by 21% to rupees 9,126 crore, driven by over twofold growth in our logistics and marine businesses, which are both core to our integrated offering. We also delivered record high EBITDA and PAT at rupees 5,495 crore and rupees 3,311 crore respectively. S&P Global has revised APSEZ ratings outlook to positive from negative. Ports business played a crucial role with 11% growth in overall cargo volume. The domestic ports handled 6% higher cargo and increased market share to 27.8% compared to 27.2% in Q1 FY25. Our international ports also contributed significantly with 22% revenue growth and an improvement in EBITDA margin to 21% from 13% last year. Logistics doubled its revenue to rupees 1,169 crore, driven by accelerated customer onboarding and volume ramp-up in trucking and recently launched international freight network services. Marine business saw a strong 2.9 times increase in revenue to rupees 541 crore, propelled by our diverse fleet of 118 vessels. Our focus on expanding port capacity continues to be unwavering. We commence operations at Colombo Port and a new export berth at Dhamra. We keep our financial discipline with net debt to EBITDA ratio of 1.8x. In addition, as part of our long-term capital management plan, we successfully increased the average debt maturity from 4.3 years to 5.2 years and reduced the yield across all bond issuances by up to 116 points. Technology, talent, and sustainability are the backbone of our business. We have integrated advanced technology across our operations, including the fully automated port in Vizhinjam and Colombo. The AI-driven strategic command center and digitized trucking management solution is enabling our business to perform better and better. Our commitment to nurturing talent is evident with the commencement of skill-building centers at Mundra and Krishnapatnam, aimed at recruiting the youth and equipping them with industry-relevant skills tailored to our requirements. Our sustainability initiatives are reflected in our best-in-class ESG ratings. We have implemented multiple green initiatives, including deployment of electric-powered mobile harbor cranes and zero base to landfill in 12 ports. The remarkable growth across the three engines of our integrated transport utility proposition, ports, logistics, and marine, positions us strongly for sustainable growth and ensures we remain within our FY26 guidance range. I extend my heartfelt gratitude to all our stakeholders, especially our customers and employees, whose unwavering support has been instrumental in the journey. Thank you.
Okay, that was a statement coming in from Adani Ports. And let's talk about the stock of the day. Godfrey Phillips undoubtedly is the stock in focus following a quarter where revenue from cigarettes and tobacco served as key growth drivers. Anushi coming in for what has worked for Godfrey Phillips.
Well, thank you for that, Tamanna. So strong kind of moves that we are looking at for Godfrey Phillips in trade today, and this is on account of its first quarter results. Let us first walk through the key highlights as to why it deserves that place of stock of the day. Firstly, if you are looking at PAT, that is not comparable YOY because of the exceptional losses, but adjusted PAT did see about a 25% of an uptick which is there. In fact, if you look at the numbers, it's the volume which has led to this kind of an uptick in terms of the growth that we are looking at this in the top line. There were some exceptional losses also the first quarter, and this is the closure of the retail business that we are looking at. In fact, if you talk about the verticals, it's the cigarette and the tobacco revenue, which saw about a 33% of an increase on a year-on-year basis. While if you look at the profit of these two verticals, of these two segments, which are the cigarette and tobacco, that's about a 28% of an uptick on a year-on-year basis. Other than that, they have also approved a 2:1 of a bonus issue, and this will be on the record date for the same would be on September of 16. But quickly walking through the numbers, if we are seeing revenue, firstly, we are looking at a growth of about 36.5% to 1,486 crore in the quarter. Margins also, if we see EBITDA and the margins, both of these numbers, now EBITDA was up over 25.1% to 338 crore. Margins have expanded. Not expanded, they've contracted to 22.7% as compared to 24.8%, and net profit, however, did see about a 56% of an increase. In terms of stock performance also, if you look at the company now in the last 1 month or so, it has seen about 15% of gain so far, while for the 6-month period, it has recorded about more than 100% of an uptick in terms of where the share price is concerned. So strong up moves that we've seen in the last 6 months or so, and this is why the stock is in focus on the back of its first quarter results. Stock of the day.
Okay, Godfrey Phillips, stock of the day and going strong. Nirav, do you see the momentum in this sustaining, or do you think that the numbers were so good to get this kind of a response?
Well, yes, because I think both, I think ITC as well as Godfrey Phillips, both have declared good numbers as far as the cigarette business is concerned and tobacco volumes are concerned. And I think they should continue to perform better going forward.
What about you, Kush? Godfrey Phillips, is it something that you would look at? And let me throw in an ITC while we're at it.
ITC, I would avoid for now. Lack of momentum, consolidation on for last 8 weeks or so, not going anywhere. On the upside, 425 is a resistance. On the downside, 405 thereabouts, support. So this is I would avoid something that I would avoid for now, at least from a trading perspective. Godfrey Phillips, on the other hand, very very beautiful structure, and the journey for this one started way before the market, which is March, April thereabouts, where the entire market rebounded. This one has a rising trendline support. Right from this calendar year start, which is January. Even now, if you see, for the last few weeks, and the market is volatile, this one's actually held on to that, rebounded quite smartly. Had a minor resistance around the 9,600 mark. That's been taken out on the back of good volumes. I think more upsides on the card. So if I did have a position, I would hold. If not, I wouldn't really mind creating fresh positions, even now, for upsides of 10,200 and 10,500. Keep a stop loss near the 9,500 mark. So good moves on this one and have been ongoing for the last 6 to 7 months.
Okay, we'll take a very quick break. Thank you so much, Kush, for joining us on this leg of the show. Nirav Asher stays on. We'll take a short break. We come back with all the buzzing stocks, including the BTST ideas for this afternoon. Stay tuned.
The world has changed since the RBI governor delivered a massive 50 basis points rate cut on June 6th. Should Sanjay Malhotra cut rates further before the festival season, or should he hold rates? The most comprehensive, insightful 360-degree coverage of the monetary policy with the best experts from 8 a.m. on August 6th, only on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
Welcome back. Statement coming in from Mr. Ashok Hinduja, Chairman of IndusInd International Holdings Limited. Remember when all the mess was happening with IndusInd Bank, we had heard from Mr. Hinduja. He has now put out a statement saying, on behalf of the IIHL board and global shareholders, I compliment the regulator for the expeditious approval of the appointment of Rajiv Anand as the MD and CEO of IndusInd Bank. As a promoter of the bank, we offer full support and wish him all the success. We trust that with his vast experience, he will be able to realize the full potential of this strong private bank franchise. We greatly appreciate the role that the board and the executive committee played in steering the bank through this challenging period. I just want to pull up the stock for a second. So, very different approach this time round from the promoters compared to when the whole crisis actually blew up. And if you recall that, Neeraj, because we were on top of that story, Mr. Hinduja had a press conference, fielded a lot of questions over there, and then came back and said that, listen, I'm hands off. We're the promoters, but there are the shareholders, and this is under RBI's oversight. And I think that's what's given confidence as well, that it's under RBI's oversight at the end of the day.
Yes, it is. And well, they've gotten a gentleman who's got a stellar track record, great reputation, and arguably a gentleman who can steer the bank back to its, if you can call them glory days. And a lot of people that we've spoken to through the day, Tamanna, and from different walks of the BFSI sphere, have expressed confidence in this move for IndusInd Bank.
Yeah, including former colleagues who are saying he's a people's person. One stock which has been hit quite badly because of the news coming in is BSE. Now here is why BSE is in pain today, and you're seeing that stock 5.5% down nearly. SEBI is mulling ways to reduce volumes in options trading is what we're learning. The SEBI committee meet on August 19th, will discuss key details on reducing volumes. One of those ways could be to remove weekly expiries from the equation. Charu joining us with more details.
Hi, so the market regulator Securities and Exchange Board of India is currently weighing, what they can do to basically reduce the volume in the option trading segment. And currently they think that the weekly expiries are one of the reasons that the volatility and the volumes in this segment is so high. So in order to reduce this volume, they are thinking about doing away with weekly expiries and, replacing them with monthly or fortnightly expiries. Apart from that, they are also considering encouraging activity in the cash market segment, which would eventually, hopefully lead to reduction in the volumes in the option trading segment. And in order to do that, they are going to be suggesting ways to Finance Ministry. Firstly, they are going to be, recommending a reduction in the security transaction tax. Apart from that, they are also mulling if they can reduce the margin requirements in this segment. So these developments are not set in stone. They are also going to be discussed within the regulator and outside in a consultative process. And a SMAC committee meeting is also slated to take place on August 19th. SMAC is the Secondary Marketary Advisory Committee, and let's see what is finalized and how the developments roll out further.
And it certainly, Charu, thanks for that, but it certainly had its impact today on BSE for sure. And Nirav, just the trend that we're seeing, right? That there is a move, a concerted move. And Gaurav Bisar Johnson, of course, welcome Gaurav, good having you as well. I wonder if the stressful days for you go down because of this. But Nirav, first to you fundamentally, right? Just the trend of trying to reduce this large trading days. I'm not saying that's the goal or that's the motive, but that's the impact, right? Large trading days get reduced. Does this take the sheen off the earnings trajectory for companies in this space? It could be a BSE or an NSE. It could be brokers as well, which have this a large trading model. What do you think? And what's your view there, therefore, on those stocks?
Yes, well, on the face of it, it does seem that it does take away the shine and the sparkle which is there, and the thrills which come with all this volatility in the markets. But I think SEBI's intent is to very clear to curb this volatility, and I think it is more kind of a transition phase. Because if you are going to eliminate the weekly expiries, naturally you will be still continuing with the fortnightly, monthly expiries, etc. So I think all the action is likely to shift over there. So I think whatever happens in the near term, it's going to be a negative, but hopefully things should settle.
Okay, want to quickly get Gaurav's view on this. Gaurav, view on BSE, what happens if weekly expiries go, and then of course we'll get your take on the markets.
See, a lot of the aura around expiries, that has increased manifolds in last, I would say, couple of years at least, and people have been shifting, between, or rather juggling between the expiries on the Nifty and NSE and BSE. And we have seen incremental activity happening on our desk as well. So yes, there's going to be, as Niro pointed out, there's going to be some lost shine over there. But at the end of the day, I think maturity is what even our regulators are planning to have in markets, and I think that is going to be taking a step in the right direction. Ultimately, I think at the end of the day, the lesser the amount of volatility is, it is good for all the stakeholders, as a broker, as an analyst, or as a trader. At the end of the day, I think it's the right step in the right direction.
And what about the BSE stock?
So if you look at the structure, we have seen the stock correcting continuously. It had a small triangle breakdown happening, and since then it has been consistently making lower tops, lower bottom. The next set of supports would be around 2,360, right at these same levels. But close below these levels can result in fresh swing breakdowns. The last swing breakdown resulted in a 5 to 7% fall. So let us see if that happens. I think at the current juncture, we are seeing RSI divergence. If we have a 4-5% fall coming in BSE, but the RSI does not fall, I think then it will be a case of a bottom-up process being started, and then stock again starts upward trajectory. So I think it's more to do with time correction going forward. I don't envisage a very significant price correction in BSE at the current juncture.
Okay, let's get your take on the indices, Gaurav, and we'll just pull up the Nifty intraday as we're asking Gaurav that question, and he brings in his details as well. Strength is just not being seen. I mean, in a range today for the Nifty, but not managing to hold out. What is the position that you would take right now?
See, at the end of the day, structure is what matters the most. I'm not denying the fact that it's a positive development. But if you look at for major part of 2025, the stock has been trading in a range. And till the time we don't see the stock coming out of the range, the positive as well as the negative factors will have very little strength to hold on to. So in my opinion, I would not be too keen in trading the stock. There are multiple hurdles ahead, and the most immediate would be around 895. So if I were to buy, I would to bet my money, I would buy only once it goes above 895, in which case one can play for 15-20% upside in a jiffy. Till the time when it does not happen, I think it's got to do more with time correction. I would skip the stock at the current levels.
Okay. Okay. Now, Gaurav, let's get your stock recommendations as well before we move further.
So the first stock would be buy on TVS Motor. So a very nice structural breakout has been seen coming out of consolidation, a cup handle pattern formation. In my opinion, stocks which have been outperformers, once the market finds its legs, they are the ones that will move up faster and quicker. So on that premise, TVS Motor can be bought for 3,100. Targets can be much higher than the ones that mentioned. But on a very immediate basis, 3,100 can be the target, stop loss of 2,900. Second would be buy on JSW Energy. Again, a stock which has been trading in a range. So if you plot Donchian channels or other even Bollinger Bands, you will see that there has been expansion of the band, meaning that the breakout has been seen. Volume participation is on the positive side. One can play for 570, keeping the stop loss at 520.
Okay, stay on with us, Gaurav. You talked about TVS Motors. Let's talk a bit about Tata Motors. Tata Motors is our candidate for bull versus bear. It's named PB Balaji as the new JLR CEO after Adrian Martel stepped down, and you saw a bit of a spike in the stock in the morning. Hasn't been able to stay on though. Giving us both sides of the story is Puneet.
Well, thank you for that. That's definitely the bull case for today. PB Balaji, veteran at Tata Motors as well as within the automotive space as well, and hence this is not just a key appointment, but he's also the first Indian CEO of the Jaguar and Land Rover brand, and it's going to be one of the key ones to watch out for how the turnaround finally happens with the business. While financially, over the last 5 to 6 years, they have been going strength to strength. EBITDA margins are now 16% for Jaguar and Land Rover, from roughly about 6 to 8% that the company used to do about 6 years ago. Debt has also come down, but the growth has largely been absent, and with new models, that will be one of the key ones to watch out for. The biggest criticism of the brand has come in from a recent news flow what the company has been doing of rebranding of the Jaguar brand. It's not been taken well at all across mediums. We also saw on Truth Social a post coming in from Donald Trump on mentioning his views on this as well. So it's definitely not been taken well in terms of the new image of the Jaguar brand, and that will be one of the key ones as a key first task itself for PB Balaji when he joins in November. The second bull and bear case is of course the stability and the continuation into a smoother transition for Jaguar and Land Rover brand. It's been marred by geopolitical issues amongst others. So PB Balaji, being a veteran at both Tata Motors and the auto industry for the last 3 decades, will definitely put some solace there as well. Global uncertainties both in the US and the Europe has been hampering volumes. For Jaguar and Land Rover, the volumes have stayed stagnant at 4 lakh units a year for the last 7 financial years now. So, and that's including FY25, and FY26 is expected to be even lower than the last year. So the volume ramp up will be gradual post the revamp of both the brands. But definitely the uncertainty is hampering there because of geopolitical tensions. The third key case, he's also, I mentioned the first Indian CEO, but policies in the US have been changing rather rapidly, with current scenario being that the trade deals might help JLR, and we'll get some more perspective on the 8th of August when the company released their results. Finally, the valuations. For JLR specifically, they do trade on EV to EBITDA basis, and it's down 40% over the last couple of years. It's now roughly trading between 1.5 to 2 times EV EBITDA. Used to trade at 3.5 to 4 times EV EBITDA. So definitely the valuations for the JLR business specifically is what we're talking about is favorable compared to the historical averages. But the growth outlook as well as the new EV for the Range Rover next year will be one of the key ones to watch out for. So overall, a huge appointment, a big win for shareholders definitely, and I think that's the trajectory for Tata Motors at least going forward with the JLR brand.
Yeah, you know, I think today's been a day when shareholders have been cheering management positions and key management hires and announcements, and PB Balaji there. But in terms of Tata Motors, and if you compare to the rest of the four-wheeler pack, Neerav, Asher, I want to get your view on this. Where do you think a Tata Motors stands?
I think this new leadership is definitely welcome at this point of time. It seems to be a challenging phase for the company at this point of time. There are a lot of global headwinds, and as you rightly pointed out, growth has been stagnating as far as JLR is concerned. The valuations have been under pressure, and of course this new acquisition which is being considered, that is the Iveco, that is also putting pressure as far as the stock is concerned. So I think we expect the stock to face challenges in the near term. I think it is better to stay away from the stock at this point of time till we see some meaningful recovery and some visibility with respect to the tariffs.
Neerav, we'll leave it at that. Thank you so much for taking the time out and being with us, though, and giving us your thoughts. Really appreciate your time. Gaurav, the trading in some of these auto names has been rather insipid. Tata Motors is off the highs of the day. Escorts surprised on the margin front, but still the stock not doing anything. What do you make of some of the movers?
So, Neeraj, when we talk about these stocks, let us first go a little back towards the index itself. If you look at Nifty Auto Index, that has been trying very hard to witness a 12-18-month breakout, but it has been failing to do so. And a lot of that is getting translated to individual names as well. That is one of the reasons why we are not seeing that much of active trading interest in many of these names. So, same is the story with Tata Motors. If you see, it's been trading in time correction, whether you look at the daily charts or the weekly charts. I don't see on a very mid basis, I don't see any spike sort of coming in. There are no days when the volumes are picked up or the stock has tried its full might to come out of the range. So on that premise, I think this is an avoid. On the other hand, if you look at the daily, weekly charts or you look at the monthly charts on a larger time frame, Tata Motors has witnessed a very strong breakout retest, multi-year breakout retest. So I am extremely bullish on Tata Motors for long-term perspective. But when it comes to trading perspective, then I think it is always best in the current scenario. You go for the stocks that are giving breakouts. You make 4, 5%, 10%. You take the money out. That is the only way that one can approach trading in these markets.
Okay. Stay on with us, Gaurav. You know, the other story that we're tracking this afternoon on NDTV Profit is the questioning of Anil Ambani at the ED headquarters in Mumbai. Now, he went in at around 11ish. So the questioning has been now on for several hours, at least 4-5 hours and counting. Shrimi Chaudhary joins in with more details. Shrimi, what's the latest that you're hearing? Yeah, can't quite hear Shrimi. Okay, we seem to, Shrimi, sorry, we can't hear you. We can't hear you, so we're going to try and get your audio. And I think you can hear us, but we can't hear you. But we do know that there was a lunch break which lasted for some time, and then that questioning then continues. So it's a grueling questioning that we have seen, and of course you're seeing the stocks react. Our power, etc., is all down at this point. Shrimi?
Can you hear me?
Yes, we can. Go ahead.
Yeah, so what I was telling and what we are picking at this point that, interrogation is underway, and after a, brief lunch break of 30 to 40 minutes between 1 and 1:30, and in fact, a couple of questions is what ED officials asking at this point, and some of them is actually, his involvement in this entire case, and I would like to just underline those questions here because those are important, that whether Anil Ambani, or
senior executive aware of the financial irregularity, which, ED flagged during the investigation and the search operation, etc., and the evidences which they collected, indicating towards 17,000 crore of illegal loan fraud. And the second important question they are asking on whether he personally influenced or authorized anybody to sign any document on the loan approvals is what ED is trying to collate information on. Also, they are asking the fact that whether any deliberate attempt were made to default on payments of all these loans when companies were have capacity to pay back to banks. And of course, on the point that the quid pro quo which has emerged during the probe between Yes Bank and ADAG group of companies, that how the Yes Bank loans gone to Reliance and come back again to the Rana Kapoor family offices. So that kind of kickback, not just with the Yes Bank and the number of bankers now under radar, we have been reporting about 12 to 13 banks ED is going to question and summon that whether the credit due diligence were followed or not, the timeline of default, etc., and the recovery action taken by those lenders when actually the default happened. All those questions are, currently being asked by the Enforcement Directorate, and in fact, all these statements are getting, recorded, both audio and video, and it is very important here because under PMLA, all those statements are permissible in court. So you can't really alter or make changes in those statements unlike any regular police complaint.
Right.
So that is going to be very crucial, that whatever statement he is giving is going to be clearly go in the court. So we are, tracking this story as the questioning progressing.
Okay, we'll stay with those updates with you, Shumi, and this can be long drawn. So let's, keep an eye on how many hours this takes, and what happens at the end of it also becomes very important. Could be more than one day of questioning. So all of these details have to pan out. Shumi Chaudhary there with the latest. But meanwhile, we have Gurmeet Chadda joining in, Managing Partner and CIO at Complete Circle, on our conversation this afternoon. Gurmeet, always a pleasure to have you on, and thank you so much for coming in. What do you think is the main concern for markets right now?
Yeah, I think obviously today's reaction is more to do with the social media interaction President Trump had, and I think we'll have to probably start living with it. Assuming we were to also get a good FTA, even then on a ad hoc basis, you can keep expecting tariff as an instrument for negotiation, and I think at some point of time market will start discounting it as well. I think to me the bigger concern is the earnings not picking up the way it should, and I think once the earning picks up and comes into double digit, all of these issues automatically will be put to rest. Reason is once that happens, even the FI sell-off will at least stop, if not flows come back, because if you see it's persistent selling, and it's been, if you remove couple of weeks in April and May, other than that last year or so, this is almost like a systematic withdrawal plan. Without any trigger, 2,000 odd crores, and with trigger maybe 5,000-6,000 crores per day. So I think the earnings need to come back, and I think the government also need to get urban consumption back. I'm a little disappointed in terms of measures not being taken in terms of GST cuts and some fiscal, stimulus, because RBI alone cannot do the heavy lifting. I think they've largely done what they could. Perhaps they'll do something more tomorrow, but some fiscal stimulus has to come from the government. Through large ordering, through some GST cuts. I think that is what is missing in the market.
Yeah, I don't know if there is a worry on the FIS situation as well before doing the dole outs, because I think a large defense capex announced as well. So could that be interesting? Now, Gurmeet, just a follow up before we take in the closing strategy from Gaurav, and which is around this earnings piece that you spoke about. Do you think the markets are pricing in a 5-6% earnings growth currently, or if it were to be a 5-6% earning growth year, then do you reckon that the market should be lower from 24,500 odd to maybe 24 or 23,500 or 23?
I think it's more it's around high single digit, like 8% types, maybe 8.5%, 9%. Anything less than that, maybe another 2-3% can correct or time correct, which has been the case now for at least for this quarter. Also, if you see if you divide that, you're at 21 times, let's say, and if you divide the earning at 7, you're at 3 peg. And historically, FIs haven't come at 3 packets. They've always come more closer to 2. And even price book, if you see, it's up, it's more closer to 2.5, 2.7 is when we see FI flows. So either earning needs to pick up or market needs to correct 10%, or the third scenario is time correction, which is what is playing out. But on technicals, for example, and I'm not a technical guy, I see a lot of pockets getting oversold. I see a lot of banks being oversold. I see a lot of defense stocks getting oversold because the lumpiness of the business. I also see even IT, to me, IT services looks way oversold to me. So there are few pockets in the market, and this will be a very grinding market. Is it that fifth day of the test match, Neeraj? You need to preserve more right now and keep looking at opportunities. I've been saying this for a while. Have some long duration bonds, have some more gold also in the portfolio. This is a year if you survive and even get high single digit or maybe early double digit, I think it's a job well done.
So how do you get a high single digit at the very least? You know, from viewers' point of view and from investors' point of view, they've been asked to manage expectations, I think, for a second year in a row now, pretty much. Almost a year, about 18 months odd. So now as the expectations are being even further managed, how do you even make that mark of a single high digit? What do you pick?
So I think, as I said, good stock selection in some part of the portfolio. Maybe you can be like a 2/3, 1/3 between equity and fixed income and gold. If you see the 10-year right now, it's about 630, 640. My sense is the terminal repo rate would be closer to 5, which means about 50 to 75 bips softening of yield, which is there, which translates to almost 4-5% mark to market gain. So you can actually make double digit also in the long duration bond. I also think gold will find more favor with central banks with the way all these trade negotiations and bullying tactics are happening. I think US Treasuries, once you see sub 4 yields, there will be a lot of unwinding which will happen from the non-US investors as well, because a lot of them are sitting on accumulated losses on long duration US Treasuries. That money can flow back to gold and emerging market bonds. So I think if you be a little more balanced this year, I think you can still make that high single digit, or maybe if you're lucky, early double digit.
Okay. Gurmeet, I want your take on fertilizers as well, but let me just get this report in from Varsha first. Fertilizer stocks have seen a sharp up move in today's trade with counters such as Chambal, Coromandel and RCF buzzing. Varsha is joining in to tell us why.
Well, thank you for that. So yes, all the many of the fertilizer stocks are buzzing. Now this is on the back of volume, good volume we have seen in these stocks. Then we start with Chambal fertilizers, wherein if you see the 30-day average volume stand at around 4x. Now this is followed by RCF, Fact and Coromandel International. And let's talk about the how were the Q1 FY26 earnings for these fertilizer companies. Now we all know that we had a good monsoon this year, and these all fertilizer companies benefited from good monsoon in Q1. Starting with Chambal fertilizers, if you see, they've seen an improved top line and healthy operating performance, and there was a better sales volume and price realizations. And if you see, the revenue was up 15%, margins were at 13% versus 15% last year, and net profit was up 22%. On the Coromandel International, if you see, the quarter for the company was very good. Now they did beat expectations. Strong operating leverage was seen from manufactured phosphatics. If you see, revenue was up almost 50%, EBITDA was up 55%, net profit was up 62%, while margins were at 11% versus 10% last year. So overall, all these fertilizer stocks are actually buzzing based on volumes as of today.
Okay, thanks for that, Varsha. So, interesting movers there. I couldn't find too many reasons, but Gaurav Bisa, any thoughts here on fertilizer stocks? I mean, if you like anything on the charts at all?
Yeah, many of the stocks had moved up already, and one of our favorites, have always been Chambal fertilizer. For simple reason that it has been an outperformer throughout. So if somebody want to probably nibble into that, I think Chambal fertilizer is one that can be focused on. Look at the volumes for the last 3-4 days, above average volumes, and on the cusp of giving a consolidation breakout. The moment it sustains 570, I think the next hurdle would be at least 70% higher. So that will be one stock that would be on my radar.
Okay. And Gaurav, I'll come to you for your closing strategy, but Gurmeet, any thoughts on fertilizer stocks?
So Neeraj, we like Coromandel, and for a while now, almost 500 crore PAT in Q1. First time probably I saw 7,000 crore kind of a top line. Also continues to do static acquisitions. They increased their stake through the overseas subsidiary in the BMCC almost to 71%. They're also signing the DAP deal with Madden in terms of supplies from Saudi on diammonium phosphate basically. And a lot of backward integration also happening, and the company is really spending a lot of money in even R&D there. And I think the rural economy is showing very early signs of recovery. So a lot of the crop protection names, even some of the two-wheeler names, ancillary names, farm equipment names, water pumps, etc. I think will surprise in next couple of quarters.
Okay, Gurmeet, thanks a lot for joining in today. Gaurav, quick 20 seconds. Any BTST or STBT calls? Quick 20 seconds.
So HL would be on my radar. A good breakout on hourly charts. One can probably play for 4670, keeping the stop loss at 4520.
All right, thank you so much, Gaurav, Gurmeet, for joining us today. You're ending, I would say, with a whimper. At the very least, it's not a big push or a push down. It's a very range-bound kind of trade. Pull up the intraday actually, because you're going to end about 65 odd points down in the green. You stayed in that entire range. A bit of a peak during closing, but nothing really to look like the markets were in honestly any kind of recovery mode. So it has been a dismal kind of day. Let's pull up the heat map very quickly just as we go into closing in that last minute or so. Indus Ind has held up. Titan coming to the fore as well in trade today. So is Trend. You've seen Tata Group stocks performing quite consistently on the Nifty recently, and that is coming in as well. SBI Life doing fine. Maruti not bad at all. Bharti Airtel was firing through the day but has come off its highs. Adani Ports, RIL, Infosys. So a lot of heavyweights here at the bottom rung, and which is why you're seeing a bit of a drag. Let's pull up Nifty contributors, in fact, while we're at it, and see how that stacks up overall. You're seeing the private banks and Reliance Industries pulling the index down. ICICI Bank, HDFC Bank, RIL, a day before the interest rates are paused, as is being widely expected. We don't know if there's another surprise. Remember, there was one last time. You're seeing banks doing not that great. In fact, pull up the sectoral indices, and my guess is you'll see Nifty Realty there as well with some amount of pain. Oil and gas stocks have taken a bit of a tumble, and this was bound to happen with this pressure and this intense scrutiny of India's crude imports, how much is coming from Russia, etc., etc. Big announcement on more investments on the BrahMos, which has kept defense stocks going up. Nifty Auto coming up because of what we've seen with Maruti. But as we wrap up, let's see the advanced decline ratio as well, if we can, and see how that paired out. So you see that widening towards the end. Not the greatest of close, and no real sight for a sharp recovery of any kind tomorrow. Tomorrow is going to be another day that we'll have to wait and watch. In fact, let's take a look at some of the cues that you should watch in tomorrow's trade. The biggest one, of course, is the RBI monetary policy outcome. Is everything now going to be left to Governor Malhotra to lift the market moods like last time? Might be too much to expect. He's already front-loaded all of the action that you can expect. Canada's balance of trade number will be out. US balance of trade number will be out. But make no mistake, our monetary policy and what he says about growth becomes key. You have dividend action as well, some of those companies on your screen that will take place. Earnings which are going to come from now on till tomorrow. Bharti Airtel, watch out for that. And that stock was up in pre-earnings in trade as well. Britannia, Lupin, Torrent Power, those are some of the companies that will actually come in this evening. As far as tomorrow is concerned, there are some big numbers out there. Divi's Lab, Bharat Forge, Bajaj Auto, Trent. Watch out for all of them as well in tomorrow's trade. So should you for Hero Moto, Raymond as the other one to watch out for in trade today. I just want to pull up the broader markets, the gainers and losers, before we wrap up the show. Though we've talked about earnings for tomorrow already, but on the BSE 500, if we can look at what the top gainers and losers were, and you'll see a clear pattern there. A lot of impact because of results, but fertilizer stocks coming up towards the end of trade. That was up there. Godfrey Phillips continued to be the star performer right from the get-go, thanks to numbers and a lot of action over there. Triveni turbine has been suffering since the start of trade as well. You might be seeing some tariff impact on a well-spun living, and that's the reason this has been under pressure. So a mixed sort of bag there. This is now turning into a market for the smart pickers. And there doesn't seem to be any indication right now that you'll see major action, at least till the RBI governor's speech starts at 10 a.m. tomorrow. But do join us back tomorrow morning on what your setup for the trade should be. We'll be back here with the entire team. Till then, thank you so much for watching In Your Market Close.
The world has changed since the RBI governor delivered a massive 50 basis points rate cut on June 6th. Should Sanjay Malhotra cut rates further before the festival season, or should he hold rates? The most comprehensive, insightful 360-degree coverage of the monetary policy with the best experts from 8 a.m. on August 6th, only on NDTV Profit.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बार को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and
Good afternoon, viewers. You're watching Market Express and I'm Malika Mishra. Let's dive straight into the show. It was a largely tepid Tuesday on Dalal Street. Benchmarks ended the day in the red. The Nifty shut shop below 24,700, recovering just a tad bit in the last 30 minutes of the session. Sensex closed in the red, shedding over 200 points. Most sectors ended the day in the red, with oil and gas and pharma leading losses. FMCG and realty were also on the back foot. Meanwhile, defense and auto remained resilient. The rupee also closed 14 paise weaker against the US dollar, closing at 87.66 a dollar. Siemens Energy delivered a robust Q1 FY26 with consolidated net profit surging 84% YOY, driven by a 20% revenue increase. EBITDA rose 59% to 340 crore, with margins expanding to 19%, fueled by the power transmission segment's strength. New orders nearly doubled, reflecting strong domestic and export demand. The company announced a 280 crore capex for high voltage switchgear expansion at Aurangabad, boosting capacity. The order book stands at 15,100 crore, ensuring revenue visibility. Ather Engineering reported a strong Q1 FY26 with consolidated net profit surging 78% YOY, driven by a 40% revenue increase to 137 crore. EBITDA rose 46% with margins expanding to 36%, aided by lower material costs. The energy and oil and gas segment grew 42% and exports, comprising 88% of revenue, rose 39%. The order book exceeds 6,000 crore, bolstered by deals with GE, Vernova and Rolls-Royce, ensuring strong growth visibility. Godfrey Phillips India reported a 56% YOY increase in Q1 FY26 consolidated net profit to 356 crore rupees, despite a 26 crore exceptional loss from closing its 24/7 retail business. Revenue rose 36%, driven by a surge in cigarette and tobacco revenue. EBITDA grew 25%, though margins dipped to 23% due to higher raw material costs. The board approved a 2:1 bonus issue with a record date of September 16, 2025. IndusInd Bank gets a new boss as Rajiv Anand steps in as MD and CEO from 25th August. His appointment comes amid a governance crisis and leadership vacuum. Anand brings 35 plus years of banking experience, including a long stint at Axis Bank. His top priorities include rebuilding trust, fixing microfinance issues, and driving growth. Citi maintains a sell rating on IndusInd Bank with a target price of 765 rupees. Rajiv Anand's appointment as CEO adds credibility amid leadership churn. His 35 plus years of banking experience is seen as a stabilizing force. Key focus areas include restoring stability and improving return on assets. MK maintains a reduced rating on IndusInd Bank with a target price of 700 rupees. Rajiv Anand's appointment is seen as a positive shift, but near-term risks remain. Challenges include asset quality, margins, and rebuilding leadership credibility. Clarity on long-term strategy may take time as Anand steers the bank's turnaround. Kaynes Technologies subsidiary, Kaynes Circuits India, signed a non-binding MOU with the Tamil Nadu government on August 4, 2025 for a 4,995 crore investment over 6 years. The investment will fund new manufacturing facilities, including greenfield projects and capacity expansions in Thoothukudi, producing advanced components like 74-layer PCBs, HDI PCBs, flexible PCBs, and wire harness assemblies. The state, via guidance, will provide financial incentives, subsidies, and regulatory support. The move, creating 4,700 jobs, aims to establish Thoothukudi as a high-tech electronics hub alongside VinFast's EV plant. BEML, a leading defense PSU, has secured a 282 crore order from the Ministry of Defense for supplying indigenously designed HMV 8x8 vehicles, enhancing India's military mobility. Additionally, BEML signed a non-binding MOU with TUTR Hyperloop, an IIT Madras incubated startup, to co-develop India's first indigenous Hyperloop system. BEML will serve as the manufacturing partner, while TUTR leads design, focusing on high-speed pods using maglev and LIM propulsion. The order book stands at 14,610 crore rupees. Bosch reported a stellar Q1 FY26 with standalone net profit soaring more than 1,110 crore, far exceeding the 509 crore estimate, driven by a 556 crore exceptional gain from selling its video solutions, access intrusion, and communication systems business to Keyunity India. Now, revenue rose 11% YOY, EBITDA grew 23%, with margins expanding to 14% from 12% earlier. The mobility solutions segment up 14% to 4,024 crore, led growth fueled by power solutions and two-wheeler demand, while consumer goods grew 9%. Marico's Q1 FY26 results with 24% revenue growth and 9% volume growth drew bullish brokerage reactions. Goldman Sachs raised its buy target to 800 rupees, citing industry-leading volume growth and a value-added hair oil turnaround, though copra inflation delays margin recovery to FY27. Jefferies also lifted its target to 850 rupees, emphasizing sustained growth over margins. Morgan Stanley, cautious with an equal weight rating and 674 rupees target, noted short-term margin pressures but an intact growth strategy. Antfin has fully exited Paytm, selling its remaining 5.8% stake via a $454 million block deal. Now, the exit marks a steep $2 billion loss for Antfin, which once held nearly 28% in Paytm. Paytm's shareholding pattern shows rising DII interest and falling FII ownership. Retail investor count has dropped while institutional reshuffling continues. Sona BLW posts a weak Q1 FY26 with revenue and profit falling YOY. Rare earth magnet supply issues delay order ramp up, impacting EV segment. Brokerages maintain buy rating, citing long-term potential and stock correction. Family dispute remains a background overhang amid operational challenges. And Godfrey Phillips posts a strong Q1 with net profit up 56% YOY to 356 crore rupees. Robust volume growth drives top line. Cigarette and tobacco segments shine. EBITDA rises 25%, though margins dip slightly to 22.7%. Board approves 2:1 bonus issue. Record date set for 16 September. Aurobindo Pharma posts a mixed Q1 with revenue up 4% YOY but missing street estimates. Lower US and API sales dragged margins and EBITDA, which fell 1% YOY to 1,603 crore rupees. Net profit declined to 10.3% YOY to 825 crore rupees, impacted by weak gross margins and higher tax. Despite muted earnings, the company declared a 4 rupee interim dividend. Record date is the 8th of August. Yatharth Hospital delivers a robust Q1 FY26 with consolidated net profit soaring 38.3% to 42 crore rupees from 30.4 crore rupees year on year. Revenue rose 21.7% to 258 crore rupees, driven by a 9% increase in average revenue per occupied bed and 61% bed occupancy. EBITDA grew 20.2% to 64.5 crore rupees, though margins dipped slightly to 25% from 25.3% due to costs from new facilities in Delhi and Faridabad. The stock climbed 2% today, reflecting confidence in Yatharth's expansion and super specialty focus in North India. Adani Ports delivered a robust Q1 FY26 with consolidated net profit up 7% YOY, surpassing the 2,985 crore estimate. Revenue grew 21%, beating the 8,768 crore forecast, driven by logistics 2 times growth and margin segments 3 times growth. EBITDA rose 13%, though margins dipped to 60%. Cargo volume increased 11%, boosting domestic market share to 28%. Net debt to EBITDA improved by 1.8 times, aligning with FY26 guidance. And SEBI is expected to take more action on the Jane Street case before issuing its final order. Indian exchanges have shared ongoing trading data related to Jane Street's activity, suggesting the investigation is widening beyond bank Nifty trades. The US firm has requested more time to respond, while SEBI may carry forward additional directions. Jane Street remains cautious, holding off on high volume trades until the final verdict unfolds. And India's market regulator, SEBI, has created a special task force to crack down on potential market manipulation by high-frequency trading firms following the controversy involving Jane Street. This move marks SEBI's new walk-the-talk movement. It signals tougher oversight of expiry day trading and advanced algo strategies in a market share where retail losses skyrocket despite booming volumes. And SEBI is gearing up to reopen regional offices in 8 cities to tackle localized frauds and boost investor awareness. Sources tell NDTV Profit this move will help SEBI carry out faster searches and inspections on the ground, especially in smaller cities where frauds often go unchecked. The new offices will come up in Chandigarh, Jaipur, Guwahati, Lucknow, Bhubaneswar, Hyderabad and Visakhapatnam, as well as Bengaluru. The plan is to increase SEBI's reach and act more swiftly in protecting retail investors across India. And Reliance Group Chairman Anil Ambani is being questioned by the Enforcement Directorate at its New Delhi office. The questioning is linked to alleged bank loan frauds worth 17,000 crore rupees. The ED issued summons to Mr. Ambani on August 1st after going through records of 50 companies and speaking to more than 25 people over the last 3 days. Sources say that Ambani is not allowed to have a lawyer present during the questioning, which is being recorded on camera. And Jaguar Land Rover has appointed PB Balaji as its new CEO effective November 17, 2025. Balaji, currently the Group CFO of Tata Motors, becomes the first Indian to lead the iconic British luxury car maker. He will succeed Adrian Mardell, who is retiring after more than 35 years with JLR. His elevation signals a shift which is part of Tata's strategy to bring more homegrown leadership to its global subsidiaries while steering JLR through its EV pivot and renewed branding efforts. BSNL has signed a landmark MOU with Numaligarh Refinery Limited in Assam to deploy India's first 5G captive non-public network in the refinery sector. The private network delivers ultra-secure, high-speed connectivity exclusively for NRL's operations. It will enable the use of advanced tech like industrial IoT, augmented and virtual reality, real-time analytics and digital twins. Officials say this initiative showcases industrial sector digitization in India, supporting the nation's Atmanirbhar Bharat and Digital Assam goals. A new report from the Pehle India Foundation shows that Diageo India added nearly 49,000 crore rupees to the Indian economy in the last year. It also supported around 6.5 lakh jobs across sectors spanning agriculture, logistics, tourism, packaging and more. The study highlights strong social and environmental efforts too. 97% employee satisfaction, nearly 99% renewable energy use in operations and CSR programs reaching over 1 lakh people. BP announces its largest oil and gas discovery in 25 years off Brazil's east coast, a game changer for the energy giant. Now, this field, spanning 300 square kilometers, could anchor a major production hub, boosting BP's crude output. This follows BP's strategic pivot from renewables, with billions redirected to fossil fuels to restore investor confidence. India's Ministry of Defence is set to approve a major acquisition of BrahMos supersonic cruise missiles, bolstering the Indian Air Force and Navy. The order includes BrahMos air-launched missiles for the Tamil Nadu-based Tiger Shark Squadron and ship-launched versions for frontline destroyers and frigates, following their proven impact in Operation Sindoor against Pakistani air bases. With extended range variants nearing 800 km and the hypersonic BrahMos 2 in development, this marks one of India's largest single orders of the Indo-Russian missile fully built in India. Kheer Ganga in Uttarkashi's Ganga Valley faces catastrophic flooding after a cloudburst submerging the Dharali market and surrounding areas. Rising waters in Dharali Kheer Ghat have caused widespread damage, with 50 to 60 people reported missing. Army, police and SDRF teams are deployed to Bhatwadi for urgent rescue operations as the region braces for more heavy rainfall. NSUI's massive protest in Jaipur at Shaheed Smarak, backed by Congress leader Sachin Pilot, demanded the revival of student union elections in Rajasthan. Tensions flared as police used water cannons to block the march to the Chief Minister's residence, with Pilot among those sprayed. Now, minor clashes erupted between NSUI workers and police, highlighting the growing interest over delayed elections. On the eve of the 6th anniversary of Article 370's abrogation, Jammu and Kashmir Chief Minister Omar Abdullah downplayed speculation about statehood restoration. He said he expects nothing major to happen. Abdullah clarified that his comments come from a gut feeling and not from any official communication from Delhi. In a 12-minute virtual meeting, Mamata Banerjee reshuffled her party's Lok Sabha leadership. She removed Kalyan Bandyopadhyay as Chief Whip and replaced veteran Sudeep Bandyopadhyay with her nephew Abhishek Banerjee as the party's Lok Sabha leader. The meeting spiraled when spirited criticism targeted coordination issues, prompting quick resignations and a broader leadership revamp. Despite tension between party MPs, she emphasized unity and reaffirmed the party's commitment to strategy ahead of upcoming elections. M&S workers unleashed chaos at Yes Bank's Mount Road branch in Nagpur, slapping an employee and blackening his face over a loan dispute. The uproar stems from the bank's seizure of a JCB owned by Indrajit Baliram Mole, who defaulted on loan installments. Furious M&S activists stormed the branch, escalating tensions in a protest against the bank's actions. And India has issued a sharply worded response to US President Donald Trump's warning of increased tariffs over Russian oil imports. The Ministry of External Affairs defended its energy strategy, calling the targeting by the US and EU unjustified and unreasonable. And tensions between the US and Russia have escalated again. Russia has officially pulled out of a key nuclear test ban treaty, with the US blaming recent moves by President Donald Trump and NATO's growing pressure. Moscow says the decision to exit the pact was forced by Washington's actions, especially the deployment of nuclear submarines. The US is launching a 12-month visa bond pilot that could require business and tourist visa applicants from certain countries to pay refundable bonds up to $15,000 before getting entry clearance. That includes nationals from countries with high visa overstay rates or weak vetting systems. The bond set at $5,000, $10,000 or $15,000 is refundable if visa holders follow the rules. The program starts around August 20th and applies only to B1 or B2 visa seekers. A chikungunya outbreak has swept China, with over 7,000 cases since July, hitting Foshan city hardest. The mosquito-borne virus, causing fever and crippling joint pain, has prompted COVID-style measures. In Foshan, patients are confined to hospitals under mosquito nets, discharged only after testing negative or a week-long stay. Authorities have released 5,000 larva-eating fish and imposed fines for stagnant water. Common in South Asia and Africa, chikungunya is a rare disease in China, but the CDC's Level 2 alert warns travelers to take precautions. Hong Kong reels from its heaviest August rainfall since 1884, with over 350 millimeters of rain by Tuesday afternoon, flooding hospitals, schools and courts. The deluge, linked to a stalled monsoon, crippled the Pearl River Delta's high-tech cities, with 20% of flights cancelled and rivers at risk of bursting. Videos showed torrents turning Hong Kong staircases into waterfalls as authorities urged residents to seek shelter amid ongoing severe weather. And Brazil's Supreme Court defies US pressure, orders Bolsonaro's house arrest. Brazil's Supreme Court orders house arrest for ex-President Jair Bolsonaro, accused of plotting a 2022 coup despite US sanctions and tariffs. Justice Alexandre de Moraes, sanctioned by the US Treasury, cites Bolsonaro's violation of court orders, including seeking Trump's interference. The move escalates tensions as Trump imposes 50% tariffs, calling the trial a witch hunt. And what a finish at the Oval. India scripted a dramatic 6-run victory over England in the 5th test, levelling the Anderson Tendulkar Trophy at 2-draw. Mohammad Siraj was the hero, delivering a fiery 5-wicket haul, including a match-winning Yorker to dismiss Chris Woakes. England, needing just 35 runs on day 5, crumbled under Siraj's spell, with Prasidh Krishna's 4 wickets sealing the collapse. Shubman Gill's gritty leadership ensured a historic series draw. And in a shocking move, Bengaluru FC, one of India's top football clubs, has indefinitely suspended salaries for its first team players and staff, including legend Sunil Chhetri, due to uncertainty around the Indian Super League's 2025-26 season. The club cites an ongoing deadlock between the All India Football Federation and Football Sports Development over the league's future. And Mohit Suri's Sayyara, starring Ahan Pandey and Aneet Padda, soars past 302 crore rupees in India, but hits its lowest daily collection of 2.5 crore rupees on its third Monday. The romantic drama, which earned 172.75 crore in just a week and 107.75 crore in the next week, faces stiff competition from Mahavtar Narsimha, son of Sardar 2 and Dhadak 2. Despite the dip, Sayyara remains a blockbuster with projections of 325 to 350 crore rupees by the end of its run, proving newcomers can dominate Bollywood's box office. And with that, viewers, it's a wrap on Market Express, but do stay tuned to NDTV Profit as we continue to give you a lot more news and updates.
The world has changed since the RBI governor delivered a massive 50 basis points rate cut on June 6th. Should Sanjay Malhotra cut rates further before the festival season, or should he hold rates? The most comprehensive, insightful 360-degree coverage of the monetary policy with the best experts from 8 a.m. on August 6th, only on NDTV Profit.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बार को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and
Market closes lower after Trump intensifies his tariff threat. Nifty closes below 24,700 with Reliance as a top dragger for the Nifty. Sensex loses more than 300 points. Most sectors end lower. Rupee closes at 87.8 against the dollar, 14 paise lower compared to its Monday close. Enforcement Directorate grills Anil Ambani in the 17,000 crore loan fraud case, asks him if he or his senior executives were aware of or involved in any irregularities and if the loan defaults were deliberate. Innocent Bank gains close to 2% after appointing Rajiv Anand Managing Director and CEO for 3 years, resolving accounting concerns with regards to derivatives, and the bank's microfinance book are the key responsibilities that lie ahead for him. SEBI likely to form a specific division to look into manipulation by high-frequency trading firms like Jane Street. Meanwhile, exchanges submitting regular data on Jane Street activity across indices to SEBI as the trading firm prepares its reply to regulators' notice. SEBI mulls ways to reduce volumes and volatility in options trading. Sources say the market regulator aims to bring fortnightly or monthly expiries instead of weekly. Cloudburst in Uttarkashi leads to flash floods in Dharali village. At least 50 people missing with several houses swept away. Hello and welcome viewers. This is Profit 360 on NDTV Profit and I'm your host Marico Mishra. Along the next half an hour, we will be bringing you the latest updates on markets as well as national and international news, so stay tuned. Trump's fresh salvo on tariffs weighed on the market sentiment as the benchmarks closed lower. Nifty ended below 24,700 and Reliance contributed the most to its fall. Most sectors finished in the red. Let's go across to my colleague Harsh to wrap up the day's market action.
Well, it's a tough day for markets, frankly, and we've given up all of the gains we've made on Monday, or nearly all of it that we actually made on Monday, and that's what's really standing out, that this market is not going anywhere at this point. We were 1/3% lower where the Nifty is concerned, and not too bad, given that some of the heavyweights, especially on the bank Nifty, you talk about an HDFC and ICICI, all of which closed in the red, and they pressured markets to some extent because they are heavyweights. Reliance also was the other one which closed in the red and which kind of pressured the index. So when you pull out the contributors, that's what you likely see. That's the tilt you'll see with regard to where contributors is concerned. And now let's talk sectors, and even within sectors, plenty of pockets there which were facing some bit of pressure today. And auto, the Nifty Bank, I did speak about 0.5% lower on the Nifty Bank. You also saw pressure coming in pharma. So some of those names did see some bit of pressure today, which kind of overall pressured the markets as well. The breadth too wasn't exactly favorable. 5:9. We had just about 5 advances for 9 declines. So nearly 1:2 the advanced decline, and that too kind of built pressure on the broader markets. The broader markets largely closed in line with the Nifty, 1/3% lower on the Nifty small cap, around 1/5% lower on the Nifty mid cap as well. So broadly we tilted towards the negative. The one key positive from all of this is, if you look at the range on the Nifty, it was a very, very tight range, narrow band in which we've traded in all through the day after that initial spike where we fell. So apart from that, it's been a fairly range bound day, and we see a marginal recovery right at the end. So maybe that's just the silver lining in all the grey that we saw today. But broadly, that's how it's played out. Even within broader markets, there was pressure. I did speak about the advanced decline, and a lot of the tilt is towards stocks which are declaring numbers, especially disappointing numbers, where stocks are really being beaten, and where the numbers are okay, we're seeing good traction on some of those counters.
Right, Harsh. Thank you so much for wrapping the market action for us. But given the prevalence of market uncertainty and global disturbance, how difficult is it to measure risk reward and execute profitable trades at this time? Let's hear in from Ashwini Agarwal, founder and partner at Demeter Advisors, on this and more.
There are a lot of events which are shaping up the market. So on the downside, I mean, you have a very weak earnings season playing through. You have, all the noise on the tariffs that is roiling the market sentiment. And lastly, you have a huge amount of paper supply via the IPO and offers for sale that are going on a day-to-day basis. So, there's really all the three factors hitting the market. And on the upside, I mean, one hopes that, what RBI has done by way of improving the liquidity, and there is surplus liquidity of 4 lakh crores in the banking system, what they've done on interest rates, and apparently another 25 basis points might be on the annual, that might help demand with a lag as the year progresses. But that's just a hope. I mean, as of now, there are no signs that consumer demand is anything to write home about. So yes, it's a very, very challenging situation. both on the downside and on the upside. My sense is that, the correction that we have seen in the last 3 to 4 weeks probably limits downside to not more than 5% from here. But, I'm just kind of sticking my neck out, and it could be a lot more, who knows. Depends a lot on how the US does from here.
And the Enforcement Directorate is currently questioning Reliance Group Chairman Anil Ambani at its office in New Delhi in connection with an alleged 17,000 crore worth bank loan fraud linked money laundering case. Sources say he will not be allowed to have a lawyer present with him during questioning, and the entire questioning session will be recorded on camera. Statements recorded under Prevention of Money Laundering Act are admissible in court. My colleague Shrimi is now standing by at the office with more details. Shrimi, what do we know so far about this case?
Yeah, so, it's been 5 hours, Enforcement Directorate grilling Anil Ambani, and in fact, this is after a brief lunch break of around 30 to 40 minutes, and the ED officials resumed the questioning again around 2 is what indication we are getting. And the key question ED asking at this point, the major questions include that whether he has been, or his senior executive aware about any of the financial irregularities which flagged by Enforcement Directorate during its finding, the search operation, etc. The other question he's been asked on whether any personal influence, is there related to its decision to, loan the ADAG group of companies getting loan, and that is what ED also pointed out. ED is probing here 17,000 odd crore of illegal loan fraud. And the third important point is, being asked from the Anil Ambani on the kickbacks, the allegation of the quid pro quo, where the Yes Bank has sanctioned and disbursed loan to Reliance, and it came back to the Rana Kapoor's family offices, and that is what the kickback and the quid pro angle ED is questioning on those lines. And in fact, other than the bank guarantee and the arrest which has been made in the Orissa-based entity, the businessmen who actually kind of executed and facilitated the entire fake bank guarantee to secure that government tender for Reliance is also something being asked. But the important aspect is that all these statements are getting recorded, both audio and video, that will be straight presented to court. There won't be any alteration or any changes, because whatever you state under PMLA, that will permissible in the court, unlike any usual police complaints. So but the crucial point which is also emerging, that so far Anil Ambani has said that he is not aware of the many transactions which ED is talking about. In fact, he is saying that he is not aware about the documents ED is presenting in front of him. He is also talking about that the key executives of his is actually taking care of the entire operations, financial operations. So he is not really kind of aware about many facts. But ED is countering those claims and presenting the papers and the evidences in front of him, saying that this is the paper you signed. So what we have to say on that? So the cross-questioning is underway, and as things progress, as the questioning progresses, because it will go on for some more time, is what sense we are getting. So clearly we are watching out that, and we keep updating you.
Shrimi, thank you so much for that. As Anil Ambani and the ED are sort of in a cross-questioning session, we will continue to get you a lot more updates. Thank you so much for joining us from the ground. And moving on, viewers, the leadership at IndusInd Bank enters a new era with seasoned banker Rajiv Anand set to take over as MD and CEO from August 25 for a 3-year term. An asset management veteran and former deputy managing director at Axis Bank. We bring in Vishwanath Nair to give us more perspective about this one.
Yeah, I mean, Rajiv Anand does have his work cut out for him. There's a lot that he has to do once he jumps in to the chair on the 25th of August. But let's take a sort of a broader look at who Rajiv Anand is and what his job is looking like. So Rajiv Anand, of course, he's an asset manager who turned full-time banker a few years ago, and now he's going to lead IndusInd Bank from the 25th of August. His appointment is effective for 3 years, so 2028, after which we'll know whether that appointment is working or not, and the RBI will then extend his appointment at the bank. He also retired early, just this week actually, the 3rd of August. He retired early from Axis Bank. At that point in time, it was not clear whether this was for this IndusInd role or not, but now we're finding out that is the case. Now, I was looking at his professional journey between 2009 and 2013. He was the CEO of Axis Asset Management. In 2013, then he became the president of the retail banking division at Axis Bank, after which he was elevated to executive director role for the retail business. This is the first time he enters the board at Axis Bank. And then in 2021, he was elevated to the deputy managing director role, which he held till he quit only in August of 2025. His career started at HSBC. At that point in time, he was a currency trader. Since then, he's worked at ANC, Grindlace, IDFC, and Standard Chartered. All of these roles were linked to asset management businesses of these banks. Now, looking at the challenges that face him, right, once he takes over at IndusInd Bank. The bank is currently facing a lot of challenges, and these are on multiple fronts. The first of which is, of course, the derivatives accounting, which is what came out back in March when the then CEO of IndusInd Bank came to the public and said that there was an issue at the bank. After that, more disclosures came in, and then microfinance business also came into the picture. There as well, there were a lot of issues as far as IndusInd Bank is concerned. Governance concerns have been repeatedly happening there because SEBI in its investigation found out that both Sumant Katpalia as well as his deputy CEO Arun Khurana at the time were dumping their stock before disclosing this information to the public. Sumant Katpalia and deputy CEO Arun Khurana both quit in April after these disclosures came out. The bank is currently, SEBI of course found the evidence of insider trading at the bank. Currently the bank is being run by two senior executives who are on the board, and they are running the bank as executing the CEO's role. What are Rajiv Anand's first tasks? Now that is the important bit. Currently, his first task is to ensure that there is a credible and trustworthy management team. Remember, the bank doesn't have a CFO, the bank doesn't have a treasury head, an internal audit head just quit last week. So all of these positions are very, very important for a bank. They need to be appointed. Secondly, he has to rebuild trust in the bank's microfinance business, which is the big sore point for IndusInd Bank. He also has to reorient the growth strategies at IndusInd Bank, because those are key to ensure that the bank continues business as usual and becomes a stock favorite again. He has to ensure that commercial vehicles and gems and jewelry lending, which are core businesses of IndusInd Bank, are reinvigorated, and those businesses can focus on delivering growth. And finally, he has to ensure that there are new areas of growth that he needs to focus on, which is housing finance, a fairly new business that IndusInd Bank started only about a year and a half ago, and they need to deliver. Rajiv Anand and his team have to deliver growth on that front.
Right. Thank you so much for bringing us a snapshot of who Rajiv Anand is, what challenges lies ahead for him, and a lot more, Vishy. But it's time for an NDTV Profit exclusive. In the wake of the Jane Street controversy, SEBI will create a specialized division to investigate potential manipulation by high-frequency trading firms. We have my colleague Charu now joining us with more details on this.
The Securities and Exchange Board of India is mulling to sort of create a group or a division of one of their most qualified employees or officials to look into the manipulations caused by high frequency trading firms. Now this is going to be a department or a division in itself, and it is going to look into Jane Street issue at first or any other related party issues at first, but it is going to be having a more permanent position where they will be looking at such manipulations by foreign entities or HFT firms later on. This is going to be a group of people who are highly qualified and are going to be from different other departments of the regulator. Currently, we also know that due to the enhanced scrutiny that is on Jane Street, it is sitting on major trades, holding back from doing any major trades for now, and has also sought more time from the regulator to give their reply or response to the proceedings that are going on.
Right, Charu, stay with us. SEBI is also mulling ways to reduce volumes in options trading. Sources say SEBI committee is to meet on the 19th of August to discuss key details on reducing volumes. What do you have on this one?
So the market regulator, Securities and Exchange Board of India, is currently looking at ways to reduce volume in option trading segment. Now, one of the ways in which they are trying to do it is to encourage activity in the cash market instead. Now, again, coming on to how they are planning on doing it is recommending to the Finance Ministry about how to, they can go about reducing the STT on cash market transactions. Apart from that, they are also, suggesting that the fortnightly or monthly expiries instead of weekly expiries can be brought in, which is leading to some of the impact on stock exchanges as we are seeing right now. Apart from this, there has also been recommendations to reduce margin requirement in cash market segment. Now, these are some of the changes that are being explored right now. Nothing is set in stone, but we also know that the SEBI committee, the Secondary Market Advisory Committee, SMAC, is also going to be meeting on August 19 to deliberate further on this issue and come out with some concrete details. So we'll keep the developments flowing. That's all we know for now.
Right, Charu, thank you so much for bringing us those details. But as far as the Indian economy is concerned, will RBI cut rates again, or will Sanjay Malhotra hold rates steady? All eyes now will be on the RBI MPC meet tomorrow. Poll of economists say that rates are most likely to be held steady. Vishwanath Nair joins in with more details on this.
Right. So what we do know at this point in time about the monetary policy is that there is a majority economist sort of viewpoint that the RBI and the MPC are going to hold rates. That is true. However, what you need to also understand is that the voices on the other side, which are expecting a rate cut, are not that silent. Actually, the breakup is quite strong. If you were to look at 10 economists that NDTV Profit has polled, 6 of them believe that there is going to be a rate pause. There's going to be a pause by the MPC. 4, however, still expect a 25 basis point rate cut. So the 60-40 ratio is not that small if you were to look at what historically these breakups have been like. If you were to look at the stance change, now remember that the RBI about 2 policies ago had come up with a neutral stance, and it is expected, however, majority of the economists once again are expecting that the status quo will remain, that neutral stance will remain. However, 4 of them still believe that there is likely going to be a change. The RBI might become more easing in its approach. Monetary easing might make a comeback on as far as the monetary policy stance is concerned. Just taking a look at where the macro indicators are at this point in time. Just look at where the June CPI inflation is. The retail inflation is about 2.1%. That's a historic low. And it's at the lower end of the RBI's tolerance band. Remember, 4% is a target, but plus or minus 2% is a tolerance band. So at 2.1%, it's at that lower end. And the July CPI is further expected to moderate. So that is going to put some amount of easing as far as the Monetary Policy Committee's discussions are concerned. Bank credit growth. There again, the June credit growth is at 10.2%. June is when the RBI made that 50 basis point massive rate cut, and since then a lot of banks have been cutting down their credit growth, have been cutting down their interest rates to boost that credit growth. However, that's still not showing in the numbers. You know, a year ago it was about 13.8%, so that's 10.2% is still quite low. If you were to look at where the GDP numbers are, the Q4 GDP number coming in at 7.4%, that showed that growth in Q4 was still strong. However, for the full year, FY25, that GDP growth is estimated at about 6.5%. So below normal, however, still strong. As far as IIP is concerned, that the index of industrial production is at a 10-month low already. And that's an important indicator because that shows that growth is slowing down, inflation is low, room for rate cut has improved, and that is why you're seeing that breakup when you look at the economist expectations. 4 of them out of 4 out of 10 still believing that there's going to be a rate cut.
Right, Rishi, thanks for that. Meanwhile, let's take a look at the currency market. Tariff tensions weighed on the rupee as it weakened to 87.8% against the US dollar. The Indian currency came under pressure after US President Trump attacked India yet again for its oil trade with Russia. And Tata Motors announced that PB Balaji will become the CEO of Jaguar Land Rover starting November 2025. He will replace Adrian Mardell, who is retiring after serving as CEO for 3 years and working with the company for 35 years. Balaji has been the group CFO of Tata Motors since 2017 and has experience in finance and supply chain functions in the automotive and consumer goods industries. The board approved his appointment and Mardell will assist with the transition until his contract ends. He has also expressed his commitment to leading the company in the coming years. Balaji, with this, will be the first Indian CEO of Jaguar Land Rover. And Ather Energy announced its first quarter results for FY26, logging a net loss of 178 crore rupees. This marks a slight improvement from the 183 crore net loss the electric two-wheeler manufacturer reported in the same quarter last year. Earlier today, we spoke to Ather Energy's CEO Tarun Mehta, shared that the company's strategy for the future, including plans for capacity utilization and regional expansion. Let's listen in.
We've already acquired roughly under 100 acres in Chhatrapati Sambhajinagar in Maharashtra, which is where installation of a new factory will commence very shortly with the IP proceeds. Currently, we intend to continue our production out of the Hosur facility in Tamil Nadu and also the new facility in Aurangabad. Utilization of a current factory is rising up really fast. As you saw in last quarter's performance, sales grew almost 100% over previous quarter. And at that time, we were at about 30-35% utilization. So you can see the trajectory. In fact, my number one worry right now is that would we hit peak capacity even before Aurangabad goes live? So team is running full steam ahead to make sure Aurangabad, Chhatrapati Sambhajinagar comes live by next year, so that we manage the demand really well.
And Vietnamese electric car major VinFast, that has opened its EV making plant in Tamil Nadu's Thoothukudi, has opened its first Indian showroom in Chennai. NDTV's Sam Daniel sent us this report. Let's take a look.
This is the first Indian showroom of VinFast at Chennai's Tenampet. It's a 4,000 square feet area one, where they have displayed two models, the VF6 and VF7. In fact, the VF6 is a 4.2 meter long vehicle with a battery capacity of 60 kilowatt, and the VF7 is the 4.5 meter long vehicle category with two battery options, 70 kilowatt and 75, with an option to have a four-wheel drive. The price of these vehicles have not been officially announced yet, but VinFast has launched its pre-bookings, and the CEO Asia of VinFast has said the bookings are quite encouraging. In fact, the Thoothukudi plant inaugurated yesterday is the first plant for VinFast outside its home turf, Vietnam. So the company is quite excited. I'm going to get into this VF7 to give you a sense of how the vehicle looks inside. In fact, the Thoothukudi plant plans to roll out at least 50,000 premium SUVs this year, and it has a capacity of 1.5 lakh vehicles every year. In fact, the company plans to turn this Thoothukudi plant into a hub for its exports to the South Asian market.
A cloudburst has triggered flash floods and landslides in Uttarakhand's Uttarkashi district, causing severe damage and leaving 50 to 60 people missing. So far, 15 to 20 individuals have been successfully evacuated by the Indian Army. The flash flood occurred near Dharali village, close to the popular tourist destination of Harshil, with several homes, hotels and shops swept away by the raging waters. And with that, viewers, it's a wrap on this edition of Profit 360. But do stay tuned to NDTV Profit as we continue to give you a lot more news and updates.
The world has changed. Since the RBI governor delivered a massive 50 basis points rate cut on June 6th. Should Sanjay Malhotra cut rates further before the festival season, or should he hold rates? The most comprehensive, insightful 360-degree coverage of the monetary policy with the best experts from 8 a.m. on August 6th, only on NDTV Profit.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए ये तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए ये तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the action.
Hello and welcome. You're watching KYC and today is going to be interesting if you like turnarounds, because this one could well be a very large turnaround if it were to play out. They are penciling in a top line which will likely double in 2 years. It's an established company. We're talking about Balaji Amines, and this could well be the play if all of this plays out in terms of what they are gunning for. Let me first start off with what I want to know. The first thing, what's been tepid and what's keeping a lid with regard to stock price action today is the fact that volume growth hasn't been seen even in Q1 FY26. So can volume start to pick up going forward is the first and foremost thing I'd want to know. And if not going forward, what is the visibility like with regard to volume uptick? Second piece, new capacity. They have put out 2 new plants over the last 3 months, and how and when does it start impacting the top line of the company is what I want to know. Third one, Chinese dumping and destocking. One is Chinese dumping, the other one is destocking from global players. This is where the pressure on Balaji Amines is coming from. How are they dealing with this, and how far are we from a revival on both of these metrics, or on each of these metrics? FY26, what are pricing trends and expectations that we are looking for? FY26, is there a scope for margin recovery? Are input prices looking better, likely, and therefore even if there is no top line tailwind, could there be a margin tailwind we could see? And how confident is the 3,000 crore top line and the 19% margin guidance for FY27 looking at the back of everything that's played out? I'm Harsh Saita. Joining me today is Varsha Chandnani. As always is the case when it relates to chemicals or pharmaceuticals, and therefore I'll hand it in her capable hands to drive us through what the company does. Balaji Amines, Varsha.
Thank you for that. So, before speaking about what Balaji Amines does, let's just, focus on what are amines. So amines are chemicals used, primarily as solvents in pharma and agrochemicals, and the applications include your solvents, which derives almost 44%. You have pesticides, your animal and feed additives. So these amines are used in solvents, pesticides, and feed additives. Now, if I were to talk, so nothing but they are basically solvents. That's it. Now let's talk about the market size. If you see the global.
Sorry, Varsha, I am interrupting. What are solvents?
Nothing. You just binding.
It's a liquid. Which ensures that your formulation is derived correctly.
Correct.
If that is the correct explanation.
Yes.
But yes, for the viewer, that's what a solvent is.
Yes,
because
correct.
you say solvents in a very easy fashion. It's slightly difficult for some of us laymen to understand that. Anyway, please go ahead.
Okay. Now, talking about the market size. So, a global amines market size, if you see, stands at around $4.9 billion, and top 6 companies control 50% of the global capacity, and we'll see why. And China leads with 60% of global production and consumption. Now, what is the moat and why there are only few players when it comes to, amines industry? Number one is, it's the amines itself is very hazardous when it comes to transport. It's very corrosive and highly, flammable, making transport very, very risky. And so this is one of the reasons why you have only 4 to 5 players in the world. And in India, you have alkyl amines and Balaji Amines. Now, technological expertise, if I were to talk about, limited company, possesses technology to manufacture amines. For example, alkyl amines partnered with Western players for technology, but Balaji Amines, developed its own technology when it comes to, amines technology. Now, the other point why there are only few players in this industry is this amines require very high capex, and significant investment is being required to set up these facilities. Also, when your amines or when your product is being used in pharma, in agro, all these MNCs, they require regulatory approval, or I would say customer validation, and this takes 2 to 3 years of customer validation. So if Balaji Amines were to supply amines to XYZ company, that XYZ company will require 2 to 3 years to check whether the amines produced by Balaji are good enough for them. So 2 to 3 years is the gestation period, I would say, when it comes to amines industries. Also now, so this is basically what amines are and why there are only few players in this industry, and what is the moat behind this company. Now, talking about Balaji Amines, so they manufacture aliphatic amines and derivatives. So you have amines, and then you go down, you derive products, you would say value added products or derivatives from those amines as well. So companies make amines and its derivatives. Now, for example, talking about amines and specialty chemicals, what they make methyl amines, ethyl, amino, ethanol, etc. Don't go by names. These are used in pharma, agrochemical, rubber, pesticides, rocket fuel. Who are the clients for these companies? When you say pharma, you have Cipla, you have Piramal, you have Thermax, you have Lupin, who uses amines from Balaji Amines. Now, talking about the amine derivatives, let's go one step down From amines, they manufacture derivatives, and these are used in pesticides, performance chemicals, animal feed, your specialty chemicals, and these are used by who are the clients? You have Sun Pharma, you have Walk Hard, you have Ipca, you have Aarti Drugs, using these amines derivatives. Now, a very useful piece of information, one of the challenges that this industry may have, or this industry is going through, is that customer is becoming a competitor. For example, Aarti Drugs is coming out with its own amines facility or amines capex. Your customer is itself going into your product. So this is one of the challenges or one of the risks that the company has. Moving on, if I want to talk about the specialty and other chemicals, there are acetonitrile. You might have heard this number of times, anti-dumping duty on acetonitrile. So these are all the chemicals which are used in your water treatment, in your pesticides, in your pharma intermediates. And if I want to talk about who are the clients when it comes to specialty and other chemicals, you have Indian Oil, you have GAIL, you have Zydus Life Sciences. So overall, if you see, we have amines. What are amines, and what are the products when it comes to Balaji Amines? So pretty good company when it comes, because only 4 to 5 players, Harsh, in the globe. So, and this company has developed their own technology, the other good thing. Now the other thing is, because of the challenges that the industry is going through, Balaji Amines is no exception to this. But also one more thing, very small portion of revenue comes from the hotel business that they cater to, and that's one of the reasons. We'll talk about this while valuations,
Okay.
Their hotel business.
But so they have a single hotel.
Yeah.
Right. And how much of a focus is that with regard to where the business is concerned?
So
do they focus too much?
No.
Not so much.
So the good thing is, not much capital has been employed towards hotel business, the good thing in the recent years. So that's the good thing. And also the specialty chemicals, we should, we might ask to management, they were expecting IPO for specialty chemicals. So let's see where they are when it comes to
that could be some value unlocking opportunity. But let's quickly look at the metrics that we will talk about when it comes to our Balaji Amines. We'll start off with the income statement, the balance sheet, the cash flow, return ratios, shareholding, street cred. There's no street coverage, or rather just 2 analysts cover this counter, and therefore we've excluded that. And then there is outlook and valuation. So we'll speak about all of that. But let me have Varsha start off with the income statement. Varsha, can I request you 2 things? So when you are talking about the income statement, give us perspective. The numbers are already on the viewer's screen. What's happened? And what are the key drags that the business, or the headwinds that the business is facing, that we're seeing the kind of numbers that we are seeing?
Yeah.
2400 to 1400, and doesn't look pretty, right?
Yeah, exactly. So what we'll do is, first I'll just go through how the numbers have been, one thing, and we'll also focus on margins. Look at the margins from 26% to 19%. We'll talk about that also. But first thing is why the revenue numbers or the net profit numbers have gone down drastically. Now this is true across industry. You have global chemical downturn that you're seeing, which has been impacting every chemical company. Now this faced a significant slowdown post COVID-19. This impacted demand across various end user industries, like you have agrochemicals, you have pharma which consumes amines and specialty chemicals. Now the agrochemical sector, which is now the key focus over here, is the agrochemical sector, which is a key user of amines, experienced volatile demand due to inventory destocking, due to China dumping, due to erratic monsoons in certain regions, and due to the pricing pressure because of the dumping and because of the destocking. You had the end product price went down, and this affected the revenue for these companies. So overall, because of the pricing pressure in the overall chemical industry, is one of the reasons why the numbers for the Balaji Amines and even for Alkyl Amines doesn't look good. But talking about the margin, so this is where the interesting point is, why the margins have gone down significantly. Look at there. in FY22, the margin were like 27%, which has gone down to 15%. Now, the one thing is, this was clearly evident that 26% won't last, even for, alkyl amines. Alkyl amines showed margins of around 33-34%, which was not sustainable, as said by management of these companies. Now, why? Because the spike during FY21 and 22 that you're seeing is due to acetonitrile price surge. So the end product price, that is acetonitrile that we were speaking about, a chemical which is used in your pharma and agro, and in water chemical as well, the prices of that product surged. So it surged from 160 per kg to 280 per kg, and this is one of the reasons. And why it surged? Because of the high pharma demand, and this is one of the reasons your margins spiked up drastically. And when the end prices of acetonitrile gone down, the margins have also gone down, coupled with the pricing pressure across industry. So so overall, if you see, the company has not done good, and this is one of the reasons why we are giving thumbs down.
Very simply put, 3 factors: China dumping, some bit of stocking up which had already happened during COVID, the unwind of which hasn't yet happened, and higher raw material prices. Those are the 3 factors why you're seeing what you're seeing on your screen. The profit hit, as well as the top line being hit, as well as the expense line being hit. So all 3 have been hit adversely because of this. Okay, so broadly that's the take. Let's talk about the balance sheet, and now we'll move fairly quickly because we're now behind the most important part of this discussion. The balance sheet, around 1840 crore in terms of equity shareholders funds. We are sitting at around 5,000 crore in terms of market cap. So that's the price to book. There's no borrowing on the balance sheet, fairly clean balance sheet per se on a standalone basis. There's no debt which is likely to be taken as well in the future. Maybe to fund some bit of capex, a subsidiary might take on 150 odd crore of debt, which is honestly very, very minimal. So really no concerns. You look at the cash and bank balance as well of 360 crore. There's enough room there as well. So broadly, that's how the balance sheet looks. But the cash flow, Varsha.
Yeah, so cash flow, Harsh, as you in starting you had pointed out that company is doing a lot of capex, and that's one of the reasons the net cash flow is negative, because they've done a lot of investments. So if I were to talk about in 2024 and 2025, the cash flow from investing activities in 24 was almost 274 crore. Then it came to 140 crore. So because companies doing a lot of investments, you're seeing the net cash flow either a negative or very minimal amount of net cash flow with the company. So overall on the cash flow statement, we would give a neutral stance because of the investments that the company has been doing.
And even when I'm talking return ratios, the headwinds you're seeing on the income statement is translating on the return ratio. So we had very, very good tailwind till FY23, numbers reflecting on your screen, 36% ROC. If I push it back to FY22, it was north of 45% ROC. So very, very strong, but it's fallen to 11%. The recovery completely depends on the 3 factors we spoke about on the income statement side. So you want to monitor that. Shareholding pattern, Varsha.
Overall, shareholding pattern, I mean, it's kind of thumbs up, nothing much dramatic there. Promoters' stake has been increased a little bit, that's a good thing. FIIs have maintained their stake at almost 5%, and even DIIs, if you see, has been maintaining that stake. So overall, it's a thumbs up when it comes to shareholding pattern.
Okay, let me take you through street cred. The last 1 month stock is down 20%, last 6 months 12% down, year to date 15% down, 1 year 33% down, but 5 years the stock is up 2.5x, and that's what's driving possible profitability, at least for the longer term investors who are likely to hold on better. So we've given this a neutral. Short term, of course, we've seen pressure. Varsha, both outlook and valuations.
Yeah, so starting about outlook, so they're targeting 3,000 crores of revenue in 2 years, and with the expected volume growth was 10 to 12%. Especially as the new capacities ramp up in FY26, I'm talking about. EBITDA margin expected are 19 to 20%, and the total capex that they're expecting standalone, not considering the specialty chemical, is 200 to 250 crore over the next 2 years, which is already in focus, in progress. Lastly, on the valuation side, if you see, now comparing with alkylamines, the valuation is at a discount now. There are many reasons for that, considering the management pedigree, and of course because of the investors' concern about the hotel business, and also the when it comes to the net profit, or when it comes to all the financials, the weak financial that the company has seen. So all these parameters, have led to, I would say, a discount valuations compared to alkylamines.
Okay.
Now, so company has to prove, for that premium valuations for Balaji Amines, yeah.
Yeah, but the likely silver lining in all of this is the fact that if they do a 3,000 crore in FY27 with a 20% EBITDA margin, that will mean 600 crore in the kitty. That is phenomenal, because that will in itself mean that the company is flushed with 1,000 crore of cash. Not just that, enough to do the very small capex that they are expected to do, and further leverage on the opportunities available. So that's how the rating parameters stack up. We've given valuations a thumbs up only for that reason, with the potential turnaround opportunity which could come about. We'll get a better perspective as we're joined by management. 4.5 on 8 is what this one gets. We're joined by D. Rama Reddy, who's the Managing Director, Balaji Amines, joining us. It's a pleasure having you. Sir, first give us a perspective on how Q1 has gone for you, and what set up the context for us for FY26. Both in terms of volume, what price trends are you seeing? What should we expect in terms of top line, because you've added capacity? Just give us a quick color on those factors.
Thank you, Ash. See, actually, in spite of many hurdles, you know that the chemical industry and the pharma industry is going in very different windfalls. So we have done par with the last quarter, as well as if you compare with the last year also, the same margins, 19 to 20% we maintained. And actually, there's a improvement has started. Last 1-2 months, we have seen that uptake has improved. But again, we have seen some of the volatility because of this tariff news. And second thing, because of the dumping from the China, we have applied for some of the products for the anti-dumping. And also, we have learned to live with whatever is available if we are not getting the benefit of anti-dumping. So there's a reason, in spite of all these things, we have made same. And we expect in coming quarters, there should be, because as you rightly said, there's some capacities will be coming into the stream. Actually, one capacity has just came about 2 weeks back, 2 to 3 weeks back. That is isopropylamines. That is doing well. And this dimethyl ether, which is plant is ready, but we are fighting for the, I can say the fighting word only, because when we make any product first time in the country, there are a lot of hurdles are there in the approval point of view. We are waiting for the PESO approvals for the storage and transportation of this product, dimethyl ether, because it's an alternate to the LPG. Actually, BAS has already given the go ahead for the blending of 15 to 20% blending of dimethyl ether into the LPG. So we are expecting these should come in this quarter. Then this plant will start. And after this, there are the 2 more plants in the pipeline. One is the N-methyl morphine. Again, with the new technology we are coming up. And another product, which is the old product, the acetonitrile, we have taken up the dumping up. That is also coming up by end of the year. These 2 plants will come into the stream. So there will not be much up in this year, but definitely next year, as we said, in the 27, there will be definitely, we will reach to the 3,000 crores, what we said in the earlier call.
So Mr. Reddy, hi, this is Varsha this side, pleasure to have you. So you are expecting 3,000 crores by FY26 with 19 to 20% of EBITDA margins. Got that point. Also, Mr. Reddy, you were expecting 10 to 12% of volume growth in FY26, and now in Q1, year on year, the volume has decreased. So just wanted to have your view on overall outlook when it comes to volume and of course the pricing trends that you are seeing.
I'll tell you, see, if you look at the consolidated basis, at subsidiary level, we are having two activities. One is the brownfield modification of the plant. Other way is the greenfield expansions are going on. These both activities are taking place. That's the reason nothing is happening in the top line point of view at subsidiary. That has impacted on the total top line, even volume growth also. We have seen marginal last quarter, this quarter, there was about 800 to 1,000 tons increase in the volume growth. But going forward, because one plant we have started and other plants which are gearing up, so we will see as per the our guiding, about 10 to 12% volume growth should be there. And what we have seen in the last 1.5 months, there's an improvement in the margins and pricing. See the in spite of all these hurdles, we have maintained the 20% of the EBITDAs. We should aim better than this, not if not less than this. We should go better than this in the margin point of view. And as I said, in 2027, not 26, I'm telling you 2027 end, you will see this 3,000 crores turnover definitely because all these plants will be coming to the stream, including the acetonitrile, and some part will come from the subsidiary also. The brownfield will finish by end of this year, and even greenfield also will start by the end of the year.
Trends are you seeing on the destocking side of things? Talk to us about that. We've been talking about this recovery in specialty chemicals for a while now, but that's not reflecting, sir. So give us that perspective.
Because of the volatility, you are well aware. You have seen what is happening every day. Yesterday, Trump said 25%. Today is talking different. So this volatility is also giving some doubtful things for buyers. See, I'm selling almost 10 to 15 containers of my material every month to USA. People who bought few weeks back, they are in a puzzle. What will be its duty when it arrives at their doorstep? So these type of volatility is giving some pinch to the customer end. But definitely there is a good days coming for the specialty chemical, because Make in India, what we are talking for these several years, we are all, Harsh, I will be very, very clear with you. We are creating the capacities, just waiting for the opportunity.
So who bears the tariff? Give us that perspective. Who bears the tariff? What are your conversations with your clients suggesting? Are you expected to do a lower margin on your product, bear some bit of that tariff, or not at all?
No, it should not happen, because earlier there was 0 to it has already come to 10%. There also we have maintained these margins. In fact, the day before yesterday, we were talking to some of the customers, overseas customers in the USA. They were saying that in this 25%, we are not asking you to compensate everything. They are also ready to forego to some extent. And it should be win-win situation. We may go for some 2 to 3% reduction from our price, and they will also going to bear whatever the new tariffs have come.
Mr. Reddy, so talk to us about the greenfield project when it comes to Balaji Specialty Chemicals, number one, and number two. I mean, you were in talks when it comes to IPO of Balaji Specialty Chemicals. So any update on that?
IPO I cannot say right now, because that will be with the hands of the board of directors of Balaji Specialty Chemicals. Larger board only can tell you, but we did not have any discussion on that. Once we finish, as we said earlier, these greenfield expansions, which will be finished by last quarter of this current year, then you will hear more good things about, because sodium cyanide, hydrogen cyanide, based on these two imported chemicals, there are many other products in the pipeline. So you will see, that's the reason I'm telling you 2027 will be much better. This 26 will be only, these products will be adding at the end of the year. But next year, definitely, you will see the good. You are well aware that we don't have any standalone basis, any debt, even working capital also we do not have. Even after finishing this also, we don't see that anything will go for the debt in the current financial year for the parent.
Right.
There may be little in the subsidiary because it depends upon the plant's commissioning. If we take some break in the plant's commissioning, then there also we will not have much of the debt.
Right. Sir, thank you. Actually, that's all the time we have. Unfortunately, would have loved to continue this conversation, but out of time. But very interesting, again, in terms of both guidance and perspective. Thanks so much for coming in and speaking with us. Out of time, from Varsha, myself, everyone who puts the show together, thanks so much for watching.
The world has changed since the RBI governor delivered a massive 50 basis points rate cut on June 6th. Should Sanjay Malhotra cut rates further before the festival season, or should he hold rates? The most comprehensive, insightful 360-degree coverage of the monetary policy with the best experts from 8 a.m. on August 6th, only on NDTV Profit.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the action.
Hi, thanks so much for joining in. You're watching Your Money Matters on NDTV Profit. And Usually, I attempt to make personal finance simple, easy to access for you. Now, I've decided to step out of the studio today because I'm here to meet the newest authors on the block in the personal finance space. They've recently written a book that makes things even simpler to understand. I know for a fact because I've read quite a few of the chapters. Not all of it. I'm yet to get through cover to cover. I will soon though. I'm talking about Mango Millionaires, and I'm here to speak to the authors that I mentioned, Radhika Gupta, Niranjan Awasthi. Thanks so much for agreeing to do this conversation with me. And I must say, a lot of the references give me ideas of how I need to talk about personal finance because you've made things so easy. But first, before we get into some of those chapters, and I've selected a few to talk about, where did the name come from?
Everyone's asking us where the name came from because I guess it's unique. Came from a movie. I mean, we've talked about it in the book, but it came from the word Aam Janta, Mango People, which I think Saif Ali Khan popularized when I told his wife this in Lava Ajkal. Aam Janta, who doesn't want to become Buffett or Junjunwala in their life, but just wants money to work for them, and hence Mango Millionaire. And then Niranjan's younger than me. He's like, this is fun, this is different, and it's a little aspirational. So, Mango Millionaire.
I like that you've not gone with Mango Karodpati or whatever else because it's more achievable. Even a million is 10 lakh rupees. And people, when they're starting out with 5,000 rupees or less of savings per month, they have a realistic goal to work towards. And thankfully, mangoes are more affordable now. But let's talk about some of these aspects. And I have chosen, I will enumerate chapters 3, 4, 5, 6, and then a couple of chapters after. And very interestingly, as you've done quite a bit in this book, you've chosen to have Bollywood references because people understand Bollywood. There is Tararampam, which you're talking about. And first, set the context. Why did you choose Tararampam? For, did I say an extra pump? But anyway, for people who haven't watched the movie as well, they should understand it. Niranjan?
So it's broadly a good movie, but also very relevant for a lot of people that we are living our lives today, and we call it YOLO, and everything is on EMI, loan, pay phone, you go for a movie also you can pay it with a credit card today. So a conscious use of credit card or debt rather is very, very important. And that's a famous action in that movie. He says everything, and Rani Mukherjee asks kahan se aaya, and he says like this. So you don't need to live your money life that way.
Including her engagement ring,
Absolutely.
which was like the memory I had. Like, the guy gave me an engagement ring and it's on a credit card.
Okay, so but this is the famous Saif Ali Khan Rani Mukherjee movie in which he's a race car driver and he's got everything on EMIs. And then suddenly he goes into this accident and he loses practically everything. And my producer was talking about this. Oh, the kid is eating from a garbage dump.
The kid is eating a donut from a garbage can.
Right?
And it's such a heartbreaking reference of life goes from riches to rags, and then the children have to bear the consequences. And they don't openly, the sad thing about that movie, which we haven't covered in the book, they don't openly talk about money with the kids.
Yes. Okay.
Which is also true of us in India. We don't openly talk about money.
So several things to unpack from that, Radhika. What was the intention? Ultimately, debt is not necessarily a bad thing if you're using it in moderation. But then this is worrisome because in the most recent data, and I did a show last week on this, is that the overdue loans in the credit card space are rising very exponentially, right? So 90 plus days to 365 days, you're talking about a 44% rise in just the previous financial year, which is scary because ultimately people are turning this credit card or debt over. You've written about this in the book, haven't you?
Yeah, and we are, neither of us is anti-debt, I went to school, college on an education loan. I'm not sure if Nandan did. Both of us I know have had home loans. So we make the difference between what is good debt, which services your needs. Education is a need, housing you're building and assets, and things that service your wants. So we're not saying, in fact, we have very few extremes in the book. So we're not saying all debt is bad, but we're saying take debt for the right things.
Rate paradigm is something that you speak about. What does that stand for? It's an acronym, and this is easy to understand. So rate, what does it stand for?
So rate is basically it actually gives you an answer whether your debt is good or bad.
Okay.
And how to identify whether a debt is good or a bad? One is first rate of interest.
Right.
If it's high, it's bad probably, because probably you're not affording, or you can't afford that debt, but still someone is giving you, they will charge you a higher interest rate.
Or secured versus unsecured.
Or secured versus unsecured. Is there an appreciation possibility for something that you are buying from that debt? So if you are buying a debt for probably education, as an education loan, it helps your career, or a home which can appreciate, it's good debt. Tenure, T is for tenure, and if it's a short-term debt, then it's good. If it's a long-term debt without an asset which is appreciating, or rather it's depreciating, it's a bad debt. So that's broadly, it's a framework, very simple framework, which tells you whether it's a good debt or a bad debt. Anything which doesn't fit in is a bad debt.
Okay, and we're talking at a time when everybody's focusing less on the debt aspect and more on the points, particularly when we're talking about credit cards. People are consolidating expenses, buying stuff for the family, and then paying off that kind of debt. And a lot of times they're not necessarily paying attention to the fact that they don't have that much money in the bank. So that tied with how much do you set aside every month? And you speak about, this is very simple. I follow this myself. I think it's a very, very powerful concept, which is your savings deducted at source, right? So if you say tax deducted at source, as a salaried individual, you don't ever see that money. But why is savings deducted at source such a powerful thing?
So I love that word, because a lot of young people come to us and they say, I don't have any money to save because dinner pe bhi jana hai or iPhone bhi kharidna hai, and of course we have all these wants. And my argument to them is, well, you still pay tax, right? Because the taxman deducts it at source. And what if someone could just deduct your savings and investment at source using something like an RD, an SIP, of course, that's our word. But if you automate something, just like the taxman has, including your savings, then it just goes out before you've had the opportunity to touch it. And that's the whole idea of automating your savings, so you don't have to think every month, this time how much do I save? Because that's a hard thing to do.
It is a hard thing to do. And of course, there is no one benchmark about how much you should save. Ultimately, there is an idea that you should go, if you can, 25, 30, 35%. If you can push it up over the course of the next several years, then that's a good thing. But you start with the bare minimum. Is there something that you prescribe?
So we have put a framework which is 10, 30, 50.
Okay.
Early in your career, because you have very short-term goals, you want to buy a car, you want to go for a holiday, don't stretch too much to save every penny that you earn. Start with 10% in your 20s when you're just starting off, because a lot of your other goals will be taken care of that. Once you get into your 30s, you probably have all your short-term goals covered up. Go for probably 30%. That's bare minimum. You can increase. And once you are in 40s, where probably your ability to earn is highest in your entire career lifespan, go for 50% and plus. So a lot of people, youngsters, are fed a thought that if you're earning, entire money should go into savings, investing. That's not true. That's not practical enough. So we have given this framework, which is 10, 30, 50.
I've also
very
found,
simplistic.
and I get asked this a lot, a lot of people below the age of 27, 28, and saying that, look, it sounds impossible to achieve this, but I say, hey, you will eventually meet somebody, and that person will in all likelihood also be earning, and you can use both of those incomes, and it multiplies whatever you're doing. So, but do you write about how you should share some of these responsibilities? You speak very passionately about how women should take charge of their own financial journeys. Do you write about that?
So we don't talk about the book from the lens of women, but we'll write a book that is accessible to men and women both. I mean, I was in Pune yesterday, and a mother was telling me, she's like, I have teenage children. My son has learned everything about personal finance, but my daughter is not interested, and have I failed as a mother? And it's like, maybe our examples just don't reach out to women. So with films, with food, with things that all of us understand, I don't think women need a pink small cap fund or a pink mid cap fund or a pink book. They just need it to be in the language they understand. My mother read the book cover to cover. And she's never read anything finance first. So I was actually quite happy, and she's giving my father advice which he doesn't like, but anyway. But we do talk about finance in the family at the end, how to integrate family into finance, because both of us believe, we have families, that it is a shared exercise. So how does a couple come together to do this? How do you think about legacy? How do you think about values imparted to your children? I think we talk about finance as a family unit.
Okay. Now, the mode of investment is important to understand, because I think a lot of my viewers are familiar with mutual funds, but beyond that, I'm not, how do I say, I don't have as much ego to say that this reaches out to the length and breadth of the country. I wish that it did. And so more people need to understand about mutual funds, but you've written about it as buying a car or choosing a car, right? What do you want to drive? Explain that concept to me.
So see, broadly today, a lot of people, a lot of new investors are coming in mutual fund. The expectation is that I want to make quick money. Also, the other myth around mutual fund is mutual funds are only equity oriented.
Yes.
Rather, the correct framework to buy a mutual fund is first understand what it is and what you want, right? Probably when you buy a car and you go through all the details, you see whether you want a driver, a chauffeur driven car, or maybe you want to go through Ola, or you want to have your own car. There are different needs of different people, right? Mutual funds, or rather selecting any financial product, is that way. So if you like driving your own car, you can go directly and invest in equities, but you need to spend a lot of time, especially in a city like Mumbai, you need to spend half an hour just to find a parking. So all these practicality, in investing also you need to see how much time you can give to research. Can you spend half a day researching a stock? If you can't, that's not your job. That's
and
a part-time job.
And the Mercedes reference was what? So something or Mercedes, I remember
it's
that one.
Maruti or Mercedes.
Maruti or a Mercedes.
So what is that reference? Is it the same reference?
So it's broadly, so Maruti is basically, or Maruti or rather Mercedes, I mean, it's not selecting to currently, I mean, what do you want to, or how do you select a mutual fund? That reference is more to do what do you want.
Sure.
Whether you want to save for a Maruti or a Mercedes, according to that, you plan it.
We also, I think, use it in the context